Had some reports that came out yesterday that we'll have to review right now. But I think the most fun thing about today is the announcement of the prediction markets on Tasty Trade. We're going to bring in Greg, who's been the lead guy internally for getting this up on the platform. You can see it on the Predict tab. If you're looking at like the positions and trade activity watch list, it's right below the watch list tab. And you can trade the Fed decision today if you really wanted to, or any other thing that's listed on there.
Yeah, man, it's pretty awesome, and we got a great day ahead. Of course, it's going to be a very busy day. We got earnings that happened just overnight. We got market moves going all over the place. I saw oil jump, but this is probably a great time to bring up. Exactly. We got morning news with Chris Vecchio coming up. We got morning movers with Gus at 8 a.m. Central Time at 8:15. We're going to have overnight moves with Liz. We got the market open, of course, at 8:30. And then we got the Cboe check-in with Errol at 8:45 Central Time. We got Inside the Trade with Dr. Jim for about 15 minutes or so there. Then we got trading charts with Tim Knight at 9:20 a.m. Central. And then the highlight of the morning possibly with Greg Embree coming in and talking about the prediction market launch. So it's going to be a great day. And that's just stuff we're talking about on here. Obviously, we got the Fed meeting coming up later today, and where it really is probably one of the times where you just really don't know what's going to happen at the Fed meeting. Again, they are not supposed to raise rates, but we're definitely in an environment where they possibly could raise rates, and we just really don't know what's going to happen.
Yeah, it's kind of wild. This is the first time in a long time since COVID, I would say, where a Fed announcement can just move these markets in a crazy way, especially if there's a surprise. Based on the prediction markets on the Tasty, you've got a 77% chance that we maintain their current rate and a 25% chance that we hike 25 basis points. So it is really interesting to see the divergence in probabilities. Normally, we'll see a 99% no hike, 1% hike, and you just know what's going to happen by this time. I mean, it's only a few hours away. We still have a 25% chance that there's a hike. It's crazy. Yeah,
I mean, and again, I think the interesting thing is that we're in an environment where we keep seeing oil move around. Again, oil was trading below 78. Well, I don't think it went below 78 yesterday, but it was trading like 78, 17 at one point in time. And oil has been the main driver of why interest rates have been rising once again. And literally yesterday, after the close, again, alerts just hit me. Oil all of a sudden is above 80, then it's above 82.5, and now you see exactly where it is right now. So it's right back up there, and that's the thing that's driving interest rates higher. That's the thing that's driving the potential chance of the Fed hiking. And while they might not hike today, it looms large that they might have to hike at some point in time here in the near future.
Yeah, and just when you thought it was all over, crude oil's up $5 today, 7% almost, just ripping higher with the rest of the market chopping around flat. But it's gonna be another crazy day. You've got Meta earnings after the close, Microsoft earnings after the close, two of the big Mag 7 stocks. You've got Robinhood after the close. You had some of these companies report yesterday. We can see Seagate is up 50 points after their report. Kind of wild to see. We had Enphase. These are three that I talked about on one of the math checks that I did, but Enphase up a little bit pre-market here. And then Bloom Energy was another one that's up almost 20 points.
Heck yeah. I love that that's up. That's one that I never really do this, but I sold a put in BE yesterday on the open. We had a crazy open yesterday morning. Chip stocks, the AI trade was down big, and that was one of them. And I was like, I'm selling the put. I sold the 120 put. So far, it's working out. Thank God.
Yeah.
I just felt like it was like crazy, and things were capitulating.
Yeah.
I guess I was right for the time being.
So sometimes you get them right.
Sometimes you get it right. You know what I mean? Like it's pretty wild. But the other thing I'm seeing this morning is there's a lot of measures being put in place for South Korea. Matter of fact, I think SK Hynix had earnings as well late yesterday. That was one of those. And this is one of the things about an ADR. We used to see this a lot with Baba, with Baidu. A lot of times with an ADR, they have earnings their time, right, in Asia. And so it's translates late over here after markets close. I think they had earnings, but I don't think they're moving a whole ton. But nevertheless, there's a lot of news out of South Korea. One of the things we've been talking about a lot is the retail participation in that market over there and the leverage ETFs. And we're just seeing a lot of measures they're trying to put in place. I'm seeing it all over the place on Twitter right now. Like right now, I'm seeing South Korea will hold an emergency meeting Wednesday to discuss the market situation after the stocks have been getting wiped out a lot more recently. And that's actually been bleeding over here. Not too bad though, honestly, like thank God. But this has been the big thing that we've been seeing with a lot of these tech stocks and a lot of these chip-related stocks, which is a big industry over there in South Korea.
Yeah. Kind of a scary scenario over there for sure. But wild to see the market really not reacting too much to some of these earnings reports, but Enphase, Bloom, STX all up just a little bit, with Enphase just slightly higher. We got Chris Vecchio on the line. I'd love to hear what you have to say this morning. Chris, how you doing?
I just washed some of my glasses cleaners, those little microfiber cloths, and I can finally see out of my glasses for the first time in a few days. It's pretty nice. The small things in life, Michael. The small things.
I would say that's a pretty big thing. If you ask anyone that I know, I am a stickler for clean glasses. If I see any smudge, I actually have to go, I go in the sink and I wash my glasses with soap and water. First of all, I think that's the only way to actually clean glasses. But
soap and water.
Soap and water. And it's the clarity is insane. But what's crazy to me,
I understand what you guys are talking about. I used to wear glasses at one point in time.
Did you?
I did. I had LASIK.
I do the snorkel method. I just spit into the glasses and rub it.
Sometimes
doesn't usually get clean though.
That's why you can't see out of them. But it's crazy. There's so many people that wear sunglasses that are completely just covered in grime. It's like, how are you even wearing these?
Well, they want to block the sun, Mike. More dirt, less sun.
Before as we put a bow on this, do you guys ever have dreams where like your vision is so cloudy and you can't really see?
No.
Not really.
No?
No.
Oh, it's the biggest fear ever, dude. Like for sure. Like it's just like I can't see anything, but I'm trying to figure out. Oh my god, yeah, I've definitely had those. Yeah.
Maybe it's
remember that old Dane Cook bit? Were there crabs in your dream, Jermal? Were they wearing loafers? Okay, sorry.
You always got to go deep, don't you? I go deep, and you just go deeper. Don't you? That's what I love about you. What's going on this morning, man?
We'll have to figure out what that means. We'll have to type that dream into ChatGPT.
No, please don't. We can't let it learn too much.
No, don't let it learn that. Guys, there was a lot of volume overnight. 252,000 SPOOs traded, which is pretty decent coming into a Fed day today. It feels like we're actually about an average volume day so far, despite the fact that there tends to be, a tendency for the market to kind of glide around as it waits for a big earnings reports or a Fed meeting itself. This Fed meeting is going to be really interesting, not because the market's expecting nothing to change, but because this is a totally different Fed from Bernanke or Yellen or more recently Powell, where they've been pretty open about what they want to do and how they intend on accomplishing that. So forward guidance may be completely disappearing. We're no longer going to hear from Fed officials like many felt this way or a few felt this way or, we could raise rates later this year contingent upon XYZ. That's all going to go by the wayside. So the market's response mechanism after today's Fed meeting could change. And that to me makes this a very volatile meeting, particularly with that backdrop of the hyperscalers coming after hours. Whatever happens between now and 2 p.m. Eastern, I don't think really matters at all, because once that Fed announcement comes out and Warsh's press conference arrives, the whole game changes.
Yeah. This is one of those days where I might hold off on like a 0-day iron condor, because you're probably not going to get much premium out of this thing at all until that it's like literally a binary event that's baked into the middle of the day. So if you're trading the 0-day stuff, maybe lean a little directional instead of neutral, unless you want to hold past the Fed announcement. But at that point, you might as well put it on for 1250 and see where the market's at, and then play it as like a binary event, because still 50 points implied through today, pretty big number, all things considered. And this will probably hold as we get closer to 1 o'clock.
Yeah, I mean, I was taking a look this morning, like, maybe I could do a little short iron condor here and ride it out for most of the day until the Fed meeting. It's like, what will the market probably pay me for that? Not much. Looking at the expected move goes beyond the 1 standard deviation move right now if you're looking at SPX 0 DTE. So if that just kind of highlights the volatility that we're facing down the pipeline here. The hyperscalers, though, are going to be the most interesting part of this, especially after the SK Hynix earnings. They got nuked overnight. Did you see that?
Did not, but expected as much. Well, and again,
it's-
there's all this news coming out of there, right? I mean, all this news about the volatility in the ETFs, and now there's people like the government seems to be stepping in, right? I mean, isn't that what I'm seeing?
Yes, but the SK Hynix model, I've seen a lot of cheeky folks out there, including Zero Hedge, saying things like, no wonder they wanted to get their IPO done and their ADR conversion done so quickly. They knew they had this crummy Q2 earnings report coming down the pipeline, so they wanted to offload to retail. Okay, that's certainly a perspective here. If you've been following these companies, and I've taken a little bit of time to try to learn more about the industry over the past year and a half as we've been discussing it so much, SK Hynix in particular has made a point of signaling to the market that they're changing the way that they go about doing their business. They're focusing less on DRAM and more on HBM, high bandwidth memory, moving forward. And their new production, their new line of HBM4 comes out starting in Q3 this year. So all of the things that people are excited about for SK Hynix, they weren't going to be in the Q2 report because they're shifting their production line. And their company margins are intact. So, I mean, it's the analysts that I've been reading overnight with respect to this, they're like, oh, yeah, this was nothing. Expected. Don't worry about it. Great buying opportunity.
Naturally.
So, naturally. But no, I think it was very fascinating. Like the notes ahead of time, particularly from Korean and Taiwanese analysts, were all expecting SK Hynix to have a bad quarter, as if like it was going to be masked because the real good stuff comes in Q3. So, we'll see. We're still flushing the crap out of the system, all this leverage.
Yeah, that's it. The leverage. that's it. That's always ends up being the problem, right? Like that always ends
the
up being the problem.
That greedy leverage. It's like the Japanese yen unwind.
Yeah.
It could have been just like nothing burger, but so much leverage.
Mm-hmm. It got
get
so
that,
depressed.
Just that 0.25% more.
Right.
You know?
Yeah. That's it.
Crude oil's up $5. What are you thinking here, Chris?
I have some short put spreads that are inside 21 DTE right now, so I'm not mad at this bounce. I may use the opportunity to peel off one of the two now at this point in time, just because it's with today's bounce, it's back to like 85% max profit, and I don't need to deal with that gamma risk, right? As we head down the line, we got another good report, a ceasefire deal, yada, 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 then oil's going to tank again. Why is it bouncing today? Trump's been telling us that Iran really, really wants a deal. Iran keeps saying, we haven't talked with the U.S. about a deal in 15 days. Oman is insisting they're talking with Iran. Iran says they're not talking with Oman. So are we making any progress? Who cares what the media says and the propaganda looks like? At the end of the day, what's moving through the Strait of Hormuz? Maybe their AIS trackers are off, but we've been looking at basically zero ships going through for the past 2 weeks. And that is the problem that we're facing here right now. So chalk is cheap. Besant can push his thumb down on oil futures all he wants, and as long as the physical supply remains constrained, then the paper market eventually has to realize that.
Yeah, crazy volatility there, but this is absolutely a trader's market if I've ever seen one.
I completely agree. I mean, you talk about SK Hynix getting hit overnight. EWI is down. I mean, yesterday's open was crazy. I'm hoping today's open is just as nuts, and I'm hoping we get again some moves. Typically, we see a little bit of quiet time right before we actually get to the Fed. I hope it still contains some movement or some rotation. And let's just unpack the last couple of days that we've seen. Right, we've seen this sell-off in chips, we've seen the sell-off in memory, and we've seen this bid behind consumer staples, behind software. I talked about it yesterday. I eventually got filled on. I've been long software for the most part, and I did a short delta play on CRM because of the move 2 days in a row. When you look at CRM, you look at some of these names again, and into this, I'm like, I'm gonna short it. I hope I'm wrong again because I'm still long Microsoft, and I rearranged some of those positions yesterday to go out further to take that bet out further and longer in time, but. This has been such a fascinating trade to me, this juxtaposition between chips and between software and consumer staples. And you wonder if we're going to get another day of this, or is it going to change into the Fed? It's just been such an interesting unwind to some degree. I wonder how long it continues.
Yeah. I mean, if we just swing back to that oil bounce real quick here. There is probably a traded here, which is worth noting. The lows that we have before the war are sitting comfortably below 67. And if you were to go out to the 50 days to expiration right now, what sits at just the tail end of the expected move? 67. So 66, 67, 94, 95 on a short iron condor right now is going to give you about a 54, 55% probability of profit, paying 350, risking 650, but it's 35 cents a credit on that dollar wide strike. So it kind of meets the moment. That particular cycle, raw volatility is still 62.2%. So even though IVR looks a little bit lower today than it did yesterday, if you're looking on the platform, it's only at 27 IVR. I think that's a little bit of a misnomer. There's an ample opportunity here. So I have that order working right now. And then the other one that I want to talk about for the Fed here before we go on to the individual stocks, and that just got filled for me right away, which is quite nice. 2 days to expiration. I have no idea what the Fed's going to do today. I don't think many of us do. It looks like they're going to keep rates on hold. But how does Warsh handle it? Maybe he signals that September's a live meeting. September, after all, we're looking at like a 90% plus chance of a hike, according to the CME FedWatch tool. So a lot of the market already thinks it's there. If he were to hike today, if they were to push back on September, if they were to do something that leaves the 30% of market participants going to today's meeting feeling like they are flat-footed and need to dramatically change their opinion, we could get big movement in the bond market here. This isn't a trade that I've done successfully many times in the past, but when it's worked, it's usually worked very well. I'm thinking something like a reverse iron fly here in treasuries for today's session. 108.5, 109.5, 110.5, somewhere in that area, guys. And the idea there being that who cares which way this thing goes, but today's Fed meeting is going to provoke a directional movement, so we just needed to get away from the current price. And volatility in the treasury market is so dang low that it's pretty cheap to put on such an idea.
Mm-hmm. It's true.
I like it. Yeah, just playing for the realized volatility to come to fruition. Yeah,
the bet is that today's Fed meeting is going to produce fireworks.
Yeah,
basically.
Feels like it has to, right? I can't see a world where it doesn't.
Well, that's the interesting part. I mean, I can't see that world neither, but at the same time, this is.
But then, if all of us think this, we already all know
and it's
this.
Also a guy who last meeting really didn't say a whole lot, right?
No.
What was his phrase? What was his catchphrase?
I don't know. Did he even speak at the last meeting?
I know. No, I remember he had. What did he have? Oh, we have a task force for that. We have a task force for that. We have a task force.
McKinsey. It's like McKinsey hiring Boston Consulting Group to figure something out. It's outrageous.
Right.
Yeah, it is. It's going to be wild. 1:00 Central, 1:30 press conference, traditional time frame there. But yeah, I mean, it's just still wild to me to see that we still have this 25% probability for a hike today. And even if they, like to Chris's point, even if they maintain, you still have significant probabilities that we get a hike later on. But
I just don't remember recent memory where we've gone into the day of a meeting where the markets had a quarter or a third of market participants offsides on what the Fed's going to do. Yeah. But that, again, I think that just, it was very clear from Yellen to Bernanke, or Bernanke to Yellen, and Yellen to Powell, that there was a continuity of an evolving communication style at the Fed. Warsh has ended that entirely. And so this idea that we're going to get clear guidance from these people moving forward is I just don't think that's appropriate to expect. But more to that point, then, it does mean you have to have a wider berth and a greater range of possibilities at these meetings moving forward. So whereas Powell's Fed would pretty clearly line up with all these speakers coming out ahead of time before the blackout window to tell us what they intended on doing, and then you get a Nick Timrose article in the Wall Street Journal about what the Fed may be thinking. We're not seeing that this time around.
Are they not boys? Him and Nick Timrose? Was that the thing? Was Nick Timrose boys? He had an inside track. What was the deal? You're right.
You know, Dario Perkins, who's a managing director over at TS Lombard, put in his note a few days ago that this whole situation with what's going with Warsh reminded him of the sacking of a British footballer coach a few years ago. And the point that he brought up was this guy was in the media talking smack about the players, talking smack about the coaches, talking smack about the executives. Then he gets hired to be the coach, and the team immediately loses 4 games in a row because morale is so low and like he didn't have any of their respect. And he drew the corollary. That's kind of where Kevin Warsh sits right now. Where he's been talking smack about the Fed, about all these officials that have been on the board. Now they're his colleagues. He's been talking about the media. Now he's the people who has to communicate with him. And so why is anyone going to go on a limb to make his job any easier after he's been a jerk to them all these years? So it's an interesting psychology because these are people after all, right? They have feelings. We like to think of them as automatons who are just like, oh, those are robotic, ideologues who are working for the Federal Reserve and they're robots, but not really. They're still people. And so they're going to, they may have personal animosity towards Chair Warsh, which is great. More reason for underlying volatility. And this is total speculation, but I don't know. It's the interesting gameplay here. No one I know in the macro world is like, today's going to be a calm meeting. And yet if everyone thinks this, then why isn't more volatility priced in?
Well, I would say I don't think it's not going to be a calm meeting. I think it's going to be a wild market. I think, the meeting is just another thing on top of it, right? Like it's the cherry on top. But again, we got all these crazy earnings coming out. We got, SoFi just came out with earnings this morning. We got a whole bunch of other things. Humana and PG have earnings. And then obviously we got the big ones after the close. I think that's the crazy environment about it. I just think the Fed adds onto it. Again, I would have thought it would have been crazier maybe before because of the way the Powell Fed was run. But, this dude didn't even say a whole lot last meeting and we still kind of moved. And again, it's just the environment, right? Like we're in an environment, let's be honest, where we don't expect a rate hike, but we all know we probably need a rate hike. That's the crazy part about the environment.
That's really well said. Yeah.
Visa's down after their earnings. I haven't seen the report itself, but I would have expected to see the opposite since everyone's, cranking up that credit card debt.
Mm-hmm.
Well, maybe that's part of the problem here. Visa actually explicitly pointed out that a lot of their, improved earnings had come through vis-a-vis the World Cup, which does seem like a one-off. So, but either way, though, I think this is Visa being one of these companies here that is not an AI hardware name. We put this on yesterday morning, right? We were taking a look at Visa, the 50, 350, 52.5, then the 77.5, 380. Short Iron Condor, it stayed within the expected move. So these non-AI hardware names continue to express or demonstrate this. They may miss, they may beat, but they're not blowing out one way or the other. And so Visa very much fits that box. I think it's going to open closer to 359.5.
Yeah.
So be able to close this out and move on to the next trade.
Mm-hmm.
Love it. Yeah, this was it's always wild when you have a really low implied volatility and then it stays within the move. Because this was like a 3% move, which is pretty low, very low for any stock. Normally you'll see that 5 to 10% notional range, but Enphase, Bloom Energy, STX, those are all like 15, 20% of the stock price. Craziness.
What's STX doing?
And even Enphase is inside up.
Nice bounce for STX, up like 6%.
Well,
yeah. But that's inside the expected move too.
Considering the move we've seen in those names recently. I mean.
And Bloom Energy, same story. Only up 15 points, 40-point implied move pre-market. This was
I think that's fair, Jermal. It was down like 22% from Friday's open until yesterday's close.
Yeah.
It's a cool haircut.
Just a little bit.
Yeah, and so that's not normal, which is worth a reminder here. High volatility, use defined risk if you're trading any of these names. Mm-hmm. You want to be sure to put spread when the market decides that, South Korean traders are getting blown up again and decides to take another elevator down.
Mm-hmm.
Craziness. Well, Chris, appreciate your time. And yeah, it's going to be a crazy day. We got Meta, Microsoft after the close. We got the Fed announcement. I'm sure that will be the focal point of the rest of the day, but we'll see you a little bit later.
See you later.
Peace. Yeah, E-minis down 2, NASDAQ down 8. We are seeing a choppy, flat market so far. But like we alluded to, we have some pre-market movers with some earnings reports, STX, BE, Enphase, all up slightly, but all up within their expected moves. But these three had massive expected moves. And from my perspective, it's just hard to have a 2x, 3x expected move when you already have a 20% implied volatility of the stock price for your expectation.
I know, right? I mean, it's not really about earnings when it comes to these names, really. You just hope earnings validates the moves that we've been seeing more recently. So it's really just about what they've been doing more recently, what's going on with memory, what's going on with Korea to some degree. And in this environment, I don't think it was ever really about earnings when it comes to that.
Yeah. But all three of them going to open up a little bit. Enphase inside up. I had a put ratio that I put on yesterday for the trade of the day. So that's something that we're going to have on today as well. So starting at 11:30, we'll continue that trend of 15-minute segments where each trader goes through the trade of the day. So don't miss that starting at 11:30. But end phase, I had this put ratio on, long the 35, short the 33, put that on for like a 30-cent credit. And I stated in the segment that if we see a rally, I'll just go and buy the 31. I'm not going to close this. I'll just buy the 31 for 10 cents or whatever this opens at, keep that 20-cent credit, and then have this $200 downside free butterfly on. Because there's no reason to close it, in my opinion, when you can just buy the put, keep that net credit, free up the buying power, and give yourself a shot to the downside.
I mean, let's just analyze that for a second. The 2-day put, 33 strike. I mean, I know you guys, some people out there don't understand options. With 2 days to go, somebody's thinking that this thing is going to drop down to, say, let's just call it that's $1. Somebody thinking it's going to drop down below 32. Like, that's what this is pricing. I mean, that's volatility right there.
Yeah. I mean, yeah, collecting $1 for a 2-day on a $30 stock, it's crazy.
Do that. Do
Absolutely
that all day.
Yeah.
I'll do that all day.
Yeah. But yeah, either way, I was going to, if end phase dropped, I was just going to sell out of this vertical spread, take the shares, or turn this into a straddle with selling a call here, rolling it out to August or September. But I'm just going to be able to just free this up. This will probably open at 10 cents, 5 cents, and I'll just buy that.
That's a great trade, dude. That's why when you were talking about it, yes, I was like, save that. You got to do that one for trade of the day.
I did. I sure did. But yeah, BE and end phase and STX all moving around, but again, inside the implied move with such a huge implied volatility. STX up to 790. This is another crazy one. Like, look at these. These are $5,000 option prices for 2 days, but it's an $800 stock.
Yeah, something else.
Nutty. Microsoft, after the close today, 27-point implied move on a $400 stock. This is going to be a really interesting one. I'm going to lean bullish here. Like, I think I'm going to add another position on. I already have the long-term call calendar spread at 500, long January, short September. And then I have this near-term out-of-the-money call diagonal, the 450 long in August and the short 460 in the 2-day. Still trading for like 70 cents. So I'm just going to leave that on because that's going to be a free 70 cents regardless of what happens. I don't imagine Microsoft going up to 460, but if it does, it's going to be an absolute home run for both of these trades. But yeah, I feel like the rotation could continue here. And at a certain point, Microsoft's just going to continue. Like, they've beat earnings 10 times in a row. And I think eventually the market's going to be like, you know what, let's just get back into this thing. And you could see a big move to the upside.
I think you very well could. Yeah, this is, I pushed some of my, I pushed my bullishness out to September. And again, at this point, it's not even about earnings. It's just about Microsoft and where the stock is trading and what's going on with software. So got some Super Bowls out in September. We'll see how it goes, man.
Yeah. Well, we are going to take a quick break here, but join us on the YouTube channel if you haven't already. We are streaming live there. You can throw in your trade ideas, questions along the right-hand side chat. Here's another look at the schedule today. We've got Gus coming in the house in a couple minutes here with some morning movers. So we're going to take a quick break, and we'll see you on the other side of it. You're watching Tasty Live. Haven't really moved much. That'll probably be the story of the morning as we await the Fed announcement at 1 o'clock with a conference call or press conference at 1:30. We also have Microsoft, Meta after the close, Robinhood after the close. So much going on in these markets. And we've got Jermal and Gus in the house to talk a little bit about the morning movers. What you got your eye on today, Gus?
Yeah, we got a few exciting things going on today. First story that I'll kick things off with involves Apple. Apple, once again, the most valuable company in the world. They have passed a $5 trillion market cap for the first time. They have rallied straight past NVIDIA. We continue to see rotation out of the AI trade. This has kind of been the major question mark all summer is what's happening. And it seems that we're turning back to some staple technology in the market here with Apple now eclipsing NVIDIA. And, just like that, it's 2022 again. Everything's back the way it should be. So just a big milestone for Apple. They had tested this level a few times and just could never quite get through the ceiling. But then this most recent time, we've just ripped straight through. 4.7, 4.8, 4.9, and then now 5, all for the first time in a row. So definitely something to keep an eye on. I'm not sure how much I anticipate this will impact their market performance. These valuation milestones don't tend to be the same type of psychological resistance as a major share price milestone. So I'm not sure that we'll necessarily see rejection or we can treat this as any sort of significant level, but it is important to note just the general sentiment of the market continuing to shift away from some of these AI companies and put money into things people feel that they can trust that are not in the AI space as much. Apple obviously involved. Apple Intelligence exists. It summarizes my text messages for me. That's good for them. But I wouldn't say Apple is one of the big players in the AI space right now, and clearly they don't need to be.
Yeah, Apple. Those text summaries are really funny sometimes when you have your friends really just popping off, and it's just tries to be PC or PG, and the texts are absolutely not. It's hilarious. But yeah, Apple earnings on tomorrow after the close. So Apple and Amazon will report tomorrow. Only a 12-point implied move on this $340 stock price. So really low implied volatility, but I don't know I don't think that's wrong, really, but we'll see.
I love this segment, Gus, because you bring the heat and you also bring trade ideas. You reminded me of what I want to do in here. Today, I wasn't sure if I was going to do a trade of the day. I thought maybe doing risk management ahead of the Fed meeting, which, we all do anyway. But you just reminded me, and I'm going to do a trade in here. This is going to be my trade of the day.
Okay.
Yeah.
How about it? Happy to hear it. We can just keep things rolling here. Second story of the day, Seagate had a really good earnings report. Whole memory space is loving that. Seagate, they are set to open up about 6%. They posted EPS of $7.30 on $5.80 expectations, so a big beat there. Revenue coming in at $4.1 billion versus $3.75 billion estimated. So beat on all fronts. Memory space was obviously getting hit pretty hard coming off those highs. We saw SanDisk eclipse 2,000, well over 2,000, and collapse all the way down to 1,100 yesterday. But there's a sector-wide bounce happening in the memory space on account of this. Western Digital actually tracking the closest with Seagate on this earnings report, set to open up about 4% themselves.
This is fascinating, man. I got a couple of years on you guys, so it's just funny to watch a company. I don't know how much of a pivot it is to go from hard drives to memory, but still, just the complete change. I remember seeing Seagate drives. Hell, I remember putting some in some computers every now and again. And now, you saw the pivot and you saw the change in stock. It's so crazy.
Yeah, this was trading for $100, actually less than $100. Got as low as 67 just last year, 1 year ago. Mm-hmm. And now we're dealing with a behemoth of a stock price. And you saw their quaint little office space. I would work there. Right. It's one of those things where you see the valuation of the company and then you type it in Google and this is what you get.
Yes.
But it looks nice. It looks nice.
It does. Yeah, it looks nice. I bet they got a nice coffee machine in there. That's the kind of vibes that I'm getting from this place.
Don't you? And to your point, don't you imagine some huge campus?
Yeah,
yeah. And again, this is a company that's been around a long time, dude. Seagate's been around a long time.
Oh yeah, it's this is nice, but what, you could fit 120 people in here? It's not a gigantic space. But yeah, good for Seagate and Western Digital. Kind of the two. I feel like not often discussed, members of this whole memory boom that we've been seeing. It's always SanDisk this, Micron that, and these other two, while they've been running at the exact same proportions, are not getting the same attention. So I did chuckle when I saw that Western Digital was the one catching the biggest sympathy move up along with Seagate today, because those are kind of grouped in my brain as the forgotten memory companies. So happy to see them sticking together.
Just so I want to explain again, I know about how old it is and how long it's been around. They developed the first 5 1/4-inch hard drive disk. yeah, 5 megabyte in 1980.
We landed on the moon with 4 megabytes of RAM.
That's good stat.
Little floppy disk. You got to watch the movie Hackers. I gotta.
Oh man, great.
You gotta watch the movie. He literally rides on a skateboard with a little floppy disk in his hand. And he makes a pass. I'm just like, this is the best movie I've ever seen.
It's so dated.
That's the kind of stuff that
movie.
you just could not get away with anymore.
I don't think I've ever actually held a floppy disk.
Really?
I'm well aware of what they are. I was actually just talking about this with Chris on Overtime yesterday. If for no other reason than it's the save icon on everything still. But no, I don't think I've ever actually physically held
You know how usually older people are like, oh man, you didn't miss anything. You didn't miss anything on that.
Oh my goodness. All right, last story for today ties. It's maybe a little bit of a gross one. Oh, there's a.
That's
there
it.
We go.
There you
There's
go.
the
First hard drive.
How about
there you
that?
Go. Right.
Production quick with it, man.
Yeah. And 5 megabytes.
High tech, baby.
High tech. Final story for today is a little bit of a gross one tied to this Taco Bell diarrhea situation. Maybe some of you are privy to already. We have a cyclosporiasis outbreak in America right now, and it has been tied to iceberg lettuce from Taco Bell as the origin. Yum Brands, who owns Taco Bell, obviously, is set to report their earnings before the bell tomorrow. And regardless of what numbers they actually have to report, things are probably going to be overshadowed by the fact that Taco Bell was making people poop themselves more often than usual. So it's going to be interesting to see how that impacts sales. Taco Bell had to issue a nationwide recall on all of their leafy greens, get everything turned back around. So that tangibly hurts the bottom line. Obviously, this whole situation is not great for brand reputation. We've seen, yes, a serious slide in Yum Brands as a result. And it's just going to be interesting to see how this earnings call pans out, given the fact that this slide has already happened. Have we properly priced all of this in, and now the numbers are all that matter? There's obviously going to be a lot of question marks surrounding the impact that this has had on sales. So yeah, probably going to be overshadowed by this cyclosporiasis situation, but we'll see how things actually pan out, given that we may have already priced this in.
I know exactly what they're going to say. They're going to say, listen, we had a really shitty quarter, but we will recover from this.
That's a good call out. I mean, this is one you could potentially trade to, especially if you see some big move to the downside. I'm old enough to remember Chipotle some years back when they had, again, before split, there was something going on there and the stock tanked big time back when it was trading like in the 1,000 level or whatever. And something was going on there similar to this type of situation, and stock tanked for a little bit. And then eventually it got caught a bounce and it became that crazy moving stock that we remember. Obviously, it's not the same now, but I remember that. So these things happen in these companies.
Yeah, I feel it's sort of inevitable if you're a food company of this size, for this long. I mean, Taco Bell's existed, 40, 50 years now. It's like, you're gonna wind up catching a bad batch of lettuce sometime.
Yeah.
Poisoning the nation.
I mean, the great thing about Yum Brands is they have more than one company. It's not just Taco Bell, but
yes,
something to keep in mind.
The easy thing about Yum Brands is that you can always remember which companies are theirs because they're often double locations. Like, what have you seen a Taco Bell combined with is another Yum brand? It all works.
The Dunkin' Baskin combo?
Has there? That's a good question. Wasn't that the Taco Bell KFC?
Yeah,
combo,
they do Taco Bell KFC. I think A&W is also under their domain. They'll do Taco Bell A&W's. Pizza Hut, maybe. Have I seen a Taco Bell Pizza Hut? Does my mind deceive me?
I'm not sure, but that seems like it should be a thing.
Yeah, it should. Yeah,
why not?
I agree.
Not A&W though. I don't like root beer.
What?
I never liked root beer.
Not at all.
Really? We'll have to unpack that later. I mean, root beer float?
I don't like root beer.
I like root beer. Yeah, they got the barrel at A&W.
I mean, maybe it's worth a try again. I mean, this is 8-year-old Jermal talking. You know how it goes, right?
I was accidentally served root beer recently, and I took that in stride. It was fine. There we go. We got to combine Taco Bell KFC. Yeah.
That combination has never really made that much sense to me, honestly. But Taco Bell Pizza Hut definitely does.
That's interesting. I don't know. This feels like it makes
really,
sense to me.
why?
I would try to convince them to combine these for me. I'd say, can I get like a chicken strip burrito with some mac and cheese in
Well,
there?
when you think
That's what I'm
KFC,
saying.
you think fried chicken, right? Like it's not like grilled chicken that they put in Taco Bell stuff. I mean, it's just right.
It is an interesting pairing.
I think Taco Bell has chicken nuggets right now. I think these people are just trying anything. Yeah, there we go. There's an A&W Taco Bell.
Oh god.
Now this could actually work because A&W has they have the hot dogs with the chili on top. So you could take the chili, dump it onto your taco, and you got a little chili
But
flavor.
what enterprise property do they have other than root beer? It's really only root beer, right? Like, does A&W own something other? I mean, Taco Bell has burritos, obviously, Mexican related food. A&W, what is A&W? What does A&W even stand for?
I'm not sure what it
That's a good
stands for.
trivia.
They serve like, I don't know, American staples in there. Yeah, they got tacos and chili cheese dogs and burgers and fries and
All
that
things that anybody else can do.
Yes, absolutely.
Interesting.
They're
an
getting them from
entity.
Cisco.
How the hell did they do that?
We'll have to figure it out. We'll figure it out. But Gus, appreciate you. Yum Brand seeing a big slide. Earnings coming up tomorrow before the open. 8-point implied move on $140 stock. So yeah, the market is saying expect some volatility, especially when you look at August versus September. Don't have weekly options in this one, but you can still construct a trade if you have a directional assumption with like a calendar spread or diagonal spread, especially with the similar price point and similar implied moves for August and September. But yeah, we'll see what happens with Microsoft Meta, Apple, and Amazon tomorrow after the close. That will be a wild couple of days here. But we're going to take a quick break. Gus, appreciate your time. We'll see you a little bit later today. And we'll see you on the other side of this break. You're watching Tasty Live.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Investopedia says we're the best for options trading. Stockbrokers.com says we're #1, and Broker Chooser raves about us too. So what else can we say other than boom? Trade like a trader. Tasty Trade.
Hello, everyone. Welcome back to the show. Join us on the YouTube channel if you haven't already. The chat is popping off. Trying to guess what A&W stands for. What do we have? Albert and Walter?
I know the kids. Well, we were told Alan and Wright, and that's actually what it really is. But yeah, it's funny how people are trying to guess.
Absolutely. We got Liz Dierke on the line. Liz, how you doing this morning? Are you trading?
I think the guesses were more fun than the actual.
Yeah. The actual was a letdown for sure.
It really was. Yeah.
We need some more spice.
Jermal, I don't like root beer either. I don't like root beer. And I find it jarring when you take a drink of something expecting it to be Coke and it's root beer.
Oh, don't even get me started.
Maybe that's where it started. You thought it was going to be Coke, and then you take a drink and you're like, ooh, this is not what I thought it was going to be.
Yes.
I just don't know what I thought it was. I just remember. So they used to have these stores back in the day, especially in Florida, and they were like outside, and they was like one of those like old school, almost like a diner drive-in, whatever. And I just remember going to that. Me and my brother and my dad would go. And they were just loving it. Just like, oh, root beer, it's so good. You know what I mean? And I'm like, this is disgusting. Like, am I the only one here who like doesn't like that? You know, like you're in those situations. Am I wrong? Is something wrong with me? No.
Yeah.
You're fine, Jermal. You're fine.
Thanks, Liz.
Yeah, I guess it is a kind of a.
I think first we got a photo of the original founders. Don't show it up yet. I'm pretty sure one of them has a mustache, right? None of them? No mustache? I just assumed there was some type of mustache.
Those look like two happy fellows, though. Look at them.
Oh, God. I just imagine, you know, when I see this, the first thing I think of, how tough is it for the guy on the right to walk around with the name Frank Wright? And they're like, oh, you're Frank Lloyd Wright? No, I'm not. What is root beer?
What is root beer?
Exactly.
That's the next trivia question. How do they make it? We're going down a deep rabbit hole today.
Deep rabbit hole.
Okay,
Liz,
what do you guys think about these markets? What do you think about oil? You know what? Yesterday we were up as much or down as much as we're up. So
I think
moved it right along.
I really haven't. Maybe because we've just been so busy about pre-Fed and earnings that I haven't seen as many news as to what I saw. When oil bounced up, I got all these alerts. I'm getting hit, and I'm looking around for news, and I really hadn't seen any news. So It's actually kind of surprising. I'm still in my short delta plays. Whatever. I'm playing downside. We'll see what happens.
Well, now if you liked it downside yesterday, you can add to it today, Jermal. Because
No, I mean, I did. I mean, I put them on. When did I put that on? A couple of days. I put it on last Friday, Thursday, maybe. So I was enjoying the down move. So, you know, whatever. Yeah, I don't know what to think about that because, again, I haven't really seen the corresponding news.
I kind of agree with you. It's every day, right, with the oil news. So it's now there's a bigger kid in the lot today, which is the best.
Last Friday.
Yeah, it's been a whippy day with some of these specific markets like crude oil and a lot of these other energy products too. You've got BZ up 5%, RB up.
Oh, I'm tripping. We did see the news. I forgot, and I just see it again. Yeah, Trump to Fox will be hitting Iran hard, and then he also yesterday. I think there was some kind of strike. Right, there was some kind of strike yesterday evening around 4. I think.
Yeah, and all of their missiles were. Yeah, all the missiles that they sent to us were hit in the air. Right. So that was like the news story.
That was the news. I forgot.
Do with that what you will, but that's where we're at.
Exactly. Do with that what you will.
Yeah, and Chris brought up the fact that there's really nothing moving through the Strait of Hormuz right now. So these will continue to stay propped up, and I think really the way to see what the timeline is, or at least a projected timeline, is just looking at the curve of the next couple of months here. All the way through the end of the year, you've got still elevated prices on these contracts.
Elevated prices. I mean, you look all the way out to, I'm just looking at the last one because my eyes it's trickier for me with the little numbers. But you look all the way to May 2027 and it's $71 a barrel. Is that what we're pricing out here?
Yeah.
That's still pretty high.
Yeah.
Mm-hmm. Liz, I'm curious to get your thoughts on like the idea of prediction markets, because I watched, we got a great combo coming up later today with Greg Embree in our company. And, it's becoming such a thing. I think you'd love this documentary that's on Netflix. I watched it last night. It's only like 30 minutes, but by the way, it's really interesting because Netflix is doing like 30 minutes shorter docs now. It's clear that they're aware that maybe some of their stuff is too long and they're trying to get into short stuff. But we have kids in college and they actually profiled a lot of college kids who all of a sudden they get to college, they get super interested in betting and gambling and all these different things. Like, I mean, you kind of noticed that, I'm sure. And so I was curious, like, has your like kids gotten into it a little bit, or what's the deal?
Jermal, yes. I mean, 100%. So once again, like I said, 2 kids in college, and I've got the boy more than the girl into the betting and the prediction markets. But all of his fraternity brothers, every single one of them they sports gamble and the prediction markets, the poly markets. They talk about it all the time. So it is pretty interesting. And I love the aspect of it because in my opinion, I think it brings people to look at something that we do for a living. I think we were pre-prediction markets, right? We are forward looking. We were just looking at oil. And I said, okay, March 2027, what do I think it's going to be? That's a prediction market, right? In its own right. So what I love about any type of, and I'm probably a bad parent this way because I do encourage that type of, I'm sure I am. I do encourage them looking at it because I think any type of engagement will then bring them over to even the options trading market, right? Because it's a smarter form of a prediction market without saying anything else. So what I found fascinating is they're all into the poly markets. They all are into the sports betting. And I think, well, Jermal, let me kind of throw this back to you because I have a theory too.
Mm-hmm.
Do you think that sports betting, traditional, your DraftKings is going to go by the wayside because of the poly market?
No, I don't think so. I think there's room for all of it to exist to some degree. I think they're going to find ways to make their industry, for lack of a better word, more understandable. So, I mean, the idea of like minus 240 and like plus 600, like, dude, I traded for 15 years. I didn't really sports gamble because I didn't really understand that part of it. And then all of a sudden in like around 2021, I decided to get into it. I used the NCAA tournament, which is one of the greatest betting situations, by the way. And that was the first year I kind of got into it. And I had to kind of figure it out. And once I figured it out, it was fine. But for the most part, like nobody understands what minus 240 means, what minus, 1020 or whatever it may be. Like, again, it's just like the jargon, which is the same thing we have as options traders. We're always trying to explain people. The barrier to entry is the
verbiage.
Verbiage. Thank you. I mean, just that's the thing. So I think all of them have their own thing, but yeah, minus 240, like that doesn't mean anything to anybody. I mean, so you just kind of make that more understandable.
Well, what was crazy too, Jermal, is I tried to explain to my son. So he is trading it. He's trading 0DTE, SPX. Both of my kids are. And so I explained to him, if you open, and once again, he doesn't understand it. I need to be very crystal clear about that. He does not understand what he's doing, but he does go in there and do it. But when I showed him, I was like, you want SPX to stay above this and you will make X. And he's like, oh, it's exactly like you said. He's like, oh, so it's, and he named something in betting. And I was like, yeah, exactly. So if you sold, I'm making this up, Jermal. Can you go to the puts, go all the way down? So what he does every day at 9 o'clock, he opens it up and he'll sell just at the expected move. So he would sell, if it were 9 o'clock, the 73.50, 73.65. 73, yeah, just $5 wide, $5 wide.
Mm-hmm.
Okay, so for 90 cents, right? So, but he does it at 9 o'clock every day and he opens it up and he's been doing pretty well, even on down days. No, he's taken some losses, but then he just let it go. But he's like, oh, I get it now. He doesn't want SPX to go below 73.65 and it's trading 74.28. So it's a high probability trade, but he understands it in gambler jargon versus trading jargon.
Well, that's the thing about our platform, right? It's very easy. That's why our platform is the best platform for options, because we do have an expected move bar that you can, that's easy for people to understand. This is the expected move for this type of day. And then you can go further and see, this is the expected move for this month, XYZ. This is the reason why this makes sense. That's a very easy concept to understand. Even if you don't understand options, you can understand, oh, this is where it's expected to move. This is, this is there.
Indeed. Yeah, I think it's interesting, the barrier to entry question, because that's also, I think maybe also that people still utilize it instead of being like, yeah, you'll make twice your money at versus, plus 200. It's kind of the allure of like, ooh, I don't understand what this is. I want to learn about it. But to your point, it's like, it's a whole nother system you have to learn. Yeah. The number related to making $100, basically.
The number related to making $100. Yeah. I like that.
See, that's the thing.
Yeah, minus 240. You got to risk 240 to make $100.
People want to make $100. So that's why all of these are going to exist in some way, shape, or form. It's just a matter of how easy is one to understand over the other.
Right.
And guess what? Every single day we show up here and try to make something easy to understand for you guys.
Yeah.
Right, I think, and the chat is even saying this too. I mean, what we do when you look at it from that perspective, JD looks at me and goes, oh, you're gambling. It looks like you're gambling. You're betting something not to happen. And I was like, I guess. But I don't consider it gambling.
Yeah, I don't think it's, over time, the probabilities and the data has shown like you can have profitable trades being mechanical with these types of things, especially when you're dealing with the E-minis and NASDAQ. I mean, the more volatile product you trade, the more volatile your results will be. That's just the nature of it all.
Exactly that.
But yeah, there is a million ways to make $1 million, and there's been plenty of traders that are, hitting it big, for lack of better words, in certain products. Like we just pulled up STX, Seagate. If you had even just invested in Seagate 2 years ago, you're up 800% on your investment.
800%. What did they do on earnings? Didn't they have earnings last night?
Yeah.
Yeah.
They're up.
I did not play
$50.
Seagate.
I did not neither. But that's the other thing about prediction markets, right? There's stuff that are related to, well, again, it's about to be big. I'm telling you right now because
I think so too.
I think, and these are questions I have for Greg. Sports betting and midterm elections are the big things. It seems like, and we got I should say politics. Sports betting and politics are the big things. We got midterm elections coming up. Best believe there's going to be a lot of people placing midterm election prediction market bets. But you can go further out. You can go like the idea of will somebody. I don't know what's the answer, but like something, there's things like that for like 2030. Will the U.S. admit that there's that there's UFOs or whatever? You know what I mean? Like in 2030 or something like this. All these different things. You can go way further out. It's just like trading Vega, right? Like same deal.
Yeah. Within the Fed rate decision category here, there's plenty of options that you can trade. But yeah.
I don't think options trading is gambling because the probabilities are there, right? And I don't consider options trading gambling, but a lot of people try to compare it to it. I truly do not, because there are probabilities associated with it, but that doesn't necessarily mean it's gambling. It's kind of to me, I think it's playing chess instead of checkers.
It's engineered finance. It really is. Yes. Now you could make a case on whether near like 0 day is gambling, because that's not really, in my opinion, it's not like Vega or Theta. It's just like you're picking a direction for the most part.
You got to throw your Greeks out the window in the short term.
Yeah. Unless you're selling, some way out of the money stuff, like that's not gambling.
This is gambling though.
Yeah, that's gambling.
In a way,
no question.
But I think there's also a fine line, because if I was buying this option with the intent to close it in 30 minutes with a 20% profit, if I get it, that's not necessarily gambling. But if I'm holding this to expiration, that's a lot closer to gambling.
Yeah, for sure.
Because there's layers between these things. But that's like the Super Bowls. We want the positive gamma, but we finance it. Mm-hmm. So that all of a sudden, this debit trade that's a low probability trade turns into a high probability trade. And we go from the is this gambling to not gambling side really quickly, because we know how to manipulate it. That's really it. If you can manipulate it, you're in the boat of.
Well, that's why it's an
science.
Amazing tool. It's an amazing tool that like I said, it was very eye-opening for me teaching both of my children, because JD likes the 0 DTEs and Annabelle's a little bit more logical. She is a little bit more logical, and she likes the farther out in time.
Of course she is. She's a woman. She's
That is true.
10 seconds to go.
10 seconds to the bell. E-minis and Nasdaq selling off here. E-minis down 7, Nasdaq down 10. That's a nothing.
Curtain's about to go up on this day here.
True. Do you have any positions you need to manage?
We got
there it is.
We got a new bell internally. Is that what I just said? Nice.
Yeah. End phase. I had this put ratio spread that I put on yesterday, 35.33. It's up nicely, but as I stated earlier today, I'm just going to buy the 31 strike to create a symmetrical butterfly, free up all the buying power required on that trade. I'm going to put this in for like 5 cents. This is probably.
I sold that put yesterday.
There you go, 5 cents.
Huge move to the downside. Stock is up after earnings. I'm going to close this.
Just flied off the put ratio spread for 5 cents. So I kept 25 cents. Now I have a free shot to the downside. 2 days left. We'll see what happens there.
Mike, I like that move, and I'm glad you did that. It's good for people to see that you can do that. Butterflying something off is a very good move.
Yeah, and I just freed up $1,100 in buying power. That's another nice thing here. But yeah, locked in 25% profit, basically legged into a free butterfly that's symmetrical. I have no risk on this trade anymore, no buying power requirement. And if we drop back down to 33, I can sell out of this butterfly for additional credit and just keep piling it on.
BE had earnings this morning. Stock trade as low as 157 yesterday on that move with the whole AI space down big. Stock is up 8 and change. I sold the put in September. I sold the 120 put. I am good right now, but I'm going to, I sold it in September.
Value, Jermal?
Huh?
Is that holding its value all the way out in September? Can you get out of it?
I can get out of it, yeah, but I like the trade. In addition to the fact the stock is moving up today, I just put out an order to close it. I sold it for $16 yesterday. I put an order to close it at $8, so it'll be 50% gain.
Nice. Yeah, $8 could certainly happen today, especially with the continued intraday vol crush that you'll probably see.
My thought process is honestly, I think that there might be a bounce in these names. There already has been to some degree, but I'm curious to see if we keep getting what we have been getting the last 2 days of this week so far, where we get the rotation into the consumer staples and into the software and out of the chips. But I think that could turn as of today. We'll see.
Yeah. As of right now, we're seeing Procter & Gamble lead the way to the downside, S&P 100. Kind of interesting. Cat, Deere,
Like we're seeing
Boeing,
opposite.
Home Depot, Lowe's.
This is opposite of what we've been seeing the last 2 days.
Yeah.
Yeah, it's another rotation, right?
I think it's still
Ford
brewing.
earnings.
They're trying to figure out what they're going to do.
Ooh, Ford. I have 100 shares of that.
Yeah, you do.
I've got 100 shares of that, people.
Yeah, we looked at that yesterday. That little gap up opening.
Yeah. Love to see it. You really love
Not
to
bad.
see it. Now the question is, can I sell anything against it? The answer is no. But still have 100 shares. Pretty close here. That would be a tale of a lifetime. Getting out of this Ford trade from 5 years ago. E-mini's selling off a little bit more. NASDAQ trying to tick green here. We're flying around.
Nasdaq is trying to tick green. I mean today, but I do think on a Fed day, don't you think we're going to kind of not move too much before 1 o'clock?
Yeah, that's why I kind of avoided the 0-day SPX today, just because, especially if you were trading iron condors, I think an iron condor on a day like today it could work where the market just doesn't move until 1 o'clock and you get a little premium out of that thing. But it could also work in the way of, no premium collected because it's holding on to value until 1 o'clock and you're holding a lot of risk until that time frame happens. So there is this binary event that's wrapped into today.
Agreed. I think you would be holding it. I think it would be hard pressed to get out of it before 1 o'clock.
Liz, we have a absolute lottery ticket on our hands.
What do you got? Talk to me.
NDX Butterfly. We've been putting this on as like a downside hedge for the overall market. We used Friday's expiration to encompass all the earnings announcements. Bought this for $700, and we're sitting right at $27,800. This is a $20,000 max profit if we land at $27,800 by Friday. I don't know what to do with this. I want to just hold it.
I'm just holding it.
How much
Listen
did you
and
pay
don't
for it?
judge, Liz. Listen
$700.
and don't
No. How much did you
judge.
pay for it? I would hold it if you didn't pay much for it. How much did you pay for it?
Yeah, $700.
$700.
Oh, you're fine.
Yeah.
Honestly, that is that's not bad. And so you've made how much on it? I can't tell from your screen. You're up.
Yeah, it's up $1,000, something
up
like
1,000.
that. It's chopping around because
I
the
am
markets
not
are
closing
crazy.
this thing. I'm telling you right now.
I think it's a hold.
I'm holding it.
Because even if we sell off, I actually would prefer if we sell off and then we have the ability to rally into Friday, into this little range here. But I mean, this is a beautiful situation.
Mm-hmm.
And we also have one in SPX, the 7,400, 7,450, 7,350. That's also right at the current move. So
Isn't it crazy?
we
how
might
they're
just pin both of
right
these
there?
things. Yeah.
Like at 28,000 and 7,400. How crazy is that?
Does it bother you that they're both right there right now?
Not really. I've never been more comfortable in my life.
Yeah, I know, right? with 2 days to go, I feel pretty good. I feel pretty good about it.
Yeah. And even if it chops around, like we get to Friday and we're right outside of the butterfly, it's still going to be a massive winner. Because if we rally above 7,450 in SPX, the 7,400, 7,350s are going to lose value, but the 7,450 is still going to hold on to value. Like this is currently trading for $4,000. Sorry, $6,000. So same thing with NDX. If we rally above 28.2, which is a 500 point rally from here, the 2-day 28,000, 27.8 are both going to lose value, and that 28.2 is going to hold on to value. This is trading for $50,000 right now. This option by itself.
Mike, if we pen NDX and SPX, we're going to tell everybody about this the rest of our life.
Literally.
I mean, seriously.
We're going to have Kevin on the next time, and he's going to lose his mind.
But do you know, though, that is true, that there's no better feeling in the world than pinning a butterfly at expiration.
It's just, I've done it one
Well,
time. I think I did it one time. Really, one time. I've had others close, but I mean, one time I think I pinned SPX a couple of years ago.
Yeah. But if you followed us into this trade and you want to close it, there is nothing wrong with closing this trade right now. This is a really nice hedge against the rest of the portfolio. But this could be 10x what the P&L is in just 2 days. And I think there's so many things that are pushing and pulling this market that I really do believe that we could just end kind of flat right here. You can see it here. E-mini's down, NASDAQ up, Russell down, or Russell up, the Dow down. And you've got Fed announcement. You've got 4 of the Mag 7 stocks reporting earnings.
Got end of the month.
End of the month. Like everything's kind of just wrapping up into this week. So we'll see.
What is your short on that? What is your middle strike on the NASDAQ?
28,000.
28,000 in 2 days. Okay, so hold on. I just want to look at something. 20,000. So you need it up a little bit. So it's you're.
Are you looking at open interest or something? We didn't even look at that yet.
No,
honestly.
I'm just because the numbers are small when I look at them on the screen. Do you know what I mean? So I just wanted to look at it from my perspective. I did want to look at open interest and I wanted to look at the delta. So there are 2,800. There are only 100 players in the game. Are you on the put side or the call side?
Put side.
Okay. There are 328 players in the game, and you are one of them. You're 2 of them.
Yep. But yeah, the whole butterfly is within the expected move to the upside. So I kind of like where we stand here. And again, it doesn't have to be like really within this range. These options are so expensive that it can be slightly out or slightly in, and this will still continue to appreciate in value just because of how cheap this was when we bought it.
And again, to Mike's point, I mean, do what makes sense for your portfolio.
Yeah.
This one makes sense for us. Again, $700 is not much for considering our portfolios, and so we're playing this game with it.
But you're willing to donate that to the cause, to the downside, to protect a bullish portfolio, is my guess, correct?
Yeah, 100%.
And what I love is the product that you used, because NDX and SPX, you can just let them go. Like you can close your computer and walk away and see where it ends.
Yep. That's the other thing.
Both cash settled.
It's cash settled.
Yeah.
So yeah, that's
This is such a weird day so far. So every day we come and we try to figure out what's going on. Is it chips? Is it consumer staples and software? Right now, it's really a mixed bag. And I guess this is par for the course for a day where we got the Fed day. So the day is really not going to reveal itself until after the meeting and after these discussions. But right now, I'm seeing a couple of chip names up, and I'm seeing Costco up as well. You know, like Costco and Marvell are also positive, and so is GLW, and so is Fox A. But then to the downside, similar deal. Like you're seeing SpaceX down, you're seeing SanDisk down, but you're seeing Lowe's down, you're seeing Boeing down, you're seeing McDonald's down. So it is a true mixed bag as of right now.
So are you guys in, I mean, I know we talked about this before, but are you guys doing anything in SpaceX?
I just have that long-term Super Bowl set up.
That was the best thing we did. We have a long-term position. We don't even think about it every day.
Because that can't get out of its own way. Like SpaceX is down every single day, right? So it's a tricky one to trade right now.
100%. And yeah, we had a feeling that might be the case with the volatile big jump up and then the liquidation, and then now we're just seeing the stair step down. But that's kind of why I wanted to get into that longer term SpaceX position where we sold the 125 put to finance the 300 strike call 2 years out. It's down today. It's down overall for sure. But over time, this just needs to be 10 points higher and it'll be a winner of $350. And anything above that pre-expiration, we can manage for sure.
Yeah.
Right.
Yeah, the one thing about a day like today is, just don't necessarily worry about your P&L for the time being because it's just going to be all over the place. You can just see how this is what's going to be.
Yeah, 1 o'clock. We looked at an hour ago, we looked at the implied move in SPX and it was 50 points. It is still 50 points. So this is what we're talking about. Like the neutral trades where you're expecting decay. I don't think it's going to happen until 1 o'clock because this 1 o'clock meeting, especially when you look at the prediction markets here, 26% chance that we get a hike, 77% chance that we maintain the current rate. And I don't remember the last time we've had this probability still be so high and the indecision be so high. Normally, we look at this and it's 99% one direction or the other. And it's really about what they're saying versus the actual decision they make. Liz, do you remember the last time this happened?
I don't. It's actually leaning a little bit more as of this morning. It was about 64-35, so it's leaning a little bit more, saying to maintain the rate. But I haven't seen it where it could go either way. Because I will tell you, a 26% chance is a decent chance.
Yeah. It's not zero.
Yeah, I mean, to me, that's
not zero.
Again, I think to me that's saying what I said this morning, and I'll say it again. To me, it's saying they probably won't rate hike. God, sometimes rate hike.
They probably won't hike.
They probably won't hike rates today, but it's clear that in the economy that a rate hike is needed.
Yeah.
It's just a matter of when.
I'd be shocked if they hiked rates today because that would just create a big surprise relative to probability. And You've got a new Fed chair too. I think even that would say they're not going to hike today.
No, I don't think they can. That's the other part about it. I mean, we're in this situation globally where it's going to be tough to do. And again, I think tomorrow the Bank of England has their rate decision. And just look at the environment. It's an environment where oil is high. You really don't want to raise rates into that environment because inflation is high. You do want to, but at the same time, it's an environment where if you raise rates, inflation might come down, but then we also create a situation where, and that's why we've been looking at what's going on with job markets. It's a whole situation you got to pay attention to, but it's a dangerous environment to raise rates because you could really create a real storm.
Well, yeah, this is a political decision too, right? I mean,
Very much so.
I agree. Don would be mad if they raised rates too.
And it's midterms.
So,
that's the other thing, right? Like, you're right. It's a political situation as well. So it's an interesting environment, man. It's an interesting environment. It really is.
Yeah. This thing is coiling, though. You can see it's just intraday range is narrow, narrow, narrow. The realized move is narrow. So I think we'll see an explosion in either direction today at 1 o'clock. But then you've got the Mag 7, 4 of the Mag 7s reporting today after the close and tomorrow after the close. The M's are today. The A's are tomorrow. So Meta, Microsoft today.
Right.
Amazon, Apple tomorrow.
It is an exciting 2 days.
It's gonna be crazy.
Exciting 2 days.
But yeah, Liz, appreciate you. We will see how this market plays out. I'm sure you will too, and we'll catch you later.
Hi guys, happy trading. Good luck.
Thanks, you too. E-mini is trying to sell off here, down 14. NASDAQ down 50. We are going to take a quick break. We'll see you on the other side of it. You're watching Tasty Live.
Cool.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Tasty Trade has crypto, and you can trade with 0 commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
What's up? We're back, everyone. We've got a crazy market here today. We've got E-minis down 12, NASDAQ down 50. My name is Mike. I'm here with Jermal, and we've got E in the house from the Cboe floor. How's the volume? I can hear it. It's got to be louder than a 7.5.
No, it's about a 7.6. Funny that you mentioned it there, Mike.
Thank you.
I know NASDAQ is only down 50 points right now, so It feels like a little bit of an inside day so far. I know 50 points can be a significant amount, but for NASDAQ, it's just a drop in the bucket. So, I mean, I'm excited for FOMC later today. How about you guys?
Same. I think it's going to be a holding pattern until later today. 330-point implied move at the NASDAQ futures and a 50-point implied move in the zero-day futures. And you can see the implied volatility keeps creeping up. The number itself keeps creeping up because extrinsic value is holding on and time is passing. So that's why you see when you think of like an earnings report and you think about implied volatility increasing into the earnings report, in quotes, the longest sentence in quotes ever. It does not mean that extrinsic value is increasing into the earnings report. It's that extrinsic value is not decaying as much as it should in a regular environment, and because extrinsic value is holding on and time is still going away in a linear way, your IV number is spiking because it's based on the extrinsic value remaining. So you're going to continue to see this IV number increase, even though extrinsic value is slightly decaying, but you're not going to get the same decay as if you didn't have this binary event baked into the middle of the day.
Good point. Pull up VIX 1D, by the way. I think it probably moved more yesterday than today, maybe. I don't know, but VIX 1 day. This is kind of your guide a little bit today, too. We'll see what happens and how this plays out. But this is using kind of...
There you go.
VIX methodology uses, not to get too granular with this, but it uses... The way the VIX is calculated, it's deep. You guys got to look it up sometimes. But it uses a 37 to, I think, 52-day window in the SPX options to calculate it. Again, it uses like a mix of downside and upside options and at the money, but mostly downside upside to get a real idea of tail risk. Does the same thing for VIX 1D. It just uses 0 day and 1 day. And at some point in the day, it moves from 0 day to a little more 1 day the next day. And so, it's constantly moving. But again, this is evaluating volatility over a 1 day period. So keep an eye on this today.
For sure. I think we will see this market chop around. Seeing a little bit of a sell-off here, but yeah, implied volatility is still going to hold on, or the extrinsic value is going to hold on, which is why you're going to see a higher and higher implied volatility reading until we get closer to the announcement. 31.8, keep your eye on that. It's just going to keep going up.
Yep.
Yeah, I'm looking forward to it. It's really tough to have any type of directional bias, especially prior to an FOMC like this. So just a lot of trade management, watching some other underlines. I see oil catching a little bit of a bid again here. But I mean, outside of that, it's really going to be a little bit of a waiting game until this FOMC announcement, which I happen to be pretty excited for. I never thought, leaving school I'd be excited for FOMC announcements. But I mean, with this being Warsh's second meeting, I'm curious to see just kind of how everybody perceives him and how social media and just the internet as a whole perceives him, because I mean, Jerome Powell had so many eyes on him. I'm wondering if it's going to be the same with Warsh.
I just want to see the deep fake dubs of the Fed announcements. Yeah. Like Jay Powell had some really good ones on Twitter. I'm very interested to see how they make up the new ones.
Well, last time his catchphrase was we have a task force for that, so that's going to come up again.
Yeah,
and he said it about a lot of different things. That's going to come up again. They're going to ask him about it, so they're going to try to get some sound bites. Of course, it's always interesting.
Oh yeah, they
in
got
that regard.
to. 100%. I wonder how Warsh feels about this, though. I mean, he's got the world on his shoulders, and to the point that you guys had made, right? I mean, it's turned a little bit political, so I mean, he's got some extra pressure on his back. I'm curious to see how, he handles it, because he's going to face a lot of scrutiny, regardless of if it's deserved or not, just because of the position that he's in. So we'll see.
Yeah, I mean, the obviously the market is the thing that we're all watching today, but again, it's bigger than just the market. I mean, you got bonds to pay attention to, right? It's obviously something that's going to move with regard to today. You got gold and silver. Gold is down 30 points right now. Oil is already rising into this thing, but there's so many different things that are affected by the Fed day. This is why we watch it. This is why we love it.
Yep. Yeah, it's going to be wild. I mean, the market right now is trying to sell off, down 27, NASDAQ down 150. This has been a really weak couple of weeks with the NASDAQ here. Haven't had a green day since the 21st of July. So really wild to see. This is the NASDAQ futures. And we keep sliding below this level that I thought was the line in the sand, 28.5. We're now 1,000 points below it.
Yeah. When I first started in this biz, it was 2006, and It was between 2006 2007. I think the interest rate was like above 4 or 5 or something. And every Fed meeting, they would come in just about, and it was a big day, just like this. It'd be a little bit quiet, and then announcement would come out, and they'd cut rates, and the market would go flying higher. I was like, oh my God, this is crazy. And it was like that for like the first 3 or 4, and then 2008 came, and then things changed, and they dropped it big. And again, I was just trying to figure out, I was trying to see if there was a correlation. I wasn't really sure, right? Couldn't figure out what the deal was. And to that point, it really varies. It really depends on the environment. It really depends on what's going on with the market. Again, usually we raise rates when things are getting out of control, after the market has really risen really big. And that was the case when I came in 06 after, what had happened in the 2000s, early 2000s. And then we've seen an environment where they raised rates because things were getting out of control. And we saw that happen. And now we're just in this area where we thought we were in a rate cutting environment, right? A year and change ago. And all of a sudden that changed. And now we've been holding. And now we're at the point where it seems, like we said today, there's a 25% chance of them raising rates today. It's a true almost indecision, I would say. They probably don't do anything, but we're in an environment where maybe they need to raise rates, because you see what's going on overseas. Every time we come in, there's a circuit breaker from Korea, and eventually that leads over, because the chips are the things that have been moving the markets the most. So it's just an interesting environment right now.
Yeah.
And we might have to. I mean, if oil keeps creeping up higher, that's a little bit inflationary. So I don't know. They might be forced to crank those rates a little bit. I don't know, though. A lot of uncertainty on the table.
Yeah, crude oil sitting at the session highs here, 84, 87, up 7%. But yeah, I think it's going to be wild, and I think we will see a big market move against this decision today, especially with the indecision, the narrative for the rest of the announcements and decisions they'll have to make throughout the rest of the year. But we've quickly gone from like, we're going to cut rates 7 times this year to we're not doing anything. That was like 3 years ago they said that, and I was like,
Yeah, right?
Yeah. But yeah, it's gonna be something to behold. But again, let's keep your eye on this implied volatility and just make sure you realize like this premium is probably not going to come out of these markets until after the announcement later today. But we are seeing directional moves. So if you're directional, still totally fine. You'll get paid on delta. But the neutral stuff where you're expecting the decay, it's probably not going to happen with an increasing IV with this expected move is holding steady at 55. It's actually increasing a little bit. So we shall see. Are you trading any of these tech stocks after the close today? We got Microsoft and Meta.
No, I'm not going to be trading any of them, but I am looking forward to trading any exaggerated move from some of these earnings. I know Apple's going to be reporting tomorrow as well, so I'm really excited for that one because Apple is still trading near its all-time highs. But outside of that, I got to take Apple a little bit, to be more exciting than Meta for me at least. Is there anything specific you guys are looking forward to for some of those names?
Definitely Microsoft, I would say.
Yeah, definitely Microsoft, just to see what's going on with that software space and see if they can sort of change the narrative. We did, was it CRM? I can't remember. No, it was Now. ServiceNow had earnings, and they popped up after hours, but then they ended up fading. And then we've just seen this couple of days of bullishness in the whole space. I'm curious to know if this is going to hold up, or is this just kind of the pre-Microsoft pump, if you will. But we'll see. I mean, that's definitely one that's really interesting. Again, I thought it's also been interesting watching Apple just continuing to motor higher heading into earnings. And it's almost like this has been sort of the anti-chip trade. I mean, when chips have been down, this thing has been powering higher as well. So it's another fascinating name, I would say.
Yeah, I did not have this on my bingo card. No. Apple overtaking market cap from NVIDIA.
Yeah.
Did not have that on my bingo card. Yeah. But times change.
What's up with the levels you're looking at in NASDAQ today?
For NASDAQ today,
and by the way,
one of the levels I'm looking at right now.
Not to cut you off, but by the way, when you look at them, are you focusing on those levels for NDX or is it NQ?
Typically NQ, NASDAQ, and typically the minis on NASDAQ, right? I'll do the analysis on NASDAQ, but then I'll use the micro products to trade the NASDAQ.
Yep.
Here it is.
Today it's a little bit.
Yeah.
Yeah, it's a little bit difficult to say just with FOMC because right now, for example, right, 27,700 was a pretty important level, I guess you could say. But again, it's tough to have any conviction off these levels with such a binary event just waiting for us here in a few hours. So 27,700 is going to be interesting. If we continue to solve to the downside, the lows that were put in earlier this week on Monday are going to be interesting.
I got a super bear. I forgot about that.
Yeah. Hey, look, we're selling off right now too. So
Forgot about that.
You might have some green in that portfolio.
I love it.
Yeah.
We've been selling off, so.
Kind of an eerie sell-off here. Market was flat. Now we're down 40 in the E-minis, down 240 in the NASDAQ, 0.5% in the E-minis, almost 1% in the NASDAQ. And Bitcoin's just chopping around flatten up.
What's Bitcoin been up to? I feel like it hasn't been shown any love recently with oil making some moves, overall market, FOMC, earnings season. What's Bitcoin been up to?
Yeah, I mean, it's tough to say. It's been totally disconnected from the market, that's for sure. Especially when you look at the NASDAQ. The historical relationship had been positive correlation with Bitcoin and NASDAQ, but NASDAQ can't catch a bid and Bitcoin's just chopping around flat. So a little divergence there, but I think Bitcoin's just going to be one of those things where you really need the market strength to pull it up higher along with the rest of the market.
100%.
Yeah.
Totally forgot about this thing.
So what did you have? The micro NASDAQ or the NASDAQ futures? Yeah.
No, I got a super bear in SPX. I put it on for tomorrow with the idea that we're going to fall today, or, that was the idea. And these earnings overnight.
This guy's betting against the economy right now. That's crazy. Get this guy
Don't
out
let
of
them
here.
hear you.
This one, 74.75, 74.85.
July 30th. Yeah, that's the one.
So you put it on for 50 cents.
Credit, yep.
Drum roll, please. It's trading for $4.
Yep.
Nice.
And again, this was more about not just right now. It was more about today and earnings tonight. But at some point, I'm either going to close this thing or, put one on in today. If it gets to a point where I'm up, maybe in like another $2, I might just put on a super bull for today, right?
Yeah.
And just see what happens.
Yeah, catching a bid right now. Appreciate you.
Yep.
Enjoy the rest of the time at Cboe, and we'll see you a little bit later.
Thanks, guys.
Later.
Got it. E-minis down 37, NASDAQ down 200. Kind of crazy today. We got a fun rest of the day for you, though. Check out the schedule right here. So we've got a number of people coming in. And, of course, 9:50, don't miss it. We've got Greg Embree coming in, the product leader for the prediction market tab on Tasty Trade that is live. And you can trade the Fed announcement. You can trade a number of different things there, so check it out. But we got Dr. Jim in the house. Dr. Jim, how you doing today?
Man, I'm doing well. I'm doing really, really well. And I'll tell you guys something, man. Look, so I've been in the markets now for 20, 25 years, and this FOMC that we've got today, I have never seen or studied or been up against a more pivotal FOMC than the one that's coming on down the chutes today in just a few hours. So, gentlemen, if you don't have your affairs in order, I would get them in order forthwith, because this could be the end.
I was about to say, I expected you to say what I always hear you say, man, and I'm stealing a line from you. If this is it, Dr. Jim, I'm going to see you on the other side.
Yeah, that sounds good, man. That sounds good. Hopefully.
I don't have my affairs in order, so how about you take over the show? We'll get our affairs in order, and we'll come back in a little bit.
That sounds good. I like that plan. All right. So let's go inside the trade. Okay, so here's what we're going to do. So we got the Fed later today. We got FOMC. We got Cousin Kev coming out. Like, all's up in the air. Like, nobody knows. Like, people are saying, is he going to hike? Is he going to cut? Is he going to go with a non-purple tie again? I mean, there's so much chaos that we have to handle, right? So here's what we're going to do. We're going to go in and we are going to look at a same-day SPX butterfly. Now, here's what's amazing. This was the same trade that I talked about on last night's Calculated Risk, on yesterday's From Theory to Practice, and now here on Inside the Trade. So we are going to get this guy once, twice, thrice here for the SPX butterfly. And let me know in the chat what you guys think about that butterfly, and I will try to get to as many of you guys as I can here in just a few seconds. All right, so let's go ahead and let's take a look at an SPX butterfly. And of course, we got Microsoft and Meta, and I think Chipotle might be today too. And so we'll take a look at some of those guys as well. And so, all right, so you go into a 0-day cycle. Oh, that's not good. So you go into a 0-day cycle. Hold on a second there, Ben. If you could cut me to like full screen while I bring my platform back up. And so if you go to a 0-day cycle while we're waiting for Tasty Trade to fire back up, if you go into a 0-day cycle, the nice thing about doing that while you have a butterfly is you want to be at the end of the cycle with a butterfly. Like you want to run that guy all the way down to the very end. That is the ultimate goal, because if there's too much time left, that's kind of working against you with a butterfly. You want all the extrinsic value to come out of that guy and to be near the end of the trade. And so when we do these front week or same day butterflies, they can be really nice because you do have a situation where you don't have that much time left. All right, so just give me 1 second here and let me pull this guy back up. And so technology is a wonderful thing until it's not. And so, all right, so we should be good now, Ben, if you guys can crop that for me. We should be set and ready to go. All right, so let's go into SPX. Let's go back to where we were. Hopefully, Autumn has paid the internet bill, and so we should be okay, although that's only about a 30 delta. So if you go into the 0 DTE, again, same day, and we're going to trade this morning, and if this guy works, you guys might see me close this later today on From Theory to Practice, so you're not going to want to miss From Theory to Practice later today at 2:30, of course. And so, all right, so when it comes to butterflies, a couple of things to keep in mind. Number one, whatever you pay for the butterfly, a standard butterfly, I'm not talking about broken wings, I'm not talking about broken hearts, I'm not talking about broken toes for the OGs out there. I'm talking about your standard 1x2x1 that is symmetric on both sides. Whatever you pay for the butterfly, that is going to be your maximum loss. That is going to be your worst case scenario. That's really, really nice when you are going into the most important Fed announcement of our lifetimes. And so keep in mind that the worst case scenario is no one on entry. That's the first thing. The second thing is this. The wider you go with your butterfly, right? The wider you go, the easier it's going to be to manage. In terms of if you get the move that you want, you don't have to be as precise. You don't have to be as kind of finely tuned with that price action. You can find yourself in a situation where you just get a little bit of movement in your direction, but because there's so much room, there's so much green pasture between the shorts in the middle and the longs on both sides, it allows you a lot of room and freedom and flexibility to manage that guy for some type of profit. If you go with a super tight butterfly, they become really difficult to manage. They're really difficult to make money on. Now, it's been said before, and I don't know who said this, but man, you couldn't forget it if you tried. For every gimme, there's a gotcha. If I'm going to go wider with my butterflies, I'm going to have to pay for that. That's going to cost me more. The debit is going to increase. If I do go more narrow, then the debit's going to shrink. The debit's going to be very, very small, and it can be a super cheap trade. But again, it's really difficult to make money. And I don't know why you're doing this. I can't speak for you. You've got to make your own decisions, of course. But I'm trying to make a little bit of money. I'm trying to move at least a little bit forward here. And so when I think about the width of a butterfly, I really like to be mindful of the things that we just went over, but then also I take all that and I marry it with my position sizing. Like I want to marry that with, all right, what am I comfortable with from a position sizing standpoint? Generally speaking, somewhere between 1% to 3% of overall net lick is a pretty good range to live in. Now, if you are more risk averse, or you have a lot more capital, you can be on the lower end of that range, or even below the lowest point of that range. You might be at 1% per trade. You might be 0.5% per trade, whatever. If you are less risk averse or you have less capital, then one of the concessions you oftentimes have to make is now my defined risk positions even are maybe 4% or 5% of my account, which is okay because again, remember, if you have only a little bit of capital, a small amount of, we could go with either of those, not typically both together. Your goal should be to learn, in my opinion. Your goal should be to gain experience and gain exposure, in my humble opinion. The money will come later, the capital will come later, the returns will come later, but if you've got 10 grand or 12 grand or 15 grand, not to dismiss that and like treat it like it's some insignificant amount of money, because it most certainly is not. But in the world of trading, it is kind of limiting in some regards. And so you just want to be mindful of kind of, what you're up against there. So when I go into SPX and I see you guys in the chat, look at USA Super Tech is here. Man, I appreciate you guys so much. Sam L is here. Man, look at A Sing in the house. Look at Scopo Porkins in the house. Man, I appreciate you guys. Christopher Springer is here. Man, look at you guys. I appreciate you guys. So let's go ahead. If we wanted to set this up, we'll show both the downside and the upside because I don't know what's going to happen. I mean, do you know what's going to happen? Like, tell me in the chat, in the YouTube chat, because I want to know. The production team wants to know, and the algo needs to know. It needs the data. It needs the data points so it can learn more about us, so it can take over the world in 36 to 48 months. Are you guys looking at the Fed meeting today as an upside play or a downside play? I'm not exactly sure right now, but hopefully we figure it out in the next, 2 to 7 minutes. So if I want to play this thing to the downside, maybe I do a 73.90, 73.40, 72.90. And so it's crazy that SPX is under 7,400. I was like, do I have those strikes right? But we're down 40 already today. NASDAQ down 200. I mean, wow, man, markets really do move and things really do change. That is 100% true. But if I go into this guy, 73.90, 73.40, 72.90, 50 points wide. And I've got to double up on my shorts in the middle, of course. And you can see I can get you into this butterfly today for the one-time low cost of an 880 debit. Now, you have to act now, right? You have to act urgently. Otherwise, this price goes away. And by goes away, I mean it's probably going to be pretty much the same for most of the day. But an $8.80 debit, $9 debit, that's not too bad. But again, I'm working with about 37,000 in this account. So, I probably would prefer to be maybe 1 to 2% for a binary event like FOMC. So this is getting closer to like 3% of the account. So it's a little bit on the high side. And this is playing the butterfly lower to the downside. Now, if you want to reduce the cost of the butterfly, or if you want to reduce your overall maximum loss on the strategy with a butterfly, you effectively have two different options that you could explore. Number one, you could minimize, well, not really minimize, but you could shrink the width of the spread or of the actual butterfly itself. So right now, you can see I've got a 50-point wide butterfly. I can go to 40 points, and that's going to take my debit down probably pretty significantly. So let's go ahead and do that together right now. So if I buy a 70, instead of the 73.90, I do a 73.80 for my top long put strike. I stay at the 73.40 for my short strikes because, again, I want to be right around that expected move. And then for the lower long put strike, I bring that guy up to the 7,300. So look at how significantly that has changed the dynamic of my debit paid. Now, I've taken $10 off the width, right? And so the profit potential is lower. The maneuverability on the strategy is much more difficult. It's not going to be as easy to manage a trade that moves in my favor. But in my opinion, we just cut. Now the debit on the trade, if you're listening to the audio only version of the show and all you have is my sultry voice to take you forward through the forest, that is a dangerous, dangerous place to be. $5.90 on the debit. $5.85, $5.90 is obviously floating around as the market moves around. And so we've taken, $3, $2.75 off of the debit, and we've cut our maximum loss by like a third on this trade just by giving up $10 worth of width. I think that's worth it. You have to make up your own mind, of course. You have to make your own decisions. But I think right here, 40 points wide, this looks pretty good. Now, I might come back to this in a second, but actually, I do like this trade. I like this trade for one reason and one reason only. We can talk about interest rates. We can talk about projections. We can talk about the dollar. We can talk about oil. We can talk about all those things, and they're important. They're important in a not really kind of way. Here's all that matters on a day like today. I think that Cousin Kev is going non-purple again, and I don't think we're ready for it. Like last time, 6 weeks ago, the shock and awe, we couldn't digest it quickly enough. Like, you think the markets are efficient? You think the efficient market theory allows you to digest information quickly and instantaneously so there's no edge? That was such a radical move. The EMH didn't even know what to do. Like, nobody knew what to do. But now, if he does it again, I don't think we're going to be so lucky. And I think he is going to do it again because he wants to blaze his own trail out from underneath the shadow of Uncle Jay. And so I think it's going lower. I think it's going down. And so if you're looking to make some money today, obviously you should be playing the upside with as much capital as you are comfortable with. And so let's go. Let's go ahead and let's do this guy to the downside. This will be our, there you go. We got filled. Perfect. Okay. And I'll just show you guys quickly to the upside. The pricing is very different. Like, to the upside, it's a lot more expensive. Like, if I set up a 40 pointer to the upside, I go 73.95, 74.35, 74.75, and I double up. I mean, that guy is, it's not too bad. It's actually lower here on the upside. Okay. All right. I thought it was actually a little bit more expensive. It makes sense that you would expect it to be pretty symmetric. But yeah. So, okay. So when it comes to the upside, now I'm thinking, oh yeah, I think interesting. So now you have to watch calculated risk from last night because I think I messed up. I think I forgot to double up on the short option in the butterfly, and I had really crazy pricing between the two. And so now it's kind of like, did you guys used to collect those McFarlane football players? Like those McFarlane, like those figurines? I actually have a couple behind me, but we've only got a couple minutes left in the show, so maybe we'll get into this from theory to practice today. But the McFarlane football dolls, like they were like super popular, like maybe 15 years ago or 10 years ago, or maybe 20 years ago. I don't know. But people used to collect them. I collected them myself. But anyway, every once in a while, the McFarlane guy would make a mistake. Like he would make a mistake and it would make the doll even more valuable. It would make the doll even rarer. And so if you happen to get one of those figurines, I should probably stop saying doll since these are NFL players. If you happen to get one of those figurines with an actual error on it and a mistake, it was worth like 4x or 6x of what the actual regular figurine was. And so now this calculated risk last night, like it's going to be minted in the vault, kind of like one of those old rare mistake McFarlane dolls. But anyway, I digress. And so, all right, so there is SPX, and I don't want to rush through Microsoft and Meta and Chipotle and all the earnings today. So now you have to watch from theory to practice tonight. But let me see where you guys are at in the chat. Man, you guys are doing work. So really quickly, I see Orgdenu is at 130 or 115. It's 130 like normal. So yesterday was just kind of a special event. It's 130 like regular time. And so thank you there, Orgdenu. I appreciate you so very much. USA Super Tech says, would you always use calls to the upside? Yes. Typically with butterflies, especially in expected move butterfly, you're going to use kind of whichever side of the market you're going to. And so if I'm going to the upside, I'm going to use calls. If I'm going to the downside, I'm going to use puts. It doesn't necessarily matter from a pricing standpoint. Like I could play the downside and use calls and it would be the same price as the put side. In fact, I'll even show you guys. Like, look, if I go to SPX and you can see I have this trade set up, right? This 1x2x1. Look at what happens if I do the same trade on the call side. What did I pay for this? This is such a good question. I'm going to spend an extra couple seconds on it. Look at that. We're already up $1 on the trade. Wow. Should we scalp this on the show? I mean, I kind of feel like, yeah, hold on. We're going to do this intra show. So we've gone from intraday to intra show. I mean, I think we're going to do it, and we're going to probably do it again on From Theory to Practice later today. And so, I mean, let's do it. Why would I not do this? Guys, that's 4 BEUs, right? And if you're brand new to Inside the Trade, you're brand new to From Theory to Practice, you're brand new to the Dr. Jim lexicon, a BEU, of course, is a bonefish equivalent unit where we've got to make this stuff real. We've got to make this stuff tangible. And there's no better way than to convert this into how many times can I go to bonefish? And so I'm just gonna close it. 710, 715. Oh, come on. Somebody's got to be out there. We're scalping butterflies intra show now. 710. Come on. You're better than this. I know you can do it. I have faith in you. 705. Let's do it. Ah, man, I gotta have it. What do we pay for it? $5.95. I'll do $7. I won't do less than $7. We'll just keep this on if we need to. The market is rallying now as we I'll just keep that on. And if I get filled, obviously I'll push it on the follow page. But I do want to go back and show the call side on this. So if I set this up on the call side to the downside, which is a little bit, it feels a little bit off. Like it's not the most feng shui way to play this strategy, in my opinion. But if I go ahead and set up the exact same trade, I buy one, I'm going to sell two, and then I'm going to buy one. This should be about the same price that we paid. Yeah, it's $7.20. So again, I mean, the markets are moving. And so this should be selling for the same price. We got filled. Look at that. Man, so we went inside the trade. We went outside of the trade. And then we actually went back inside the trade to close the trade. So we've been all around the trade this morning, every which way. And so there you go, man. SPX to the downside. Was there ever a doubt? I mean, I was about 20% sure it was going to work when I put it on, but man, that's some pretty crazy stuff. And so we did that, guy, on the show. Okay, so now later today, we're going to do Meta. We're going to do Microsoft. We're going to do, let me see. So this is a little bit of a preview coming into From Theory to Practice. And so, yeah, we've got, wow, look at this, man. We've got Chipotle. we've got Starbucks, we've got Meta, we've got Microsoft. You do not want to miss today's show. You do not want to miss today's show. And I see you guys. I see Lors saying, do it, scalp it. We did it. It's done. It is over. And there you go. So, all right, so we've got those guys, and maybe we'll do a little SPX on the show today. I don't know. I mean, you got to watch the show to find out, but it looks like I'm pretty much out of time. I got to run. I will see you guys later from theater practice, and I'll see you then.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
Think you know where ball's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Just for a minute, let's forget about your favorite stocks. Just for 1 second, let's leave specific strategies on the shelf. Let's talk about what really matters. Your portfolio. How do you build it? What should you target? How do you manage it day to day? The answers to these questions and more are inside our newest crash course. So I'll see you there.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Investopedia says we're the best for options trading. Stockbrokers.com says we're #1, and Broker Chooser raves about us too. So what else can we say other than boom? Trade like a trader. Tasty Trade.
What's up, everyone? We are back. E-minis are down 50. NASDAQ's down 240. If you saw that 3% cash match, head over to tastytrade.com/bring it. It's the new promo for new accounts. 3% cash match up to 3K. We've got lots more to come the rest of the day on the schedule here. We've got Tim Knight coming in just a few seconds here. And we've also got Julia for a little research piece. And last but not least, we got prediction markets. We're going to bring in Greg. We're going to talk a little prediction markets. Now that it's live in the platform on the Predict tab, you can check it out and enable your account to trade within the Tasty platform all in one place. But Tim, we've got a downside move in the markets today. I didn't hear any whales from you over from the West Coast. How you doing today?
No. Yeah, and that what he's referring to is the STX trade. I'll Although, as I said, I'll just echo that just about any close or cover I've done, I've regretted. And it's the same with SMH right now. It continues to sink. I just, as I mentioned yesterday, we're emotional creatures, we're psychological creatures, some more frail than others. And I just wanted to tone things down a bit. So I've pushed my puts out to January so I can sleep a little easier. Mm-hmm. And, I'm paying for time that I don't need, but it makes me feel better. So that's my investment in myself.
Yeah, that's smart trading. I mean, that's the way you're supposed to do it.
But I've been yammering on about this whole hyperscaler bear opportunity, and it's really blossomed beautifully. But the point I was trying to make in my afternoon show yesterday is that I think we've got a market here where you have to scurry from one sector to the other to find those opportunities. Like the Dow yesterday was up hundreds, I forget, 600-700 points, some crazy amount. And if I'd been a little more bold, that'd been a great short, because that was the outlier. That the Dow was just I'm off, up and away, and everything else is rather weak. And it's kind of catching down at this point. So I've dialed down the tech short mania a little bit. I'm pushing into stuff like basic, boring stuff like spider puts, things like that.
Mm-hmm. How do you trade around a day like this? Or I should say 2-day type of period, right? Because this is really a 2-day period. It's not just about today. How do you trade about this, trade around this, or is this kind of how do you look at it?
I try to be sort of agnostic about events going on. I'm interested in them. I watch them, and I pay attention to how the market reacts. But it's not I better close these 10 positions because Kevin Warsh is going to say something. You can never tell. So I really just try to let the charts do the talking, and in a matter of keeping the stops fresh, examining them frequently, just kind of keep my mind fresh about where they're at. My muscles tighten up a little bit around FOMC, especially around the press conference, but even more so this afternoon with not really Microsoft, but really Meta. And it's not because it's I have only one position, it's all on Meta. It's that will inform so much of the rest of the market. Absolutely. Because let's just say Meta takes a hard dive tonight. That's going to really throw more ice water all over the AI space, and vice versa. So one stock can really, Microsoft, I honestly couldn't care less. But Meta, even though it's a smaller company, I'm really interested in seeing how that goes.
Yeah, absolutely. Well said. You got a chart of 3 that you're looking at?
I do. I usually put up I put 10 symbols, but I just pluck out a few to talk about depending. And this is XLK. Which is, I don't know how to characterize this. I just call it kind of like the other cube. It's just another flavor of tech ETF. And it's got a really handsome right triangle pattern, which has completed. It completed basically, so here we are on Wednesday. Between Monday and Tuesday, that's when the change took place. On Monday, it was a almost done right triangle, but not quite there yet. Yesterday, it was done. We were below it, we closed below it, and now we've got something to work with. And so today's high is essentially the base of this. We could be a little more generous and anchor it to so, give us a little more wiggle room. But that's the right triangle, and simply stated, until such time as the prices clamber back into that right triangle, which I would like not to happen, then, it's all systems go on the short side. So, yeah, XLK, that's the right triangle on that one.
Yeah, I haven't traded this in quite some time, but this actually was one of my original year-long trades where I had a short put on here, I had a strangle, but yeah, this is, like you said, just another flavor of tech. And I think these are the products where if you're trying to get a little bit more or a little bit less of certain products, if you look at the actual makeup of the top 10, you can find, are you?
Yeah.
Any findings?
Yeah, and just super briefly, just by way of comparison, this is the cubes, and same deal. It kind of, strictly speaking, I think it completed its own pattern on Friday. We got below it on Friday. We had a rally on Monday, a strong open, but closed with a bearish engulfing pattern, and we basically got 5 red bars in a row here. So far, so good. So I just wanted to augment the XL argument with that.
Yes, below
and just to kind of slather the butter on here, here's SMH, which is my this has just been my obsession for a long time now. I think as of 3 months ago, I hardly even knew it.
To be sorry, I couldn't help it, Tim.
Thank you. Let's do Broadway. I can do anything for Broadway. Yeah. Wait, that was like was that the Human League?
Yes, it was.
Oh my God, it's Animotion.
yeah.
Animotion, absolutely. I talk about a face made for
I knew
radio.
you'd be into it. I knew it. And Animotion. Damn, that is a hell of a call out. I didn't even know who sang it.
Yeah.
Nice.
Yeah. Captain of the 1980s. I do not know my parents' birthdays, but nonsensical garbage like that, like just the 1980 songs Tim's detests. I can answer any.
I love it.
She was one-hit wonder.
Yeah.
Anywho,
no, good. I know you're just as you're getting your train of thought back. It's a good call out on XLK. I mean, it has Apple, which has earnings tonight. And again, some of these names have been inside to down on earnings. These tech names, Apple has just been booming. But Apple, it's in there. Microsoft is in XLK. AMD is in there, which has been down recently. Micron is in there. Intel is in there. AMAT just had earnings. LRCX to that effect. So,
right. Yeah. And then this thing is just a honey. And you were talking about the screaming earlier, and I'm slightly screaming inside because I did sell my SMH puts yesterday, and the cold fact of the matter is that was dumb. The pattern's complete. I've still got plenty of semi shorts, but listen, the puts threw off a really nice percentage profit. So yeah, this is looking beautiful. I think it's got a long way to go. This whole AI unraveling, I think it's really just started. I love this chart.
Yeah, I think this sell-off right now in the NASDAQ and E-minis could be a little telling. Like, is this a rate hike scenario?
I was gonna ask you guys, is there news? I mean, I'm delighted, but it's just been sort of melting all morning.
Mm-hmm.
Yeah,
I'm not aware of any news as of now.
I will mention we've been each day for the past few days we've been talking about crude oil, and I just like blithely threw out that although I had no position, I felt this was going to be moving higher and get past that trend line again. And so far so good. We're up almost 7. We're up over 6% on this, and it seems to have found. And this is kind of an interesting transmography. This is like a mutation here because oil had its own right triangle. It fell, found support at this price gap, which was when the war started. And then since then, we had this kind of uninterrupted rally. We pushed past the trend line into poing, down we go, got rubber banded back down here. But it found support at that same line. So this was kind of the anomaly right here. This was sort of the memorandum of understanding era of good feeling, and that seems to be gone now. So we bottomed yesterday and now it's starting to rally. I would not be at all surprised within a week's time for this to be well above where we had peaked late last week.
Yeah, especially we were talking to Chris Vecchio, and he's saying there's not many reports of ships going through the Strait of Hormuz, and with the weak market and the whippy crude oil futures, we still have backwardation when you look under the hood, pretty steep backwardation there. And these back months continue to stay elevated. So, yeah, this is something that's going to stick around for a while.
As we sit here, it just jumped above 85. That was the ding.
Huh. Yeah. Well, I find it funny that gas is over $4 again. It's like, guys, I can find you $7 gas out here. I mean, I don't want to hear about your $4 gas. Let's see. So just as we're kind of at the getting near the end of our time, I just want to touch once more, because I've focused enough on tech, just once more on the ES. For 5 days here, we've sort of teased around with this support level, and we are getting so close on this. We essentially, back here, this was an enormous update back on June 11, and then we leaped above that line on June 12. And since then, we've been above it. So we rallied, fell, found support there, rallied, fell. We're finding support again. But my point is that the NQ has just slid right through its support, and now it's just kind of a smooth pathway lower, whereas the ES has been more resolute. But, one surprise, a bad night for Microsoft tonight, or Meta. something like that. It would just take one surprise, not a bad down day at all, to seal the deal. And so I've got, like I said, I've been loading up on my biggest options positions, just plain old simple January 2027 spider puts. And I'm just it's my supposition, especially with the VIX like at 15, that between now and next year, there's going to be some nasty tumble at some point. And that's what I'm trying to be prepared for.
Yeah, the vol futures are really flat right now. 1960 in the Q contract, 2013 in the U. So the contango in the vol futures is getting zapped out of here. We're flattening out ahead of the Fed announcement and some of these Mag 7 stocks. So we'll see what happens in just a few hours here. But Tim, appreciate your time.
Good to see you.
Okay, good luck, everybody. See you later. Bye-bye.
Thank you. E-mini's sliding, NASDAQ sliding. It's going to be a wild day for sure. But we're going to take a quick 90-second break. We've got Julia on the other side of it with some research. You're watching Tasty Live.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
What's up, TC Nation? Welcome back to the show. We got a crazy market. E-mini's down 50, NASDAQ down 288, but we got a market measures presented by Cboe. How you doing? Dad. In the house. In the house.
What's up, man?
I'm good. What's up?
Good. It's crazy times.
Yeah,
what you got for us?
So you got a crazy marketing idea, market segments idea as well.
Okay.
It's a good one. It's a crazy one. So
cool. Let's get into it.
So it's started with questions. The worst and the best trading or trades in the market history. So what can we learn from that?
Like it.
So what do you think it was the craziest, like the best and the worst?
Best and the worst in market history? I don't know, bro. I mean, there's such a long history. I mean, long-term capital management was a really bad trade. Have you studied that yet?
Mm-hmm.
Okay. That's probably one of the worst in history, I would say.
How about
are you talking about just equity stuff?
No.
I would say long-term capital management is the worst.
Okay.
The parking meters in Chicago selling the rights to that to
Right.
Saudi Arabia for the next 30 years.
This is a deep question. I don't know.
That's the worst trade in the world.
Yeah. So right here, I'm going to discuss about like when you say at the top or you say at the bottom of the market.
Okay.
When you say at all-time highs or say with all-time lows. So what's the difference there? When do you get money? When do you lose money? And also going to say, describe the real experience, the reward experience, your trade with real money. How the portfolio just reacts to that. So if we start with the slides, we took in the idea is like fear the top, buy or raise the highs, or love the bottoms. Fear the tops, love the bottoms, because the bottoms is comes, it's easy to find positions. The highs, you always like, hey, the crazy market. So, and we thought like the fear the top and positive market. But what actually happens with your money if you trade at the all-time highs? Like right now, every week we go to the all-time highs, and when people is like, can we trade all-time highs, or can we wait the market to bounce back a little bit for us to get our position in? So if you go to, so we took like 20 years of data of SPY, we trade Strangle, 16 Strangle, we just hold it to the expirations. And then we took some kind of different like Amazon, Cisco, the real world experience, what happens during those times of like the market crash, the market when you hold the market crash, when you open a position before the market crash or after the market crash. So it's kind of like the scenarios. So let's go to the next slides, please. So this is not surprising because you all know as traders, for the past 21 years, when you trade, you open Strangle like in 2004, and you hold or you roll your Strangle up to now, you're going to win 81% of the time. That's pretty much like, that's a great win, right? But as you see on the graph, we have so much highs and lows. We have so many crashes. So the edge is real, but you're going to see how can you take advantage of the edge instead of holding up to this date. So when you go to the next slide, so is where you're going to look. If you look closer to this graph, you will see the red is the loss and the white is winners. So we see we have the average. So if you look to the losses, that's where the edge is. You will see we have so many losses, but small losses, right? If you win, you're gonna win big. But if you lose, you're gonna lose big as well. So you see like the win is between 0 and 100K. I mean 1K, but the losses is between like 0 and 3,000. That's per one trade. That means that one winner, one loss can wipe all your wins for your entire portfolio. That's a great presentation of how the risk is involved in these kind of trades. If like one loss, bad loss, you didn't manage your trades, can wipe all your wins, can wipe all your portfolios. Can wipe everything you own. So let's go to the next slides, please. So this is a question where we start this kind of study, where we get this idea. So we ask obvious questions. Is it real risky to sell premium when the market is making new highs? Surprisingly, the data say no. So in this study, selling like 3 months highs actually performs slightly better than average, which is like a 3% of win rates. So which means like the takeaway from this, like calm and rising markets tend to stay calm, giving the short strangles a more favorable environment than many traders could expect.
Well, you're doing 16 delta strangles in which term? How far out?
So it's managing like until expirations.
Managing till expiration.
Yes.
I would say there's a caveat with this. I would say it depends on the term you're using. Just so people understand, I don't think you can sell like, strangles in 21 days and then volatility rises and win on that trade. But again, if you're selling like 45 days out to 3 months out, there's a chance, I would say. I think
it's 45 days and hold until expirations.
Interesting.
Yeah.
Okay.
So this is a cool graph. Like when you see the graph, you see when you consider all the entries, you're gonna correct like $3. When you enter the top, you're gonna correct $80. And when you per trade, and when you correct when you enter the trade at the bottom, you're gonna correct only $34. Which means when you open at the top, always outperform everything, all the entries, or when you open at the bottom. Which means like this gives like the edge to open always when the market is calm and rising the market always. So when you go to the next slides, so this is when you put side by side when you open at the bottom and you open by the top per trade, what happens for these 20 years. So selling setting the 20 years SPY as triangle study say that setting after the market highs, modest improved by $6 per trade, while setting at the market lows, reduced the market returns by 49 $49 per trade, which means rich premium after sell-off aren't enough to offset the high realized volatility you have in the market at that time, which a great takeaway for traders. As we come to the close of these all-time highs every week, many people can ask themselves, "Oh, I'm a new trader. What can I do in these all-time highs? You guys say all-time highs. What can I do?" So if you enter a trade, make sure you know how to manage your positions. Not sure to enter by using the different mechanisms they still recover. So, and this is like confirmations. When you wait for you to enter when the market is at bottom, actually going to lose money versus when you enter when the market is at the top. So let's go to the next slide. So this is like a real world example. So during the 2020 crash, COVID crash, so traders who sold the triangle before the market bottom lost 92K, while those who entered after the market bottoms gained or made about like 28K. So same crash, but same different kind of outcomes. Many people, it's not easy to time the market. That's the main thing. You can time the market, but the history can teach us to time the market a little bit, to see what's going on and right now what's going on, and then see, hey, we can trade this. So chasing the richest premium during the market trace can be costly. It often reflects with the highest risk. So this is the perfect example. When you trade this, and that time people who wait for this actually make money instead of losing money. It's interesting. So let's go to the next slides. It's a little bit of long slides. So when you go to the next slides, you see this is like a perfect portfolio scene. So anyone you can forgive anyone who is managing your portfolio. So setting at the bottom, when you have like 100K a portfolio, you held through 2008, which was a major sell-off again. So it became 484K. And when you sold at March, after 1 year, it froze actually to turn to 43K. Why? Because that time the market was at its lowest. So you just broke your premiums, and then you lock in your risk. You didn't get the time for your volatility to kick in, and then you can correct more premiums. So selling at the bottom is the one mistake you can undo. It turns temporary paper loss into a permanent one and give you not the proper rebound you always just hold to get from the markets. We always say the markets rebounds, or markets always overtake, or markets just, if they're at bottom, it's always eventually go to at the highest, right? That's the market. So let's go to the takeaways. So the takeaways. So the first thing we always say at tastylive, we say sizing and management. That's the key concept of these kind of market highs and market bottoms. Know your sizing and know your management styles. That's the first fundamental which comes first. And another thing is the hard part of almost the traders have is waiting. When you're trading, you tend to correct more money as you go, right? You don't wait. You don't have the patience to wait so the volatility and the premium to kick in, and then you can correct more premium, which is intended for as premium sellers. So the hard time is like the hard part of this trading mechanism is waiting. So, and also saying to strength. So rich premium after sell-offs often reflect a higher risk, so not a better opportunity. So don't confuse expensive options with easy trades. That's the main confusions most of traders we do. So don't capitulate. So market crash eventually recover and overturns. So selling at the bottom is often an opportunity. So not only you lock in a premium. When you set a bottom, most of the time you lock into a permanent losses. So patience needs survivors. So and holdings works only in a company or your strategies. When you're trading, mostly the triangle, it's two double edge. Be patient. Manage your positions, size your positions, according to your portfolio as well. And also make sure you understand this is the best and the worst trading trades in market history you can find. Yeah.
Patience needs survivors. It's fascinating.
Nice line.
Yeah, right?
Yeah.
Bars.
Patience needs survivors.
Yeah, I think for me, the biggest takeaway is like when you have these big volatile moments and you're selling strangles, like really, if the market's down 30, 40%, I don't want upside risk in that period of time. I just want to be picking up bullish deltas. I think I would imagine if you looked at that graph where like in the high IV environments, you had the loss of $50.
Yeah.
I bet you it's 90% upside risk.
Yep.
That's where you're taking on the risk.
100%.
So you have to realize like specifically with the S&P 500 and NASDAQ, those products have always recovered. If you're looking at individual equities, there's no saying that a product has to come back to all-time highs. But with the passive flows and the way that these markets move, specifically the S&P and NASDAQ, the further down we go, the higher probability it is that we will recover over time. So you want to make sure that in those specific environments, you're not taking on too much upside risk where you get whipsawed and now all of a sudden you have tons of upside risk in a market that's likely going to recover over a year, 2 years, 3 years, 5 years. So I think that's the delineation there. But God, appreciate you.
Good stuff, man.
Good stuff.
Yeah,
Absolutely. Good segment as always. And yeah, it could be a very timely segment as well with the E-minis down 1%, NASDAQ down almost 1.5%. Ahead of the Fed announcement, we're sliding before the decision, which is really interesting. And we've got prediction markets kind of flopping around, hike 25 basis points, 25% to 27% I've seen today. So it's a weird day, and we should expect much more volatility this afternoon.
Yep. And we got a great segment coming up next on prediction markets. We'll stay tuned for that.
100%. But yeah, God, appreciate your time. We will see you a little bit later today. And yeah, E-minis flying around, down 70 now. Crazy day, but we'll take a quick 90-second break. We've got Greg for prediction markets coming up on the other side of it. You're watching Tasty Live.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Why do you want high IV rank when you sell options? Because you get more money when you open your trade. People get all tweaky when they don't know how a stock is going to act. They'll pay more for guarantees that are written into options contracts. And if they're getting super scared about it, they'll pay a lot more for the options. If you're selling those options, that means there's more credit you might keep at the end of the trade. Since IV rank measures today's IV against where it's been in the past, high IV rank tells you if people want to throw more money at you now. So look for high IV rank when you sell options. Pretty simple.
So you're an active trader, looking to increase your return, decrease your risk, or quite possibly both. Sure, you've heard of the Greeks. You know, your deltas, your thetas, your vegas, your charms, your vamas, etc. And you're wondering, hey, how do I use these guys to improve my risk-return relationship? Well, join me for a 10-episode crash course, and I'll show you exactly how to do it with all the gimmies and gotchas, one Greek at a time. We'll see you there.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
What's up, Tasty Nation? Welcome back to the show. We got E-minis down 60, NASDAQ down 320. My name is Mike. I'm here with Jermal, and we've been alluding to this all morning. We've got Mr. Greg Embree in the house, the leader, he led the charge, the prediction markets live on Tasty, and here we are. It's been a long time coming. How you doing?
Yeah, good. Awesome. Excited. We finally launched prediction markets on Tasty Trade. We now allow our users to trade the prediction markets from Kalshi on your platform in your brokerage account. So it's super exciting. We've seen really good adoption. A lot of people interested in especially the financial event contracts like CPI, a lot of the hourly index contracts, which is really exciting to see. And I'm happy to talk about it today. It's great.
I mean, what is it about prediction markets that makes it so interesting to people?
Yeah, I think it's really the simplicity. It's when you think about trading more exotic derivatives and you take prediction markets, you're just making simple yes or no decisions on events. And I think an interesting part of it too is when you think about CPI and how it relates to the S&P 500. You're saying that I think CPI is going to come out strong and the market's going to rally. Well, sometimes it doesn't always happen, right? You can express an opinion just on the event, on the outcome. CPI will be this, I think that, and you have exposure to it. So it's really cool.
Yeah, and I think that as these things evolve, you'll be able to do, what's the EPS on said stock and all these things. And that, because we've been at the mercy of that. We're like, I was right that they're going to beat it, but this damn stock is down. And now I'm not winning on this thing. But if you isolate that specific event, like that's where the cool opportunities come into play.
Yeah. Same thing with like the Fed decisions. You never know. Is a rate hike good? Is a cut bad for the market? You don't really know. And you can be really explicit in expressing that opinion on the market. So it's cool.
So we're always talking to customers about like liquid markets, where the most volume is. Where is that with prediction markets? You mentioned financial stuff a second ago. Is it also sports and to some degree too? Or is it politics? We're coming up on midterms. Like, where do you think people are looking the most?
Yeah, so I think from our purview, we offer a lot of the financial markets for now. We're very strongly considering outside markets too. Be it on elections, maybe sports eventually on the platform as well. Where we've seen the most volume, I think, initially is, again, in those equity index hourlies. Mm-hmm. Because if you think about like the zero DTE craze, like in being able to trade things on short expiration or short duration, you can do that through these hourly contracts too. Like, where will, the S&P settle at 11 a.m. and express an opinion based on that. So we've seen a lot of the volume coming to those hourlies and then as well the economic event contracts as well.
Sweet. Well, you have some talking points, the ways that you're framing this in your mind. We've got some slides. So why don't we walk through those and then we can take a look at the platform and shoot some of these out.
Sure. Sounds great. Yeah. So the way we think about this, like, again, it's a binary decision. It's yes or no based on real world events. So it could be from, like I said, the CPI month over month. It could be today's Federal Reserve rate decision, or it could be on an equity contract like the SPX. And again, like this is more. Think of this more as like making a decision or a prediction on the actual outcome. So you're not trying to worry about like, will price be at a certain level? You can get sophisticated in that, but you're just looking at levels and saying, okay, I think it'll be above here. I think it won't be above here, and you can make those decisions. So the way I like to use these two is basically as a hedge. If I know I have some option positions on that are expiring at the end of the day, you can take a hedge position using these with like a 3 p.m. expiration on SPX. So there's a lot of ways to think about it. It's sort of like an open canvas when these came out. So there's a lot of ways to look at it. I think as our traders start using them more, they're going to see like, oh, when I buy a yes, it's the same thing as buying a call. When I buy a no, it's the same thing as buying a put. And they're going to learn more about how they can create a risk profile on certain instruments using that. So it's really interesting.
Love it. Yeah. And as we stated, there's plenty of live markets right now. And we've been looking at the Fed rate decision. I mean, the timing is perfect for today because this is the first time that I can remember where the hike of a 25 basis point hike is still 25%, like still right now with 3 hours left until the actual decision. It's craziness.
Yeah. In fact, I have been looking at that for the past couple of days, and I see definitely an opportunity there because as much as it seems like an outsider now, you never know. Like there is a good chance. I mean, the market's been quite strong lately. So if you look at what we show, even it's for Fed rate decision today, it's 26%. So I think this is a really good opportunity for a little outlier for a very low risk. And like say I can specify a market order, I can do a dollar amount. For me, I like to trade and think of contracts, just like trading anything else. And if I do, let's do a 25 lot. And I see my risk reward and like what I stand to gain. We'll also see the bid offer. So again, this is like the spread, just like any other market. I can pay right at the offer. I can work the bid. For this, I'll just hit the offer. And I see my information. Great. Submit. And there we go, filled. So let's hope for a hike in the next few hours at the rate decision. But yeah, it's as simple as that. I think, it's pretty easy to get through and the decisions are easy to make on this platform. So it's cool.
Yeah, and everything's basically in line with what you already see. So like the review and send button being that orange button, it's the same sort of stylization. You can see these prediction markets in your positions tab as well. So if you have a number of different products, you can layer them in, layer them out, like however you want to look at them, which is nice.
Exactly. Yeah. So now I've got some options positions, and now my predictions here as well. So I'm just following that.
Nice. So, I mean, do you have any, sort of tips for us, for people, us who talk on air every day? Is there any tips for us as far as, things to talk about to the people? I mean, they're always asking us different things about trading and about options. I mean, is there any tips that we should help guide them to prediction markets?
Yeah, I think again, like Mike was saying, like the enablement's pretty simple. It's a very native flow that you've seen in Tasty Trade. You navigate to predict, and you're pretty much in this experience, and you can trade from here, and you can say your positions in your event contracts. I think the way to really position these and when we talk about them more broadly is about options. They are just binary options. I mean, for those that have been trading for a long time, remember that there has been many attempts at binary options at CME. There was Nadex. There was all these places that did these things. This is really like the simplest view I've seen in my career that offers these types of opportunities. So you can think of them as binary options, and as you get more sophisticated, like I just took a simple, yes or no here on the hike. I'm hoping for a hike here. But when you think about risk profiles against like SPX or the NASDAQ, you can really do a lot of like condors or spreads or derivative combinations that you want to do. And that can be just like you trade it in an option, so an option combination. So you can really manage risk in that way across any other positions you have. So they really are like a good options tool that expire on a shorter duration in some cases, which is interesting.
I just learned last night that, and I don't know, I mean, just based on something I saw, that one of the first attempted prediction markets was at the 1988 election in Iowa. And I was like, oh, interesting. It was at University of Iowa they were doing this. And kind of one of those things. So it's kind of fascinating to see that, how far it's come. And as you mentioned, there's been all these other attempts, whether it was binary stuff or, you mentioned Nadex. I remember that very well. So it's kind of fascinating to see it where it is now.
Yeah, definitely. I think you're going to see, I think this asset class is here to stay. I think there's a lot of uptake, especially in the retail space. I think you're going to see a lot more institutions being exposed to these as well. The liquidity has been outstanding. We've seen so far, even just through CalSheet. Lots of other venues are starting to list these as well. Cboe is coming out with some things, and there's a lot of things on the horizon. So, I think there's a lot to be seen, and these are going to be around for a while, I think.
100%. We do have a couple more slides we can talk through. And I think from my perspective, I like to use these as, filtering out the noise and just giving me the number, give me the probabilities. Like when it comes down to the narrative you see on TV, like depending on which network you're watching, if you're looking at CNBC or whatever other news outlet, like they're going to be saying something that's going to maybe skew your mentality. But if you take the numbers and you look at this, like there are smart people in the room that are trading these things, that are giving us the probabilities. And I think it helps us filter out the noise and get down to the intelligence of whatever market it is.
Exactly.
And then you can kind of format around that.
Yeah. And so there's a lot of ways to look at, that's one example. And I think one of the big ones that we haven't even listed here is when, obviously these bigger events like FOMC are repricing opportunities and the market's going to move around those. So you can really make a risk profile across a lot of different strikes and predict from that. The way I think about this too is especially with CPI, that's a number that is it takes, a lot of data, especially month over month of where is inflation going? What are factors that I look at considering inflation? And you can start making predictions, days, weeks before that announcement is coming out and get a really good price and get something that is maybe underpriced for where you think it could be. If there's a lot of data that have just come out that is saying now price of gasoline goes into CPI and that is suggesting a higher print, you can take advantage of that and make a prediction early and lock in a pretty low price well ahead of time of the event. So I find that interesting.
Nice. It's fun times. I mean, great. Again, like you said, it's not going anywhere because it's being discussed all over the place. And now we have it here at Tasty.
Exactly.
Yeah. Use it as a hedge, use it as intelligence, use it however you want. But thank you for inputting this into the platform. I know there's a lot of people that worked on this and you specifically, and I've seen the email threads. I've seen it all. It's been an amazing thing. So congrats. Absolutely. And it's again, perfect timing because we got the Fed rate decision in 3 hours. Then we've got a press conference just a half an hour after that. So get your prediction markets enabled in the platform. Again, if you just go to the prediction tab, you'll see a little pop up in the lower right screen and you can get it enabled right there. But Greg, appreciate your time.
Yeah. Awesome to be with you guys. Thanks for having me.
Yeah, man.
100%. E-minis down 60 points, NASDAQ down 300. What a day we have ahead for you. Not only the Fed rate decision, but also the M's of the Mag 7. You got Microsoft and Meta reporting after the close today, and a little bit of Robinhood too. So craziness across the board, but stay tuned. We got plenty more content coming your way on the Tasty Live channel as well as tastylive.com. We'll see you on the other side of this break. You're watching Tasty Live.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade. You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
We're back. You're watching Tasty Live. This is Confirm and Send. I'm Chris Vecchio. She's Liz Deerking. Liz, an exciting day here today. It's basically my Christmas.
I know I'm so excited to talk to you because are you feeling okay? You doing okay? You caffeinated?
Caffeinated, yes. Feeling okay, no. Probably because of the caffeination.
Did you expect this down move before the Fed announcement?
We can go right to the platform because we're going to have to go to Confirm and Send. Yesterday on last call going into the close, I went on put on a put butterfly in the NASDAQ just at the expected move to the downside here. We're pretty dang close there, Liz. I didn't give myself much breathing room. It's only 25 points wide. But if we were to get down here a little bit more and we stay pinned, maybe another 50 or 60 points, I'm going to have a pretty good day no matter what happens with the Fed meeting. So,
amazing. There you go.
Yeah. Look. This Kevin Warsh character, he's not a Powell or Bernanke or a Yellen. He has a totally different communication style here. And the rest of the FOMC doesn't seem like they're going to be on board with doing what he wants to do, akin to how the FOMC's usually gone along with a Yellen or Bernanke or a Powell. So just hyperscaler earnings plus a Fed that may start talking about having to raise rates. We have 7% bounce in oil today. Leaning a little bit of short delta going into today's decision didn't seem like a harmful thing to do.
No, it definitely wasn't. Now, do you think? Let me ask you this, and this is just opinions. I just need to know opinion. So the CME Fed Watch or CME Fed Tools is, I've never seen it so indecisive in a long time on whether they're going to leave rates or hike rates, right?
Sure.
What do you think is going to happen today?
I'm going to lean on the numbers, which is to say that, since 1997, going into the morning of a Fed meeting, anytime that the Fed has seen a 55% chance or greater of a hike or a cut, it has delivered in that direction 100% of the time. Okay. There have been 2 meetings where the market has seen like a 53% chance of a cut, and the Fed didn't do so. So that's why I put my threshold at 55%. So right now we're sitting at 30% chance of a hike? Yes. This would be a shocker. We literally would have never seen a hike in this context with the market pricing this lopsided. So I'm going to take the under and say they're not going to hike because it would upend a lot of what we presume to be the orthodox communication of the Fed and would probably throw markets into a deeper spiral. Which hey, if you're short Nasdaq or S&P, you're not too upset about that possible outcome.
So you're going with that he's not going to hike. So because most of the
no hike
population says no hike. Now, what will the market do? And I'm just, once again, these are just opinions because the market has a mind of its own. What will the market do if there is no hike?
No hike? Probably treasury yields rally even more.
No, I know the market. I'm talking SPOOs.
Oh, down. I think the market wants a hike. I think everyone, Jermal said that so well this morning. We think that the market needs a hike. The market thinks it needs a hike. The Federal Reserve is telling us that just wait a little bit longer.
So you don't think this down move is the price in the non-hike?
No.
So you think it could fall farther if it's a non-hike? I love asking these questions because, I just look at the numbers, not thinking what's going to happen when there's a hike or non-hike. So you think non-hike, how much farther do you think we can go? Oh, these are just opinions, Chris, and I'm not holding you to anything, and no one is.
Another percent easily for today.
Is the VIX the volatility portraying that?
Well, look at just the S&P right now, 53 points through the end of the day. So 0.75% still possible. It's not outlandish.
It's pretty. I always call these the odds makers. Take a look at this. You got a $53 expected move for the rest of the day in 0 DTE, and we've had a 53-point move today already. So this is saying that we're going to go back to unchanged, or we're going to go down another 53. That's all the numbers are saying to me.
That's what I see here too. Hey, Liz, you and I had the pleasure of listening to some stuff on this new prediction markets opportunity that we're seeing play out here. So we got a little bit of a shorter confirm and send today. We're going to jump right into the questions here. You can send your questions into us. Confirm and send research@tastylive.com. Research@tastylive.com, or you can put them in the YouTube chat. So if you're on the platform, come over to the YouTube chat, like, subscribe, smash the button. I have a note here specifically. Jim, we saw you in the chat yesterday. You didn't subscribe. What are you doing, man? Subscribe. So if your name is Jim, please subscribe. Liz, let's get to it.
Poor Jim.
I was talking with one of the producers before the show. It's like, how should we end the daily? It's like, we just call out someone's random name and be like, hey, Paul, by the way, thanks for watching yesterday. Please like and subscribe. And, surely there's got to be a Paul out there who's been watching who hasn't liked and subscribed, right? Let's just play the odds.
You got to go with the most common names and you'll be good.
Okay, so first question.
I'll read this one to you, okay? Because that hit for me. Bloom Energy was down 43% on the month going into earnings, then beat big and popped double digits after hours. When a stock gets crushed for a week and then explodes on the print, what does that tell you about how much fear was already baked into the premium before the report?
How much fear? I know people like to call volatility like a fear gauge, but it's just it's uncertainty. So, like, look, if you were short premium going into this, if your strikes were too tight, you're going to get slammed either way. If they were further enough out, you could have made money on this thing, even though it had the pop. So, I mean, yeah, when a stock gets crushed for weeks and it's going into earnings and it has a really, really high volatility level, it can be like a compressed spring. I like to use this analogy a lot around here, Liz, because I was really bad at physics in high school. Like, I got a 3 on my AP physics exam. One of the questions about like friction, I remember this, like friction of a puck moving across ice. I drew a penguin playing hockey because I just was lost in the sauce. I know I didn't get any credit for that answer here. But like, think of it like a potential energy being stored, right? And so when you have a big move in a stock, big high implied volatility, the chance of that spring unfurling and surprising you is greater. That kinetic energy release can push you beyond the expected bounds of a move. So if you sold premium before the report, the question wasn't just is IV high, it was whether or not you placed your strikes at the right place. Sometimes it doesn't work out. It didn't work out with me in Tesla last week when I was short, even beyond the expected move.
But so Bloom Energy was different though, because I'm long Bloom Energy, so I was watching it. Did it pop up? Yes. Did it open completely unchanged? Yes. If you sold premium, it'd be great. It only opened up $19, and it was pricing in a $37 or $40 expected move. So premium sellers, no matter where you were, you probably got paid as a premium seller. And right now, it's directly unchanged. It closed yesterday right around here, maybe a little bit higher.
A little bit higher.
A little bit higher. So I understand the question saying that it popped, but unless you're trading the stock after hours, there's nothing you can do.
No, there's really nothing that you can do in that particular set of circumstances. And listen, is Bloom Energy going to be one of those companies that is in the single stock futures right off the get-go? Probably not, right? And we know the answer. It's no.
Sure.
We can go to the second question here, Liz. Let's go to Microsoft reports tonight, and its options are pricing a larger than usual move. If I'm bullish, but I don't want to overpay for calls, how would I compare a call debit spread with a broken wing butterfly based on the upside move each strategy needs? So let's just head over to Microsoft real quick here. All right, Liz, this one's for you.
So this is, they wanted a debit spread versus a call broken wing butterfly, right?
Mm-hmm.
So what I think is interesting about a call broken wing butterfly is warning Will Robinson. If you break a wing on a butterfly, you can be directionally right. And if you're putting on an upside call broken wing butterfly, you can be directionally right and still lose money. So I would honestly, if you're bullish, I would compare a legit butterfly. You could still lose money if you're paying for a butterfly too, versus the debit spread. So honestly, if I'm bullish Microsoft and I want a debit spread, I would wrap it around the at the monies, and well, you are on the put side there. You didn't.
Yeah, sorry. You know, for some reason, I feel like the call and the puts here change sides every time I look at it. I'm very tired. It's just how it is.
You're gonna do a debit spread. So if you wanted to be bullish Microsoft, I mean, honestly, I would probably get pretty tight if you're bullish and do like the 400, 410. You can make it as wide or as narrow as you want and give your probabilities time to work out, right? Not time to work out, but your profit, your max loss, and your profit. You get to be the decider on what you want to risk. This is a bullish trade of Microsoft. You've got the 400, 410. You can make $628, and you're risking $372. That's a debit spread. Now, the upside broken wing butterfly would be leave it in those strikes and just sell, like, say, buy ones, sell 210s, and try the 240s, or I'm sorry, the 430s. Okay, and then sell 2 of those. There you go. So here you're taking into credit. So, and I understand you can shift these wherever you want. I'm not saying these strikes, but this is a broken wing butterfly where you're taking into credit. If you are taking into credit for a broken wing butterfly, you can lose money to the upside. Do you make more money if it goes up to 410 and your break even's 420? Yes. But when you break a wing and it goes, if you expect it to go outside of its expected move, you can lose money here.
Right. I mean, the call spread is going to be the clearer or cleaner trade. You don't need a precise landing. You just kind of need it to go up, get north of your long strike, your max profits capped. Okay, fine. The broken wing butterfly is going to be more precise. You know, you need it to land. Your max profit is going to be at the body of the fly.
Right.
And so if this thing starts to run, let's say Microsoft, there's so much negativity priced in, you wake up tomorrow, it's a 10% move to the upside. you were right about it moving higher. You're going to get your clock cleaned here because 10% to the upside from here would be at 430, and then all of a sudden you're looking at your loss scenario.
Yeah, which is a big loss. It's $939. You have to break your wings significantly in order to get it for a credit. Here's a symmetrical, like you said. And so take it to the 420s. There you go. You're only paying $1 for the upside. Now, granted, you're not going to get your clock cleaned if it goes to 430, but you will lose $1.
Next question here, producers. Buying 100 shares of Amazon is too expensive for me, so I'm considering a poor man's covered call for bullish exposure with defined risk. With earnings tomorrow, how would I choose the long and short call so one big move doesn't throw me off the full setup here?
So this is near and dear to my heart. Buying 100 shares of Amazon is too expensive. Then you go to a zebra. I look at a poor man's covered call completely different than everybody else. You want to pop in the platform, I'll show what I'm doing so that you can get some extrinsic value too. Open up the 23-day, Chris. I'm going to see if I can do this. Open up the 23-day. Sell 1 to 27.5 call.
Oh, always on the put side.
Yeah, you love the put. So 1 to 27.5 call. And then what am I getting for that? Then you're going to try to buy 250 deltas or wash the extrinsic value. So let's look at the...
Let's open up the deltas here on the tab.
Okay, buy 2... what am I getting? Buy 217.
217s.
Calls.
We'll do 2 of you.
So buy 1, sell 2. Okay, so this is going to replicate stock pretty quick. This is replicating stock. You can tackle it. It really is. Now, this would be my stock portion of the trade. So you're using $2,292. Still kind of expensive, but a poor man's covered call is going to be wrapped around there as well. But a poor man's covered call, you're washing extrinsic value. By using this as a poor man's covered call, this is your stock replacement. Keep this up. Now close this and go. Don't close this, but close this cycle and go to the 0 day, the one with the earnings in it.
It'd be 2 days then.
2 days. Go to 2 days and then sell at the expected move call. So go to the 242.5 or 245. And add that up.
240. One of them.
Yeah, there you go. So this is bullish. You have, if owning 100 shares is too expensive for you, this is a way to manipulate legit 100 shares of stock and selling something against it. You're getting the extrinsic value of the near term. You cannot lose to the upside. You can lose to the downside because this is replicating stock. This is replicating a covered call for less capital. I know it's a complex trade, but look up a zero extrinsic back ratio. It is a very powerful tool once you learn how to use it because it truly is a stock replacement for less capital.
Right. I mean, for the long call, you usually want more duration here. And for your short call, you don't want it to be too close to at the money.
Yes.
Because if this thing gaps open and runs higher, you got a little bit of an issue on your hand here.
Not if you don't. If it runs higher, you don't have an issue on your hand.
Well, I mean, if it goes up to like 250, 270?
No, there's
2 days?
You can never lose. You can never lose on this trade, Chris, because you have stock. That 23-day is a stock replacement. So there is no scenario in which to the upside you can lose money on this. So this is a true stock covered call replacement.
Oh, okay. So what I'm thinking is the way that I view this is like this should become a capped mess if this is rallies too far, too fast tomorrow.
Conceptually, I want you to think of it. You have a covered call. You own stock. So when I read this, they said it's too expensive to own stock. So this
Yes.
is an options way to own stock and sell something against it. You cannot lose to the upside.
You're pointing out the buying power here is $2,000. If you wanted to own 100 shares of Amazon at $228, that's going to be only $23,000 out of your account.
And so this is my forte. This is, you give me like complex options are my wheelhouse. Like economics is not. Complex options, you want to own stock, that I can do.
That's why we're a good team. We go to the next. SanDisk here. This is kind of a classic question.
Is this 4 or 3?
4. This is numero 4.
Okay, so SanDisk is down more than 50% from its high and is testing the 200-day moving average. What would you look for in skew, implied volatility, and the term structure to tell whether options are pricing a real bottoming process or another leg lower?
Great question. Where do we want to start? Okay, so first things first, if we're seeing a market in decline, we want to see downside put demand stop increasing. Okay, that would mean the prices of the options. Every time there's a flush, do we see the options that are sitting at the expected move get more expensive? Or are they staying static, right? All things considered. But if volatility keeps expanding as the market is in a bit of a slide, then you're not seeing any sort of skew stabilizing. That also is a point. If the market is going to stabilize, whatever put skew you see probably is going to flip back over to call skew. Folks are no longer aggressively pushing for that downside protection the way that they once were. They're trying to mark a bottom. And Liz, as we know, there should be put skew naturally in a market. So people they own the stock, but they pay for the downside protection. So the downside is going to be a little bit more expensive than the upside. If you're in the middle of a sell-off and all of a sudden you get call skew there, maybe you're finding a little bit of a bottom. And then, what's the context? We always talk about this. Is it like an event risk? Is it tied to earnings? Is it a Fed decision? Is it a war? Is it something that happens overseas with regulation? Or
can I say yes to all those things you just said? All of those.
That has been this year. That's been the entirety of this year.
Yeah.
But there's a lot of things that go into it. So you have to check some boxes, I think.
So can you, just for Jim, that poor guy in the chat, I'm just kidding, I have no idea who Jim is. Can you show what you're talking about with skew? So go into the options and show how, just because you and I take it for granted, I know what skew is, you know what skew is. And so just to kind of visually show what they're saying, if you go to the expected move or equal sides up and equal sides down, and you price the calls and the puts, that'll give you the skew.
Which should be pretty easy. We're bouncing around 1025 right now. So if we were to go out to say, just go 1015 or maybe 1005, we'll go $20 wide and then up to 1045. You could see now that the 1045 calls are trading at 50.50. The 1005 puts are trading at 48.30. And one of the little wrinkles here in some of these chip names in recent weeks was that when they were in the midst of their more aggressive sell-offs, what did you see? There's a lot of put skew still. And then 2 days ago, what did we have? The largest volume candle in SMH ever. Capitulation, flush out, institutions jumping the border and saying we're done. They're no longer fence sitting, right? Maybe this is a sign that we're getting closer to bottom, but bottoming is a process, particularly in names that have run like 500% over the course of a few months.
Oh yeah.
So if you're trading these things and you really have a long-term memories just going through a correction because of leverage, give yourself a little bit more time. The market certainly, Liz, one nice thing about these names here, I can go out to 541, maybe that's an artifact. So we'll go 323 days and still find options where the implied volatility is north of 100%. We don't need to go too short term in these memory names right now to find volatility. We can get a little bit of slack on our line, on our rope, and not be hoisted by our own petard, as it were.
So you wouldn't go that far out and sell premium though, would you? Because so when you're looking at that, you're maybe buy premium in 100% applied volatility.
Oh gosh, no. But we talk about typical Tasty being 45 in, 21 out or so. I know folks are getting a little bit more short-term in nature, but at 23 days, at 51 days, these are the monthly expirations. There's still, let's go to the volume and open interest. There's decent open interest in some of these strikes. I wouldn't be calling the bottom today at the 2 days, for example, just because we got to our 200-day moving average.
No, and I no, definitely not in the 2 day. But so, and I know you were kind of saying, is there a war? Is there this? There is earnings, so it's not in the 2 day. The earnings for SanDisk are when they're just
August 5th, next
5th.
Wednesday.
So that is why there's also this high implied volatility that will filter down through there as well. So not only do we have the war catalyst, do we have, like you said, people are jumping ship. We also have earnings on deck. So keeping an eye on that skew going into earnings, to me, is going to be pretty important.
And if we start to see skew flip back over negative going into earnings, what's the market so afraid of? Why doesn't it want to pay for upside? Why is it still worried about downside? I can't believe SanDisk was nearly $2,400 a few weeks ago, which, Liz, we shared this in one of the morning notes and here on air one morning back at the end of June. SanDisk was spun out of Western Digital in February 2025, right? SanDisk.
It is 2026.
SanDisk sold all of their remaining shares. Where is it here? That is the day on the calendar, June 29th.
That's pretty.
They sold all of their remaining shares in SanDisk on June 29th.
Western Digital sold all their remaining shares in SanDisk.
And since then, it's been cut in half. I find that we were talking about this, and it should have been, maybe you should have taken it more seriously as a sentiment signal. But when the parent wants to abandon the child, probably a tell.
You know what, Chris? When you put it like that, that should have been a tell.
That should have been a tell.
Now, are you doing anything in SanDisk? So for me,
no,
I'm not going to catch a falling. I'm not going to catch a falling knife here. But it also, looking at that chart, has it fallen from grace? Yes. Is it still up hundreds of %? Yes.
Yes, it was a $250 stock, so it's still up. Still 4x this year.
Yeah.
I put on my CFA charter hat when I look at stuff like this because surely something had to have materially changed with the underlying business in a bunch of these names, and I just don't see it going through their earnings reports. So that's why I keep saying this is all a positioning game. But I think we're getting a generational discount in some regards.
So you typed in SK Hynix, and I heard you on the morning show. So they had earnings last night?
They did have earnings last night. They missed expectations. All the American analysts are caught off guard. All of the Korean and Taiwanese analysts thought this was going to happen. I don't know.
My microphone
the folks who are closest to the situation, they're the ones who I trust
What's
the most.
going on, everybody?
Right? They have the business contacts on the ground.
I hate BuzzFeed.
Yeah. Can we hear? Can the viewers hear them?
No.
Okay.
Just us. The voices in our head.
They're just in our head. Okay, good. No, but it is. I do like looking at this, and it was interesting that they had earnings already. But you were saying on the show it's an established company, so you're right. They kind of. Was there anything to do in this prior to? I didn't see the earnings bar in SK Hynix.
Is there anything to do?
Was there sell premium in this? Are you in SK Hynix right now?
No, I'm not, because we know at the end of this month we have this ADR conversion, which at a point when it was sitting at its high here on July 14th, it had a 50% premium to what it was trading to in South Korea. There is a reasonable idea for why a company like SK Hynix would want to list here in the United States. There's a lot of research out there that shows that companies that aren't listed in the US but are listed in Korea, particularly in the tech sector, can carry up to a 10% discount on their shares. So a U.S. listing, in theory, should actually help SK Hynix realize its true value. The problem is that the U.S. ADR was trading 50% higher than the underlying South Korea shares, and that's a little bit more than the 10% premium makeup, if you will. So it's obviously collapsed.
So it's something they have to kind of meet, don't they?
They should, and the ADR conversion is the end of this month. So here we are.
Okay. And so is there more to come down? Do you think is this it?
There's probably more to come down, but SK Hynix is also like, it's not really trade today per se. I'm thinking about a much longer term perspective here, Liz. Maybe going out to the Januaries and looking out at the expected move. Only because their business model portended a slowdown in sales in Q2 because their new sales efforts for this new production of the high bandwidth memory chips that go into AI starts in Q3. So the Q3 numbers are going to have sales reflected in it that weren't feasibly possible on top of all the other business here. I trust the analysts on the ground who are living in the towns where these factories are more so than the folks like myself who take the subway to work down to Wall Street to tell billionaires how to spend their money.
That's true. True words have never been said.
We'll go to break here then. In that case, Liz, we're done with Confirm and Send. So send your questions in for tomorrow. Research at tastylive.com. Research at tastylive.com. You can always put them in the chat here on YouTube as well. We are taking a brief break. Liz, it's always good to see you.
Happy Fed Day, Chris. You have a wonderful afternoon. Good luck with your earnings.
Happy tech earnings, too. We'll be back in just a little bit. Gus and Errol from the floor of the Cboe coming up next here on Tasty Live.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade. You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Global markets never sleep. Explore them with Forex. Now available on Tasty Trade. Get in on over 80 Forex pairs. 24 hours a day, 5 days a week. with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
What is going on, everybody, and welcome back to Risk and Reward. We are live from the Cboe floor today. They told me last week that I need to project my voice more, so that's what we're going to be working on here from the Cboe floor today. I'm joined as always from my wonderful co-host, Errol. Errol, how you feeling? What's happening?
Feeling good, feeling great. Hope everybody else is doing well. I know we have FOMC later today. One of the most common questions that I get is, are you buying or selling FOMC? And I say, I don't know. I'm going to wait for the news to come out, see how the market responds, and then we'll manage some positions, put some new positions on. But we got a lot of big earnings. We got some FOMC today. It's Warsh's second time being up there. It's going to be interesting. I'm looking forward to the memes, so I'll put it that way.
I am as well. We're kind of carving out a new meme culture here. We got to figure out what the Warsh memes are going to be about. So maybe he needs to. We'll figure it out. The tie colors. I'm sure somebody has an Excel sheet ready to go to track all these tie colors. FOMC. And I'll tell you what. And this is a recent development, but just in the last 6 months, when I start hearing FOMC, my brain goes to that being a ticker first. Right. And I have to sit there and it takes me, half a second before I'm like, oh yeah, obviously that's
4 letters.
Yeah, it's 4 letters. But I don't know why that shift has happened. But when you said FOMC, I just did it again. I'm like,
what ticker is that again?
Is that Fortinet? I don't know. I don't know what ticker.
It's another IPO.
FOMC. Yeah, not a ticker. Nobody wants it. Everybody's scared to take the ticker FOMC. Somebody do it.
Yeah.
But yeah, we got all kinds of interesting movers in the market today. We got memory space rebounding a little bit on good earnings for Seagate, kind of propping things up there. Western Digital tracking closely alongside that. But we can let's jump straight into the Tasty platform here, and we'll take a look around and talk about what we're gonna be getting our hands into today.
Yeah, 100%. Just for a quick tour to market, volatility is up right now, up about 1980. Is that accurate? It is accurate, straight from the feed itself. So volatility just shy of 20 right now. It's looking like volatility is starting to cluster around that 19 area. Maybe we get a pop in vol. Maybe this is just teasing us and maybe we cool back off. But volatility up on the day so far. SPY down on the day so far, down about 6 handles, just shy of 1% on the day. And if we take a quick look at NASDAQ, we can find that the NASDAQ market, we're down a little bit more on the day, 370 points to the downside, just over 1%, 1.3%. How are we feeling so far about this?
Fine. I was actually interested. I don't know, not really surprised. I guess a little bit surprised to see a little spike that we caught in VIX today. At least seeing it this high, testing 20. I kind of felt like after the slight drawdown, we could tell that we were going to open down, that we would see VIX take a jump to, I don't know, the high 18s, low 19s. But seeing us pushing 20 in this environment is interesting to me, particularly considering how compressed we were yesterday headed into all these binary events. But obviously, fear running a little bit higher in the market right now, ahead of FOMC, ahead of hyperscaler earnings going off after the close today. So there's a lot to keep in mind there. Also, I just noticed as I went to pull up the chat, I noticed that our stream is titled about oil, and we should absolutely talk about oil. Oil is flying again today. I forget who it was in the chat yesterday saying you have 132 USO calls, but those looking a little bit more alive today than they were yesterday. That's for sure.
Yeah, it's looking like we're getting a pretty big gap up. I know I had taken off my oil call yesterday, which I'm not too mad about. I didn't really like the risk for reward. I didn't like taking that much drawdown, but it is nice to see oil's back in the game because I know a lot of us are still trading oil right now. I mean, you made a point yesterday how volatile oil is and how quickly it can rebound. And I mean, we've seen the gap up over last night. Not too much of a continuation today, maybe waiting for that FOMC announcement to get a little bit more clarity on what oil might do next. But yeah, 100%. I mean, the volatility is there. Oil's up on the day. And if you were trading that 132 call, it might be up from where you purchased it. If you purchased it on this red day earlier this week, what was that on like Tuesday or Monday? So a lot of volatility there.
Yeah, oil just in such an incredible spot. You know, to go back to the age-old analogy that I always draw from. If somebody came to me and said, I'm from the future, I'm from January 1st, 2027, and USO is at 150, I would say, oh, okay, that makes sense. I'm not surprised. And similarly, if somebody came to me and said, I'm from January 1st, 2027, and USO is at 75, that wouldn't really surprise me either. I have no directional bias on this right now. It's so news-driven, and that news changes every day, and a lot of times it's not even real. So yeah, it's a very interesting spot for oil. I'm not stepping in front of this, but whoever had the 132 calls, did somebody speak up about that? Was it Ranch? I'm not sure. But
it was Ranch. Good memory.
Was it?
I believe it was.
I don't mean to guess like you. Good memory on you.
No, I believe it was.
I'm taking a stab. I just saw Nice Boy talking to Ranch about.
I saw it in the chat yesterday. You're right.
But yeah, it's the guy that got kind of caught the Hail Mary here that you needed. So congratulations on that. What's going on to everybody in chat? Sam L says, good afternoon, Gen Z. Good afternoon to you.
What is that? What is that supposed to mean? It sounds like Jerome Powell right there. Good afternoon. I don't know if that's a hint.
My fellow traders.
Yeah.
What's going on? Ranch, Nice Boy, big deal. Good to see all of you. What's that? Kelpottle Pog. It's getting demonic, he says. Perhaps it is. Ranch. Oh, yeah. I probably could have squeezed a little more out. It was a 133 strike. It was you, Ranch, but I misremembered the strike. My apologies on that. But happy you caught the recovery. This obviously could have gone a lot worse as well. Oil needed some spice. It got so boring. It did get a little bit boring there just for a second. I don't know. Honestly, it was boring for like 3 days. We were already catching the bounce, and then there was a slight boring period there before. Yeah, we get this to go right back. Trump making all sorts of comments this morning about the ways that we're gonna retaliate fiercely against Iran. So yeah, creeping back up in the oil market there. I'm still too scared to trade it myself.
I think oil's going to another all-time high. I'll put myself on the record there. I don't know. I think the games that we're playing right now with the Strait of Hormuz, in other oil supplies in the world, it looks like we're at risk of getting squeezed on some of our oil supply. So, I mean, with that being said, maybe a little bit more volatility to come. Yeah, that's just my opinion, though. It's no recommendations, none of that.
I agree. I think higher is more likely than lower. If you made me trade it directionally, I would probably choose to get long here. If for no other reason than nothing like crazy has really happened with this Iran situation yet. I mean, there's been little conflicts, these little exchanges, there's been ships sunk, but it hasn't, nobody's really launched the all-out war here. We haven't gone all out ground invasion. Iran hasn't gone all out, blow up all the ships. They did for a second there, but it's been this fickle thing. And so if you made me take a directional bias on oil, this feels like it's going to re-escalate to me. And if the big thing happens, whatever the big thing winds up being, somebody fires at a military vehicle or whatever it may be, and all of a sudden this escalates into an all-out conflict, these prices are going to look cheap to us. So I would say I have a longish bias, but certainly not enough long bias to trade it. I think it's also a very real possibility that things just fizzle or we do this and kind of stagnate in this channel forever before things eventually cool. So,
I mean, to the point you made, it's what's made it kind of difficult to trade this oil market, right? The fact that there hasn't been any decisive actions taken about these headlines, and it just makes it very wishy-washy in terms of what the oil market might want to do and how people want to position themselves. So a lot of speculation in there, but speculation can also equal opportunity depending on how you look at it.
Yeah.
I'll be patient for it.
And all that is just, if I had to have a bias, I think if you made me trade this, I would actually choose neutrality at this point. To me, this feels like we might just continue. I would go very wide with my strikes, but this feels like we might just continue in this, nebulous on again, off again sort of thing where we're in an abusive relationship with Iran. It's like we both want to leave, but we just can't leave each other alone. We both want separate things. So it's a really wishy-washy sort of situation, and I wouldn't be surprised if we just channel in this relatively big 100 to 150 range, speaking in USO prices, for a little while here as things heat up and cool down and heat up and cool down. And there's obviously a lot of premium to be had with the volatility in the stock right now. It's product.
Yeah.
Beyond that, man, very active chat today. Hello to all of you. I see a cheat. I see Adrian. I see Darker. Welcome in.
What's going on, guys?
Hello to you. But I mean, as far as what's jumping out at me in my portfolio today, when we were doing our audio check, I was just talking about how I hate BuzzFeed. Let's take a look at that.
This makes 2 or 3 times we looked at BuzzFeed at the Cboe. This stock,
What was it?
stock goes down on Wednesdays. BZFD.
BZFD.
Yeah, you're close. You're close.
I didn't even recognize it. Click S. There we go.
But we continue to work down on BuzzFeed here. Another day at the top of the portfolio for me, down another 5 cents today, which constitutes over 4% on a product this small. But yeah, this feels so dead cat bouncy to me right here. It's like we just barely tried. We had 2 days where the bulls were like, maybe there's a chance here. Suddenly we're starting to give all that back. I feel like the momentum is getting sucked out of this. And yeah, sub $1 is when I would kind of begin to exit these. As you guys may recall, I have 25, count them, strikes at the, 25 puts at the 50-cent strike, January 15th of next year, 170 DTE. But I would certainly look to take off about 10 of those, get close to having that position under $1, at which point all the other ones would pretty much be covered. And I could look for maybe getting them in the money or maybe something more like 75 cents. But I just don't buy this thesis at all. I think that this whole balance is fugazi. And I'm not surprised at all if we see a return to like the 80-cent level on BuzzFeed before the end of the year.
Yeah, 100%. And I mean, it looks like it's just above that gap close too. So maybe it drifts down there. And I mean, we were just trading at that 80-cent level just not too long ago. I know we're on the daily chart right now, but I mean, at the beginning of this summer. So not a far ways away. And it seems like that trend continues to sustain to the downside. So.
Yeah, we've talked before about how trading options really keeps you in check on what the data is and how far away things are. And yeah, it's like, I mean, it feels like January of 2027 is this thing that's far away, but it's really not. 170 DTE, it's like, that's right there. I mean,
on the corner.
I got to catch the big move sometime in the next 3 months or all of a sudden theta is going to start to be a problem with these. So yeah, definitely, it keeps everything in check. I was shocked yesterday when I realized that it's August this weekend. Yeah. Crazy town.
Wow.
Beyond that, Pepsi, let's do PEP. Talked about this one yesterday as well, but we continue to climb upward on Pepsi. I'm going to go ahead and take another one of these off today. I took one off yesterday on air to take me down from 3 to 2. I'm going to take another one off to take me down from 2 to 1 at this level. We will go ahead and pop this exit. I have I'm long here. I have a 145, 150 bull put spread here. So yeah, content to take profits on another one of those. Instant fill for better than the mid price. We love to see that. So we are down to just one left on Pepsi now at 23 DTE. Probably going to let this one run and look for that 150 level. I talked at length when I put this position on about how I wasn't really expecting the 150 level to come to fruition. I was more just looking for a gap fill up to like 142 and hoping that Gamma could do the rest for me. But that gap fill has come swiftly and we've moved clean through that level. So all of a sudden 150 seems to be back in the equation and I'm moving the profit target.
Yeah.
No one has ever gotten hurt moving the goalposts on their profit target. This will be fine.
It might end up working out. It's got a lot of momentum to the upside.
A lot of momentum. So, everybody go buy some Frito-Lay products for me, please and thank you.
Yeah. What else is standing out? I know we have some meta earnings today. Are you trading any earnings this week? Are you more of a post earnings guy? Wait for the exaggerated move and then get something on after that.
Yes, I'm a post earnings guy in general, and especially this week, I am terrified of all these. There are so many things to consider. I talked yesterday or maybe this morning. It's things start to run together. I spoke recently about how, spending money on AI was cool 3 months ago. It's not cool anymore.
Right.
It was really cool. 3 months ago, you said, we spent $10 billion on this data center.
That's so early 2026.
Yeah.
Everyone give me the times.
Exactly. But
if I see a company put AI in their earnings report, I'm going to be like, you're definitely late to the game. Get out of here.
Yeah, exactly. So all that is so 3 months ago now. Now it's not cool to spend money on AI anymore. Everybody's scared of the AI spending. And so all these big names that are going off this week, we have the big four going off tomorrow all at the same time. Apple is the only one that I really have some vague interest in.
Apple's the top dog right now.
Apple is the top dog right now. I was joking this morning. It's just all's right in the world again. Suddenly Apple's the biggest company in the world. They're over 5 trillion. They eclipse NVIDIA. The
country's healing.
Yeah. Tim Cook throwing everything at the wall on his way out to make sure he leaves a legacy behind here. Yeah. So, it's obviously a huge milestone for Apple, finally at 5 trillion. But what does that mean in terms of Apple's earnings? And that's why this is the most interesting product to me. It's the only one that's clearly at highs. It's at these historic milestones. So we get into one of these situations that I like to talk about all the time where it's like, what could Apple show us to push this considerably higher coming off of these highs? It would have to be a lot. So I do have a short bias on Apple headed into earnings.
A new feature on an iPhone. Yes. If we consider that a lot, then so be it.
No kidding. Add another row of apps or something. Yeah. Give us the big long foot.
Been waiting for
hot dog iPhone that I used to see on Instagram for the iPhone 18 concept design in 2013.
We got close though, because back in the day, did we ever think phones would really be this big?
It's true.
So we got close. We just didn't get all the way there.
I could never believe, and I understand the appeal that they had to some, but I never did like the Max when they were doing the Max phones, like the bigger, you know, like they had like the 6, 7, 8. I'm not sure exactly when they stopped that, but the big ones that was almost like the size of an iPad Mini. That always
that was odd. That was weird.
People, lots of people had them. I mean, they sold.
No, that was weird. If you have one of those, that's weird. That's odd.
How many spreads do you put on at once, Gus? Says Brian. Certainly depends on the product. I try to do 1 to 2% of my total portfolio size per trade is generally how I scale things. So it's more about the cost basis of those things. That's why I have 25 of the BuzzFeed contracts versus 3 of the Pepsis versus just 1 of other things sometimes. But yeah, Apple just right back at the top.
Along.
This is the only one I'm vaguely interested in for earnings, though. Of all the other binary events we have happening, I'm not in any rush to get a position on an Apple.
That's fair.
Thanks, Gus, for DLR trade over earnings. Closed for a nice profit. You're welcome, AT. Happy to hear it. Yeah, that one was a nice winner.
Nice.
Yeah,
a lot of volatility in those names too.
Yeah. Caught the move that we needed, so I was pleased with that. We've since given it all back, but sounds like you're out and I'm out as well. So happy to hear it.
Yeah.
How do you feel about it here now? Oh, interesting question. DLR is still what he's talking about. I don't know. This is probably hands off to me. If anything, maybe gap fill to the downside, but I don't think I'm going to look to double dip here. This feels I don't know. This feels like a decision point for me because this is actually a really weird one where now this gap exists twice. We gapped back up through the gap fill that I was looking for. So from 186 to 183 is uncharted territory in recent times. So if anything, I think I would get short and look for that tiny gap fill down, but I think there's more meat on the bone elsewhere to attack. I want an AI software for my computer to only use my computer research. What? I need further elaboration on that one. Big deal. Apple has $146 billion in cash on hand. How about that? How about that shout from Frankie? $146 billion. Tim Cook, let me hold $1 million.
Yeah, let me hold a quick bill.
It'll be fine. Yeah, you're right. We should
market cap.
we should start high. Yeah. We should start high. Yeah. They started $1 billion, exactly. And we'll let them negotiate us down to $100 million, and they'll think they won.
100%.
Yeah. All right.
Take 90 million.
Good plan. If anybody wants to join our VC, let us know now. We're going to just say AI a bunch of times and see what happens. That's kind of all you have to do to get money these days. You don't even really have to have a working product. You just got to have a good, fundamentally good idea and wait for NVIDIA to buy you.
Good strategy.
Yeah. Last thing that's kind of jumping out at me in the portfolio today is just really the broader market. SPX. I have this Iron Condor on that I've talked about a number of times. Between 7,400 and 7,600 SPX. 23 days from now, August 21st. This is right where I want to be. I feel so good about this position right now.
Exactly where he wants to be.
Yes, like I said, I'm really more concerned about this being tested to the upside, especially in the broader drawdown that we're seeing right now. As I talked about with Chris Vecchio on Overtime yesterday, though, when we look at the broader market, what is it? RSL? This ticker always escapes me. RLS. Somebody tell me the equal weighted S&P 500 ticker, please, in chat. I don't know why it's escaping me right now, or in my ear. Whoever can get here first, I would appreciate it. But if you look at the equal weighted S&P 500, it's actually been growing this entire time. So when we talk about the NASDAQ being down, we talk about SPX being down, it's because these things are not equal weighted indexes. There's a lot heavier emphasis on these large tech companies at the top that are sliding right now. When you look at the equal weighted, it just continues to climb higher. So we're actually seeing a rotation of capital here. The money isn't leaving. The market isn't showing weakness. RSP. Thank you, guys. That was really escaping me. RSP, equal weighted S&P 500 here. We're just growing. We just continue to grow. So this is pretty decisive proof that the money is in fact just rotating out of tech names into more institutional names that people are more comfortable with. The financials have been having a great run over the past few months. So the money is still there. The market is still strong. It's just this tech sector that is showing weakness right now.
So it's a really good point. I mean, we got Coca-Cola at all-time highs right now.
Yeah.
I think we had Heinz at the highs right now, right? A lot of these legacy markets that's been around forever, they're pretty safe.
Yeah, Baxter International is growing. It's like,
everybody's still putting ketchup and hot dog and mustard on their hot dogs. As long as people are doing that, we might be good to go.
Can somebody tell me also, I've always wondered, because I'm not a ketchup bull myself. I enjoy ketchup on some things, but I'm not mustard out the ketchup. I do some mustard.
I'm a ketchup.
I throw down on mustard. I like acidity. I like mustard, onion, relish.
Completely valid.
I like it like it's a bite me. Yeah.
You like the vinegars that definitely a certain palate.
Yes. Yeah, exactly. But ketchup people, does the brand of your ketchup matter to you a lot?
Yes.
Heinz does a great deal of work to make sure it's Heinz ketchup. I got all these different ways to 2FA your ketchup. You care?
Yes. It's got to be Heinz.
It has to?
And whatever Heinz was doing, whatever marketing ploy, whatever they added to their formula for you to always want that specific type of ketchup, yes, they got me.
But like if I blindfolded you, you could tell Heinz from other ketchups?
Yes. And I'm sticking with that story.
Follow us on tastylive social media for when I test Errol on his ketchup.
If it's mustard, I'm gonna be so upset. If I'm blindfolded and it ends up.
No, I wouldn't blindside you like that. But yeah, there's so many ketchups. We can get some store brands. We can get some Hunts. We can get some Heinz. Do a blind taste test. But yeah, I know people are particular about the ketchups.
Yeah.
But and then Rocket Lab. I'd be remiss if I didn't acknowledge Rocket Lab here. My trade of the day yesterday. We're kind of in the nightmare situation, guys, but we're okay. It's going to be fine.
Everybody just calm down.
It's going to be okay. Look, this was a very aggressive trade. I mentioned that I was going to have to manage this one very closely, and this is basically the nightmare thesis that I outlined as I was giving out this trade yesterday. We have immediately gotten the big move down to all of a sudden testing our strike here. I don't love this position that we're in, but I'm going to continue to hold probably through the end of the week, barring tomorrow being something catastrophic before I decide to manage this one. But I just feel like the bounce for Rocket Lab is inevitable. I gave myself $5 of wiggle room here. So now that we have used up 4 of those dollars, things are feeling a little dicier, but as long as we stay over 60, I feel content. And even if we were to test that 59, 58 level, I may be willing to continue holding through that. It's just, this is a really, really bad start. This is what I was describing yesterday as what absolutely could not happen. It has happened. So this is one that I'm going to be tracking very closely. I do think that we could absolutely see a bounce. Like I said, there's really strong support at these levels. I'm really content all the way down to 57 flat. Under 57 is kind of when I would start to hit the panic button on this one, but feeling okay. And this is why I gave it 80 DTE, is because I didn't want something like this to happen and all of a sudden it's a 30 DTE position and we're just cooked. So we have earnings happening on August 8th, I believe. So that's through the duration of this contract, August 10th, rather, allow me to correct myself. But we have earnings happening August 10th. That could certainly save us. This is a really strong support level. And man, if you look at analyst price targets on Rocket Lab right now, holy cow, like 170, 180.
I was going to say 180 or what?
Yeah. Well into all-time highs are a lot of these analyst price targets right now. So the belief is there. We just need that belief to begin to extend to the market. And if SpaceX could do anything, I think it would really help. I think if we could get a solid bid in SpaceX, get us a move up to at least like 120, like something respectable, that would do a lot to help this entire sector.
I can't stand SpaceX. I mean, I have the added money put spread on SpaceX. Expires August 21st. August 21st. It was a $5 wide. We sold the 135s, bought the 130. We collected about $1.70 in credit, so our max loss is going to be about $330 on that. So, I mean, with that being said, SpaceX has been another one that just continues to slide to the downside, trying to find that level of fair value. We're in just straight price discovery mode with a lot of these IPOs. So I know we IPO'd at 150 on SpaceX, clearly getting chopped in half. We'll be patient. We'll see what SpaceX wants to give us. But I mean, outside of that, that's got to be the one in the portfolio that I really wouldn't mind if it was out of the portfolio. But because it's already sitting at a max loss, we have 23 days till expiration. Might as well keep it in the portfolio. Maybe we get some type of miracle rebound and give ourselves a chance. So that's going to be the play there on SpaceX. We did a little bit of SPY yesterday. We sold an out of the money call spread there. Really happy we did that because I had a little bit of long delta on in the Qs. And the Qs have been getting hammered over the last couple of days, this entire week for the most part. So getting on that SPY call spread was hedging that position just a little bit, which makes you feel a little bit more comfortable if this overall market were to continue to slide. Not NASDAQ, at least, the NASDAQ market, at least. But I think a lot is going to be at stakes with this FOMC announcement later today. So I'm not really doing much until then in terms of directional positions, but it is nice to get on some hedges there. So got the SPY trade on, the QQQ trade. You can call it kind of an iron condor, but in 2 different products since they're highly correlated. And then we also have the Google trade. Again, not a big earnings guy. We traded a little bit of Google for earnings. We originally sold it for, what did we do over here? We originally sold it for 230. Google started to slide to the downside, testing our put side. So we rolled the untested side down a little bit, collecting an additional 50 cents of credit. So now we have a total credit of 280, which widens those break evens out just a little bit. But a pretty boring trade. I'm not going to lie. I mean, we're down a little bit on the portfolio or on the trade in the portfolio. The Google position is up on the day, but I got to say, iron condors are probably like one of the most boring trades that you can take. They are genuinely one of the most boring trades you can take.
So you're rooting for nothing.
You're rooting for nothing. You're rooting for time to pass.
Yeah, exactly. You're rooting for time to pass. So it's like there's never going to be this one exciting day where it's like, oh my gosh, this trade is exploding. It's you need nothing. And rooting for nothing is a tough thing to do. Ask anybody that's ever bet an under in a football game how it feels to root for nothing.
And the only way this becomes exciting is whenever it's teetering around one of the strikes that you sold near expiration, and then at the last minute it goes out of the money and you reap max profit. That's like the only scenario that you might see a little bit of volatility out of those positions. But anyways, we'll be patient. We have 23 days left to expiration. It is nice to sell both sides, collect a little bit more credit. We got 280 of credit. So, I mean, we'll keep it at that. But in terms of directional positions, in terms of scalps on micro NASDAQ, we haven't done too much. Again, we got a lot of downside today, but it's a really difficult market to trade knowing you have FOMC later today. Not only that, we have a lot of prolific earnings coming this week, so it's really a double whammy.
We are in binary event city. It is, It is just a crazy time. FOMC. FOMC just being locked into the middle of the biggest earnings week. This is a really, really tough one to try to evaluate. Holding anything overnight is just terrifying.
Volatility above 20 right now. I was like, we're making new lows. Vol has to be up a little bit more there. So VIX at 20, I'll take it. I mean, another great opportunity to sell some premium. Maybe after this binary event, take advantage of the heightened premiums there. But I mean, good Lord, I really didn't expect such an extended downside move right before the announcement, right? Is that going to add more volatility to the downside after we've already sold off 1.5%? Are we going to have a little bit more of an inside day when they release the announcement? It really makes you think now. The price action headed up to FOMC. So we'll keep an eye on it.
Yeah, we need to get some of these nice TVs going in the Tasty Studio.
We should. That'd be fire.
Can I add that to the wish list, please?
I will say probably one of my favorite memories, probably going down, is seeing the FIFA World Cup games on one of the TVs and then the market on the left side. That's like peak.
Yes.
That's like, it's just peak.
It is.
That's so peak. Imagine watching the FIFA World Cup and then markets. It doesn't get better than that.
Oh my goodness. We got lots of chatter coming through about the ketchup debate. We gotta circle back on this one. Adrian says organic ketchup is so much sweeter. Not sure that's a good thing. Base 8. I bought Kraft Heinz back in April. Bought it when it was cheaper. Had over a 7% dividend yield. Really, really good dividend out of Kraft Heinz there. How about that? Base 8, good for you. That's the beauty. I don't know if you went covered calls, but that is one of the beautiful things about covered calls. If you choose to do it that way, it's probably better to have a real tomato rather than something filled with oil and high fructose corn syrup. Nice boy, I'm a God-fearing American.
Give me my GMOs. Give me my GMOs.
I agree. Commentary on Rocket Lab. Ranch says I like that it's 80 days out. I'm bullish Rocket Lab too. I agree. I'm still nice boy. I'm still very bullish on Rocket Lab. Have quite a bit of stock as well as options. I agree. And that's why I did the 80-day time horizon, because this is volatile. We know that there could be a little bit of pain to tolerate here, but I am shocked if Rocket Lab isn't higher than it is right now today, 80 days from now, and that's all that I need to make this trade work. In fact, it could be the same price it is today and the trade would still work. So I feel okay about that. Brian, with one of the sharper comments I've ever seen, the Whataburger spicy ketchup is the bomb. Agree. But Errol, Heinz is the best ketchup. Yes, Whataburger spicy ketchup is one of the only ketchups that I do actively seek out when I go to a place. Whataburger creamy pepper sauce is one of the superior dipping sauces in the broader dipping sauce market. That's all I have to say about that one. If I ever go to New Zealand, want to try to visit that launch site. Yeah, Rocket Lab has a sick launch site.
Do they really?
Yeah,
in New Zealand?
Yeah, it's like on a peninsula, like just right on the end, waves crash into a cliff, and they shoot rockets off right there.
That doesn't even seem like real life. Yeah, sounds like a Call of Duty map.
It does. It literally does look like a Call of Duty map as well. Yeah. Homemade naan. Need to try that again. Not so great. I like naan. I enjoy it.
Love me some naan.
Get it for work.
Garlic naan.
Lunch at work every now and then.
Oh yeah. Right.
Yeah.
Love me some
nonsense. Shout out nonsense.
Yeah.
Anyway, good. Good catch-up debate. Appreciate the contributions, because I needed to hear it from some real catch-up enjoyers, because I'm not one of them. I don't find myself in that camp. As far as other things jumping out here, let's see. Man, I still have. Let's talk about one of the worst trades in my portfolio. Let's look at Pfizer, FISV. Amid all of the financial, Pfizer, yes. Fair confusion. We got issues here. One's a financial company, one's a pharma company. They're both a little bit evil, all right? But Pfizer here, yeah, this one, holy, this is just like the worst trade. This is the worst trade I've taken in a long time. After this giant gap down, which you can see on the chart here, October, late last October, early last November, I got involved with Pfizer. This was another one, not dissimilar to my logic with Resolute, but it's this giant gap down on it's the same as my logic with UNH, really, is a better way to acknowledge it. This giant gap down on a fundamentally sound, large enough, too big to fail, at least relative to what happened to the company. And I felt like we would see some kind of recovery. I chose to take the gamma play. And when I say the gamma play, you guys, I took 125 calls, which is where this gap began. It's pretty much exactly at 125, looking for the full gap fill. I've had these open, like 200 and some odd days. I put this on for September 18th of this year, and holy cow, have we not gotten the move in any sense of the word. We've just continued to work down. This one is just brutal. I am up $4 US currency on this one today after this relatively large move. We're getting the upside. It's the third or fourth 3% day in a row here for Pfizer. So it's going to be too little too late for me. But just a reminder that these gap fills are far from automatic. We miss a lot of them. And this one was definitely a big miss. Yeah, but again, this is another one where it's just Hail Mary territory at this point. I could get this off for $5 cash money right now if I wanted to. I think I'm going to continue to hold that and see if we can't make something happen, because it was over $400 when I put it on.
Yeah, no, I mean, that's really interesting because it's looking like Pfizer was having a really good run. I mean, a pretty steady run up. Things got pretty aggressive on the backside, but it's kind of crazy to see the volatility really dwindle out of this as time has gone on, especially because, again, it looks like it was one of the most comfortable stocks continuing to ride into its all-time highs.
I was about to say, I think if you have a sports stadium named after you, that kind of makes you too big to fail. But then I remembered the Astros used to play at Enron Field, so I'm gonna roll that one back.
Which stadium is Pfizer?
Pfizer is the Milwaukee Bucks. They play in Pfizer Forum. I think that's still the name of that stadium. Somebody can correct me if I'm wrong. I'm sure we got somebody in the Milwaukee area in here, but it certainly was Pfizer Forum for a long time. I like the Whataburger Jr. double meat with cheese. I think it's number 7. I love it ranch. I'm a sweet and spicy bacon burger man myself. When I lived in Texas, I'd work in a Patty Meld and avocado bacon burger every now and then. But now that Whataburger is much more of a rarity, it's sweet and spicy every time I go. Just got to get one in Tennessee this past weekend. I was very grateful for that. It's not too late to follow Gus in the Rocket Lab trade. No, sir, it is not. In fact, you could get a much better entry than I got if you are so inclined to grab that Rocket Lab trade right now. Ranch, when my son was in high school, he would get a triple Whataburger, says Frankie. Yeah,
that's a growing boy, right?
That's serious business. That is a growing boy. That is a growing boy. When I was in college, I would do the sweet and spicy meal, large fry, large sweet tea, and I would get an additional junior sweet and spicy to stock and have later that day. That was always kind of the thing. Especially in the app, there was often like a buy a full meal, get junior sandwich for free situation. So you roll it up. Fast food apps. Still OP, to my understanding. Like the McDonald's app, crazy. McDonald's is not good value anymore, objectively, but if you have that app, it's good. You can get good value out of it.
I think I might still have the big 5 apps on my phone, so I might have to update them a little bit, but I'm pretty sure they're still in there.
Yeah. I wonder, do McDonald's points ever expire? If they do, I'm probably out. I had a lot of them at one point. I had a McDonald's in my neighborhood. NNE on its lows. Nuclear energy out of the question. NNE. I don't know that I'm familiar with this ticker. Nano nuclear energy. That's cool. This sounds like a TV show company. This sounds like a fictitious company. Yeah, I work for Nano Nuclear. But yeah, off its lows. I like the nuclear trade, guys. I don't understand why we're not seeing, because look, I don't want anybody to say what I'm about to say is stupid, because it's going to sound kind of stupid when it comes out of my mouth. But I don't understand why the mounting fears in oil aren't pushing nuclear up a little bit. Let me give my caveat. I understand that oil is going to come back sometime, and we are in no position to make a full shift to nuclear right now. But I do think that there should be at least a little bit of sentiment that's like, man, these oil prices fluctuate so much where people are surely going to want to move away from oil sooner rather than later. Let me buy some nuclear. I don't know why we're not seeing any of that manifest right now, but I'm high on nuclear stocks. I'm high on nuclear energy objectively. I think that's probably the real future if we want a good, renewable energy source. I don't think renewable is the right word, but an infinite, I guess, is a better word, energy source. I think nuclear is the way that the world is going to choose to go. Everybody's still scared about Chernobyl. That was so long ago, you guys. We still thought cigarettes were healthy when Chernobyl happened, all right? We've made a lot of scientific discoveries since then. Love nuclear, love GE Vernova, love Oklo, all these companies in this vein. So, and any off the lows, I don't hate this at all. I actually might get involved. Big deal. This is a good shout. Let's go. Let's see what we can do. I want to give this some serious time. What about I'll go for this January 15th, 2027 expiration cycle. I'll have a lot expiring then anyway. What if I wanted to get over 20 by then? What kind of premium will they reward me with for taking such a gamble? $40 buying power, $60 in credit. That's not even that good. I'll grab 3 of them.
I'll take 4 bottle of salt.
Shut up and take my money. Okay. Insta fill there at the mid of 60. So 1.5 to 1 risk profile on that one. But I'm content to get involved there. Pretty much anytime you shout and say, hey, there's XYZ nuclear company is at its year-long lows, I'm pretty much willing to scoop those. The similar attitude that I have towards bonds. Speaking of bonds, let's pull those up.
TLT, what we got going on today?
It hurt today, unfortunately. I thought it looks like this was going to come through for us at the very end here, but the 16 GTE needing TLT over 85, not feeling as confident in this position anymore. We've given back yesterday's gains. Not a big enough candle to call it engulfing, but we have moved past yesterday's lows rather. Yeah, a little bit, sketching me out a little bit here. Obviously not a fast-moving product, needing this type of move in 16 days. Probably not super realistic. How many of these do I have? I've got 5 of these. Yeah, I'm going to trim 3 for a loss right now because I'm starting to hate this more and more, and we are in a very marginal loss. So I'm content to just take my medicine on 3 of these and hope that the other 2 can recover. We'll see if we can get a fill there.
Yeah, no, maybe we see a little bit more volatility in some of these bonds after FOMC. Again, I am pretty surprised to see such a directional move in some of these markets prior to FOMC, because now whenever FOMC comes out, is that going to amplify the moves that these have already been moving in, or is it going to reverse these moves? And the fact that we've already sold off so much, it makes me ask the question, man, do we have more potential down? Like, what does this mean for some of these markets? Kind of referencing TLT here, referencing the overall market like NASDAQ. Surprised to see so much volatility prior to FOMC. We typically got a lot of range bound inside day kind of markets ahead of those kind of events, but again, we have a lot on the board this week. We have earnings. We got Apple earnings tomorrow. We have a lot of rotation going on. So there's just a lot. There's a lot to consider and speculate on right now. Seems that different markets are getting hit differently.
Yeah, I agree. Yeah, base 8 saying I'm long bonds. Yeah, and FOMC could save us today. That did kind of cross my mind as I saw this down this morning, but about $8 notional per contract in a position that I don't really think is realistic with 16 days left. So content to just take my medicine on that. And if FOMC does save us, it's very realistic that I could get those $24 notional back in a hurry. So yeah, not feeling too bad about that. SanDisk at 1,000. Thought it was just 2,300 a little bit ago. Yes, Chuck Bono. This guy got long SanDisk at 1,800 on the way back down. Hand up. Terrible at SanDisk. Please insert your jokes about the Gus inverse SanDisk ETF in the chat right now. But yeah, SanDisk just giving it all back. Really surprised to see SanDisk, continuing on this downtrend in a big way today, down another 8% today after the good Seagate earnings that we got after the close. What's Seagate done? Seagate's giving it all back too. Memory is dead. It's over. No, probably not. In fact, me saying that means you should probably get long. That's probably a good idea at this juncture. If anybody gets long SanDisk, just let me know and I'll throw on a small short to make sure that you can win.
No, it is really interesting. I mean, these markets are really looking like they might shape up to look very similarly to things like gold and things like silver right now. Some of those very momentum moves, those euphoric type moves that we don't really see in everyday markets. But this is gold right here, and it's starting to reminisce, some of these memory names just a little bit more.
What a world we live in, where there's like a super trendy tech name like this, and the first thing appropriately that comes to mind is gold.
That's why that run up in the metals was literally the most unhinged thing I think I've seen, and a lot of other investors maybe had seen in a long time. Like, we're talking about metals, running off of euphoria. Like, when does that ever happen? That doesn't happen every decade.
Yeah.
So we definitely lived through some history and some historical price movements in some of these assets this year alone.
Esoteric thought I just had.
What you got?
Well, we're in this building, right? We're on Cboe Wi-Fi. Are my fills nanoseconds faster than when I'm at the office or when I'm somewhere else?
That's a really good question. You know what?
Probably.
Maybe so.
I think so.
I would imagine a lot of these guys are hardwired.
I know it's a thing that a lot of the prop firms, like, they do actually care about proximity to the exchange, because when you're doing HFT, like, those nanoseconds matter. But they're usually talking about like being in New York City versus like in another state. I don't know if the whatever mile between here and the office is enough to really make a meaningful difference, but I would think so, right?
And I would also think whenever you were building these buildings, you would think strategically about where you're going to put the Chicago Board of Trade, the Cboe, CME, you would think whenever they're planning that out, they would take that into
Well, it's still a pre-tech build. The internet wasn't in consideration at all when they were building this building.
Right.
So yeah, I don't know. Yeah. So somebody tell me the science on that. I think I'm probably getting nanoseconds faster fills here.
Yeah, I would say so. I think I would just say
we'll test it sometime. Yeah, sometime when you call into the morning show, you got to be like, okay, 3, 2, 1, and see who gets filled faster. It's a good way to figure it out. NNE immediately up $15. Thank you very much. I will take that. And yeah, SPX, love it. I ain't scared one bit. This is right where we want to be. I'd so much rather be here than testing the upside. We got time. We got time on that one. Let's talk Microsoft. How about that? Microsoft, the opposite of Apple. Apple is stealing all of Microsoft's aura and money, it would appear. Just continues to sink. This thing just can't get off its butt. What are your thoughts on Microsoft here? You have any inclination to get long?
Nah, no inclination. I mean, it's going to be fun to watch. It's going to be fun to see how it pans out. But I mean, it's been more so of a boring underline, I guess you could say. I think premium sellers have definitely won in this one over the last month or two. So I'm curious about the earnings. Let's see. We got earnings July 29th. Was that before the bell today? Did that happen already? I'll have to double check on that. But I know a lot of people are going to be looking forward to that. If anything, I'm not going to be doing anything, maybe be sidelined. I think some of the more attractive names are the ones that are kind of at some of these, I don't want to say anomaly levels, but like Apple being at its all-time highs right now. But I mean, Microsoft is old faithful. It's always going to be an extremely liquid stock to put something on in. 87.5 IV rank right now, pretty much flat on the day, literally to a T flat, 0.00 you see up there for a quick second. So I guess a little bit more of a boring underlying, something you got to be patient for, but maybe some of these earnings cause a little bit more directional movement in these, but I'm going to be sidelined.
Yeah, Microsoft and Meta after the close today is the deal on that. So yeah, sliding big time into the earnings here. I am long Microsoft through this. I've had this position on a little while just because I feel it's inevitable. Microsoft has to catch up sometime, but it would appear that might not be the case. We'll see how exactly that pans out. Base 8 with an acute observation that our trades probably have to go through the Tasty server first and then back. So it's probably the same difference. If we were in the building,
maybe mine might take a little bit longer.
Tasty building, we save the time on that side. But if we're here, we save the time on this side. I don't know. They put their HFT systems in the same park as the NASDAQ. Yeah. But yeah, we're getting close to our time here. You got any closing thoughts? Anything you want to highlight before we dip?
No, not at all. I mean, we didn't take any scalps today, considering the fact that we have some binary events to watch out for. And sometimes price action can be a little bit funky. So even if there's a trade idea, typically we'll size down a little bit more considering we have that binary event again in the afternoon. I'm excited for it. I know it's going to be Warsh's second time coming out, making his comments, sitting in that Fed chair position. Things have gotten a little bit political, so I think he has a lot of pressure. Although it should be an independent source where they report a lot of these details from. You know how things go sometimes. So I think he's in an interesting position, and I'll leave it that way. But I'm looking forward to it.
Yes, I'm just interested to see the vibes that he's given off. That's really what my main thing I want to price in. He's had a history of being a pretty blunt, pretty straightforward, pretty short-winded guy.
How many words do you think?
Interested to see if that keeps up.
You think he keeps it short and sweet? You think he keeps that brand?
Sweet. 152.
152?
Yeah.
I like that.
All right. That's my guess. Cool. But that's going to be all from us today. Thank you so much for taking the time to watch. We really appreciate it. And we never take it for granted. Errol and I'll be back here same time, same place tomorrow, 10:30 a.m. Central Standard Time. Be sure to come hang out with us. Stay tuned for Live from the Trade Desk with Quentin coming up next. We love all of you. We'll see you guys next time.
Peace, guys.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
What's up, Tasty Nation? Welcome back to the show. We got markets sliding aggressively here. E-minis down 1.2%, NASDAQ down 1.7%. Going to be a crazy day here. SPX at the session lows, and we've got a number of ticker symbols coming through the system, but I'm not here by myself. I'm here with Q from the trade desk. I'll bring him with the... We've got it back. We got it back.
Thank you very much. I know it's been a little while. How are you doing?
Good. How are you?
Good.
Good.
Desk is, desk overall is busy. Today, it's been a little quiet though. I've got to say, everyone's just waiting for the Fed announcement. We've got earnings later as well. And so also like my favorite thing to look at for the Fed announcement, because I'm not always paying attention to where rates are going and things like that. So I'll look at like the CME Fed Watch tool. I don't know if you've ever pulled that up before.
Absolutely.
There's actually some like discrepancy and, some difference in where the rates are going to go. I think it's 65% says it's going to stay the same. 35% says there's going to be a raise. And so there's a lot. I assume that's why the market's moving the way it is.
Yeah.
There's a lot of, speculation going on.
Yeah, today is going to be wild because, to your point, I totally agree. I think if we get a surprise hike, and a surprise hike is like, this is a 30% chance. This is huge. Like, this is the biggest we've seen.
Yeah, normally it's like 98% to 2%.
Exactly. And I think if the market's selling off, it is also thinking maybe we get a hike, but if we don't get a hike, and they're like, hey, we'll just play it by ear, we'll look at the data, we'll keep the rates the same, you could see this move erase in 30 seconds. It's going to be absolutely nuts. But we were talking about the prediction markets that are live on Tasty Trade. Now you can trade these directly, and it's going to be just insane. I mean, we were talking earlier about SPX too. Just looking at this implied volatility number continue to creep higher. It's not because extrinsic value isn't decaying. It's just because extrinsic value is holding on until this announcement, and time keeps passing, which is why the IV reading keeps going up. We've been sitting at a plus minus 50 point implied move the entire day.
And that theta right now for today's expiration, that's not going anywhere.
No, it's insane. That's actually a good point. If we pull up theta, I mean, it's got to be massive. There you go. Massive theta numbers. Just speaking to the extrinsic value that's going to get zapped out of this cycle here. So with only a couple hours left, I mean, we're less than 2 hours now until the announcement, the decision, and then the press conference that comes after. But how is this permeating through the system? Top 20 symbols? Check it out.
Yeah. Let's take a look. Top 20 symbols going through the system and their IVR. If we get that pulled up here.
I would imagine Tesla's up there, top 5. It's got to be.
It's still always going to be up there. And then, like what we're talking about with that theta as well, right? All that theta, of course, is not free. The reason there's all that theta is because of all the price risk as well. So a lot of gamma is coming with that theta, and that's why the expected move is still so high. That's why the volatility for today's expiration is so high.
Yeah, and I think you continue to see this creep up. But I think if we were to guess in terms of the top 20 symbols with some of these equity markets, I would say probably a lot of Microsoft Meta too, maybe, with earnings coming up after the close.
Yeah. I bet like one of those two will be number one come tomorrow.
Ooh, here we go.
And then, all right, top 20 symbols going through the system and their IVR. At number 1, Micron with a 79. NVIDIA, 65. SoFi, 18. Tesla, 39. Apple, 73. SNDK, 76. AMD, 83. Bloom Energy, 64. Microsoft, 88. Intel, 73. SOXL, 89. SMH, 95. TQQQ, 67. Ford, 58. SpaceX, 90. Amazon, 59. NBIS, 86. Meta, 79. Google, 35. And Visa coming in number 20 with a 39.
Good old Visa. They had earnings after the close yesterday, or it might have been before the open today, but either way, they reported it's up 1.5% right now. Kind of a decent move, but still, I mean, this stock is not one of those that most people are paying attention to, given all the craziness in the market with the Mag 7 stocks reporting after the close today, the Fed announcement in just a little bit here as well. But yeah, it's gonna be a crazy market. I'm not kidding when I say this 80-point sell-off, Nasdaq down 500 points. Like, this could be back to flat in a couple minutes if they decide to lean the other direction.
Yeah. I mean, it's weird when it's not decisive.
Yeah.
You know, and then it's usually like, oh, like, what's the Fed going to say?
Right.
And that's what the move is based on, not the actual rate change.
Yep.
But it's been a while since we've had like some indecisiveness in the market as to whether rates are going to stay the same, go up, or go down in some cases, right? But yeah, and I will say it's a little eerie on the desk right now. The phones are not ringing. Everyone's just waiting. Everyone's just waiting until they see the move. And then after that, I'm sure we'll get very busy shortly
100%.
after.
Yeah, we were talking, Jermal and I and Liz were talking this morning, and we can't remember the last time. It was probably around COVID, around that period of time where they were reducing interest rates and then increasing them from 0 or sub-zero up to, where we are now. But these are the times where, real volatility can come into the markets here. We're seeing it right now. The NASDAQ hasn't been able to post a green day for quite some time. You can see this here in the NASDAQ futures, just red day after red day, sliding and sliding and sliding. But again, if they decide to hold rates where they are, which is still probable, don't get me wrong, and I think it would be more of a shock to see them hike rates now, because I think they don't want to scare the markets. Like, the job of the Fed isn't to create surprises in the market. I think that's the opposite of what they want to happen. But still,
sometimes it feels that way, though.
I know, right? Especially with the new Fed chair. Like, this is the second time he'll be on, so maybe he'll change his tune a little bit. But this morning we had a 25% chance of a 25 basis point hike. Now we're sitting at 28. So we're seeing this thing creep up just a little bit here, and you can see this as the day went on. We got all the way up to 29%, sitting at 28 now. I don't know what to make of this thing. But if we did get a 25 basis point hike, the impact on the market, maybe you could see a continued sell-off here and just drop further than where we are now. Or maybe you see it priced in like this. The market is, I think, telling us maybe if we do get a surprise hike, I wouldn't be surprised to see the markets continue to sell off here, but they already have been. It's kind of a weird situation.
Really interesting if the market's pricing in a 25 bip hike when it's only like showing like 28% or the odds, and then that's sort of like an interesting disconnect between like how the market's moving and then what are the odds on like some of these other markets, right? And so that's where it's fun to where those can be tradable as well.
Absolutely. And yeah, I think regardless, there's two kind of micro binary events priced into this market. The 1 o'clock decision, and they talk about like the summary of the decision, and then 1:30 is where he takes a stand and fields the questions. And that's where you can really see the market movements, because you have all of this data being flown around based on the transcript that's spit out and then digested through the algos. It's going to be a wild afternoon for sure. We talked about, some trading SPX strategies. Like, this is one of those days where I avoided like an iron condor in SPX for a 0 day, for example, just because the premium has not gone away. The implied volatility reading continues to creep higher as time keeps passing and the vol stays bid. We've had a 50-point implied move this whole day, but you got paid on direction if you had a bearish lean, for sure.
Yeah, and then also if you're trading those SPX options today after the announcement, you're going to want to watch out for some of those wider markets as well. You'll probably see when the market really starts moving, whether it's up or down, those option markets will get really wide. So just make sure you're comfortable with the price that you're putting in, just because those markets are going to get wide when the announcement comes and they're talking and the markets are moving a lot.
Absolutely. I think that's a great call out. I mean, these markets are 10 cents wide, like as narrow as they're going to get right now. But as the market flies around, you're going to see these widen out. Use those limit orders, use the tools that we have on the platform to kind of help yourself with that. I would avoid market orders if you can, because market orders is where you can really, get hit with the wider bid-ask spreads.
And then also stop orders can be a little dangerous in times like this. Just something to keep in mind.
Yeah, 100%. But yeah, lots to talk about, lots to discuss here, lots on the
we've got
horizon.
earnings.
I know,
as
it's
well,
crazy.
And we've got earnings.
It's crazy. Two of the four Magnificent Seven that are reporting this week, Meta and Microsoft. I wonder if they did that on purpose. They paired the letters together. Meta and Microsoft today, Apple and Amazon tomorrow. We'll probably see some crazy flows. What historically from the desk, do you see kind of the post earnings trading, or do you see the trading activity increase leading up to the earnings announcement?
I would say it really depends on the market. If there's a lot of low volatility, you'll see a lot of like pre-earnings trades because it's like that's where the vol's at because the earnings are coming up, right? And then if there's a big move, that's when we'll see a lot of customers put on those post-earnings trades. You know, sometimes if they have like a calendar or crab trade that you like to do, maybe they'll still keep it on and adjust it however the market's moving. And yeah, I would say like in a market right now, though, a lot of pre-earnings trades just because everything's volatile. They want the vol now. And then maybe if there's a big move after that, there might be some trades in it after as well. I mean, just because there's such big liquid underlyings, we'll see trades in that no matter what.
Yeah, 100%. I think that's well put. And really with the markets today, you'll probably see, especially if there's a continuation of this move or a reversal of this move, you could see increased activity in products like Microsoft and Meta that are reporting after the close today. I can't believe it is here, but yeah, 25-point implied move in Microsoft, pretty decent, all things considered. And then Meta also reporting after the close today, 45-point implied move here on a $590 stock. So lots of options expirations you can choose from, lots of strategies, of course, whether you're bullish, bearish, neutral, but I don't know. I can't wait until the 1 o'clock hour, just an hour and a half from now.
All right, you think it's going to be a hike or we stay the same?
I think we'll stay the same. I think we'll see choppy markets for sure. I think we'll see those markets widen out like you said.
Mm-hmm.
But I would be shocked if the new Fed chair had a surprise hike of 25 basis points. I think the market would just lose its mind.
Yeah.
But we'll see.
So wait, if we stay the same, do you think we're going up after that
Yes,
as well? Do you think
100%.
we're going up 50 points though?
Yeah.
Like the expected move says, or even more?
I think we'll go, even if we don't go from red to green, I think we'll rally from here for sure.
All right. Well, there you have it.
That's my stance. But
Love
if
it.
there's a surprise hike, it's going to be nuts.
All hell
Absolutely
breaks
nuts.
loose.
Exactly. Yeah. Well, Q, thank you for joining me.
Of course. Always
Appreciate
a pleasure.
it.
Good
Absolutely.
to be back.
100%. Yeah, we got an hour and a half, 11:27 a.m. right now, which means one thing and one thing only. We've got some trade ideas for you. The daily trade ideas, 15-minute segments where we talk about the trade idea of the day. So we're going to have that in just a couple minutes. Join us on the YouTube chat if you haven't already on Tasty Live. We're streaming live there, but we'll be back on the other side of this break.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
What's going on, Tasty fam? Your first trade of the day here. The world is on fire. That's right. Markets are down right now. But, truth be told, it's really not down a whole lot. I mean, down 1% is not a crazy day in the markets, but it feels like it's on fire because of all the things that we've been talking about more recently. You've heard us talk about it all the time, especially in the last couple of days. What's going on with semis? What's going on with the rotation we've seen? What's going on coming out of South Korea and the chip stocks? And that's really the thing that's really providing some volatility, if you will, into the market. And on top of all of that, we have a Fed meeting coming out in just about under 2 hours here. And then we also got a bunch of earnings, as Mike Butler coined it. We got the M's coming up today, Microsoft and Meta. And then we got the A's tomorrow, Alphabet and Apple. And so within that, I looked at Apple. That's the one that I thought was kind of interesting. I have positions in several of these names, but Apple is the one that caught my eye. Because of their earnings, we've talked to some degree about some of these tech earnings and the way that they've played out. If you paid attention recently, particularly with some tech stocks and particularly with the chips, you've seen TSM earnings, you've seen AMAT, you've seen ASML, those stocks that suffered. We profiled GLW the other day for our trade of the day, and that fell down. And so a lot of it has boiled down to expectations being a little bit high and some of them not being able to sort of meet those expectations. Now, I don't know if Apple's going to do that, but we saw this with Google for sure. If we got a graphic here, we saw that even though Google had net income, the highest that they've seen in the company's history. On our next graphic here, you'll see that their problem ended up being free cash flow. That was the thing. When you look at Q3, you look at Q4 2025, you look at Q1 of 2026. Recently, though, their free cash flow was down, and it's all about the spending. Then you had Tesla. They had earnings not long after that, and it was a similar situation. Free cash flow was down. And it's all about the spending, the build-outs on AI and all these other things, a lot of it with these companies. For Google, it's actually their investments. It's been like their investment in SpaceX and some other things. But again, free cash flow has been an issue. So on the next slide here, truth be told, free cash flow has not been a problem with Apple, and neither has spending. I mean, they've actually been doing things the right way. And so what you're seeing is that companies are being rewarded for spending responsibly, and other companies are being hit for not spending responsibly. So I started to think about Apple and what's the best way to sort of position myself for a trade here. And while I don't necessarily, I'm not rooting against Apple I find it an interesting trade to sort of be a contrarian in this situation and take the other side. I mean, let's take a look at this stock here. This thing has been on a run, huge run. And again, it's rewarded. It's been rewarded because clearly they're spending responsibly while some of these other companies, the Googles, the Teslas of the world, have not been. They've been spending like crazy on AI. And look, sometimes, like they always say, you got to spend money to make money. You got to, in order to get things done, you got to put some money up. It's not like Apple hasn't done that. They've just clearly done it in a more responsible way. But when I see this stock running at the expense of the chip stocks, I find it very fascinating. And I'm like, how can I not put on a short delta trade? So my trade of the day here was looking in the options here, and it's doing a diagonal. So I decided to look at kind of aggressive, actually. I went out to September. It's not even really an earnings trade. It's just a play on the move to the downside in the event that something happens around earnings. I mean, we've seen this quite a bit. Now, again, it's been based on the free cash flow, but I feel like that news is already baked in, is really what I'm getting at here. When you look at the chart, I feel like that news is baked in. People clearly have figured that out from down here as the move has happened. And again, when you look at some of these other stocks, they've struggled, right? We saw Google, we saw what happened on earnings. We saw Tesla really got smoked on earnings from that build out. And I feel like this move has already happened. This is already understood in the market. And so, again, I just thought it was an opportunity to take a contrarian position in Apple, given the way the stock is moving. Not all-time highs doesn't necessarily always mean a reason to sell, but I thought it was an interesting trade. So I went to September. Again, this is not even an earnings play. And truth be told, I mean, Apple is higher in the earnings in the near term. Looking at expected move here, we see well, again, their earnings is not until tomorrow after the close, so today's earnings doesn't count. But this expected move for the 30th and the rest of the week, you can see they don't have the 30th options. Apple is one of those that has Monday, Wednesday, Friday options, which is why we have this 29th and we have the 30th. We don't 31st, excuse me. We don't have the 30th options, but you can see basically from now until the rest of the week, it's expecting $11.12 move, right? I could have sold that. I could have made this a more near-term play, but honestly, I wanted to get a little longer-term play. I don't really want to have most of the stuff that I have in the near term, and this is where we're blending not only trade of the day, but what fits inside your portfolio. In this case, a short delta play does fit inside my portfolio, particularly since I have some short delta puts in the chip names, and I realized in some way, shape, or form, you could say I have short puts and which are long deltas. In some ways, being long some of those chips, they're a little further. Some of them are further downside. Some of them are at the money at this point after a day like today. But being long delta in that and getting short delta in Apple, you could almost say that's kind of the same trade. Because again, we've seen that chips have gone down and a lot of money has piled into Apple more recently. And that's why that stock is as high as it is. But again, I like to be contrarian. I think when you're staying on the same side of the market, it doesn't always work out. Trust me, I have a couple of positions all over the place, but this fits in the position. So nevertheless, we bought the 340 put. Again, stocks trading 340. This is an aggressive play. Bought that 340 put, but then I also sold the 325 put. So $15 wide on the on this diagonal here, and I paid $8.50. Usually, when you're buying a diagonal, you don't really want to buy it for much more than I would say half of the width. So $15, you figure $7.50 is half the width. I paid $1 over. And again, the main reason why is because it is further out. Like this is not, if this were much closer, it'd be different. As a matter of fact, just to give you an idea, let's just say I did the 340 in August and let's say regular August. Let's just say I did, 23 days. We'll say 7 days. Let's see how this plays out. 325. So this case, it's 765, right? See, this is a little more closer to that difference between those widths. Again, $15 wide, 340 versus 325. Difference between that being $15. And so halfway in between, that's what's considered fair value. That's why we're talking about halfway in between. That's really like fair value of the spread, right? Particularly if you're doing it aggressive. If I were doing, let's just say, go back to September. Say I was buying the 315 and I sold in September and I sold the 300, $4.13. See, much lower than the difference between much lower than half the fair value, which is half the width, but it's also pretty out of the money. So you're not necessarily, really, this is, and you can notice with these, you don't usually get a pop with these. It's kind of hard to generate potential profit on these. It's a little hard because, again, it's a diagonal and there's a lot of things at play. How much is this near-term option going to sort of finish out of the money? How much is that going to lose in value? How much is this the option that you're buying is going to gain in value? So it's usually hard for it to generalize a pop for you. But the idea here is I want it to fall, right? I want it to fade, and stock is as high as it's been, and there could be a reversal coming at some point in time. We've seen a lot of this move extend during these last couple of weeks when chips have fallen, and they really are down. And we're, I think, at an inflection point. I think at some point the chips are going to bounce. I think Apple kind of begins to fade a little bit, but that's my gamble here, right? So again, I paid $8.50 on this. The max I can make is $6.50, right? And we figure if it ends up maturing to $15. Now, I don't really expect to make that much on this trade because, again, we still have about 23 days for August, but I could possibly get close. And that would be kind of the nice thing. If some point, if I do get close on that, I would say I would try to make maybe $300 to $400 on this, right? So that being the spread all of a sudden is like $11. I'd be kind of surprised. I mean, Apple would have to fall pretty big, I think, even through this 325 strike, which again is not impossible given the way that the stock is traded and it's on its highs. I mean, getting through that would basically put it. It would have to go below this move that happened last Friday, which was a huge move, by the way, and it would actually be on the other side of this huge move more recently, and it would basically put the stock on par with what was happening at around this kind of double bottom, which you see here. You see one low, another low. That's what we call a double bottom, and then it bounced right off of that. Technically, this is a very clean move off the chart, really, and then from there you saw the next level higher. But I think as a result, if for whatever reason, something that they say, and again, I mean, free cash flow seems to be going well in Apple, seems to be that they're on the right side of this AI trade as of right now. But for some reason, if the stock fades or if the whole market continues to fade, then maybe at some point, again, Apple just went red on the day after being up, what was it up? 343 today. For some reason, it fades as a result. Then this works out as a nice short delta play that I have in the book. So that's the other way that I'm looking at it. It's another short delta play. I don't have a whole ton of those, but it works out for me in that way. So again, this is a story of we've seen free cash flow be a big deal on a lot of these tech stocks. We've seen many tech stocks suffer as a result. You're seeing, as we saw from the chart, that Apple has actually been fairly responsible when it comes to their free cash flow. But again, I just want a contrarian play and having a short delta play in the portfolio that has largely been long and worked out well with a lot of these semis more recently. So I would say, the other thing to think about, I would say is when you're sort of putting on these earnings trades, I think about if you really want to actually play the earnings, or is it a story that fits inside your portfolio as well? So again, we bought the 340 put in September. We sold the 325 put in August against it with 23 days to go. That works out really well. Like, it's not super high volatility, but it's more about being out of the money and less expiration to go for that 325 put there. Look, this works really well if it gets down another $15. And I showed you the chart where you could possibly see it fall back to certain levels. And it also has time on its side as far as that longer put. I'm long September in that regard. And that has, some weight to it as well, given the moves that we've seen in the market. So that's my play, and I'm sticking to it. Another trade of the day, and Apple diagonal is the way that we're going. So now I will toss it to Mike for his trade of the day.
What's up, Tasty Nation? Welcome back. We've got another trade idea for you today in Microsoft. So I've been heavily involved with Microsoft to the upside predominantly with Super Bowl setups, defined risk Super Bowls, long-term calendar spreads, diagonal spreads, what have you. So I wanted to get back into the Microsoft game here. We've got earnings coming out after the close today. Right after the close, it's going to be crazy because we also have the Fed announcement coming up in just over an hour. We've got the decision at 1 p.m. Central. We've got the press conference 30 minutes later. So a word of caution, if you want to trade these earnings announcements, or maybe if you want to wait until the Fed announcement happens, see what the market does, and then get into an earnings trade, that is totally fine. But just wanted to make sure that you're aware. If you are trading these things and you're a little cautious about the Fed announcement and what might happen from that, maybe wait until like 2 p.m., 2:30, somewhere before 3 p.m. Central to throw this trade on, or some kind of trade on in these products that are reporting earnings after the close today. So, Microsoft. Earnings report expected after the close. They have beat earnings per share expectations 10 times in a row. That has resulted in a number of different moves in the stock. We've seen some gaps down. We've seen some gaps higher. But ultimately, when I came up with this idea, I wanted to make sure that it wrapped around all the other positions that I have nicely, and it didn't offset any of the potential gains on my other positions. So that's really where this specific trade came to fruition, and this strike selection as well. So let's dive in to the trade that I've got on for Microsoft. So I went with a call crab trade, and I actually didn't go to the traditional setup where we might be buying or selling the 2-day cycle or the weekly cycle. And really, I think the most important thing here is with the crab trades, if we can pop over to my platform, we can show this real quick. But on the analysis tab here, we've got the 20-day cycle, the August cycle. So I've got the 430 shorts, 2 of the 430 shorts, 1 of the 460 longs, and then I bought the 400 out in September. So this is basically a butterfly that's calendarized. If you are not familiar with a crab trade, it is ultimately a symmetrical butterfly where you're pushing the long option, that's your asset in the trade, further out in time. So this is a nice setup when you've got ultimately the idea of inventorying some delta to the upside with a long call in September, but you still want to take advantage of the short premium that we have with the announcement priced into the August cycle. So I sold 2 of those at the 430 strike, and then I bought the 460 just to define the risk to the upside. So here you can see I've got this neutral kind of butterfly-ish feel, but what's really fun about these types of trades, if you're directionally right, is if we hold this to Friday, let's say we get a little vol crush here, we can look at this 47% mark. That's likely going to come down to the mid-30s if I were to guess. So let's crush this down to like 35%. We'll bring that down 12%. And then we're going to have to crush our long option as well. So let's bring that down to 35% as well. What you'll typically see with these earnings announcements is you'll see heightened implied volatility in the near-term cycles, and that really scales up. You can actually see it in SPX right now with the Fed announcement looming. You've got the 0-day at like 50% IV, and then the back months or the back cycles are much more flatlined. Similar story with Microsoft. So I'm imagining Microsoft's IV drops to, let's say, 35%. So that means a 12% crush in the short options and the protective long, and a 5% crush in the long option in September. If I'm correct in those assessments and we get down to around 35% across the board, and we push this to Friday, this could be a nice winner here. We can look at maybe a $500 winner come Friday if we get a rally up to 420, 415, somewhere around there. So that's the theoretical max profit. Of course, as we get closer to the expiration of the August cycle, you're really going to start to see this thing come in much more, because that means I'm collecting and keeping all of the value that's associated with the short premium component with the 2 shorts in August and the protective long. So if that were the case, we push this all the way to mid-August, this can be a $700-800 winner, something like that. So this will be a variable trade. Anytime you calendarize these options, you bring in a layer of uncertainty with where implied volatility will go. But we do know that implied volatility after an earnings announcement is basically going to go to a flat line number. And we can see that across a number of different products that have already reported. So if we flip over to like IBM, was one that reported already. You can see here 45% basically across the board. There's some variances there, but this is what I'm expecting to happen with Microsoft and Meta and Apple and Amazon. All these companies will kind of get down to a flat line baseline level, and you'll see that come to fruition in Microsoft after the earnings announcement. You got 109% in the near term, 47% in August, 40% in September, and then these back months are hovering around 35%. So that's why I went with 35%, where that's what we're seeing already. I would be shocked if Microsoft's IV went below 30%. So there's going to be a 5% variability there if you're trying to really pick and choose where this thing goes. But all in all, that is the strategy that I'm going with for Microsoft in isolation. But like I said, I also wanted to make sure that I am encompassing all these other positions that I have as well. So if we look at my other positions that I've got, so I actually, outside of this call crab trade that I've created, I also have this long 450, short 460 call diagonal spread. So if we get a massive move to the upside, that call crab or that call diagonal spread will come into fruition too. This can go fully in the money, and we can have a nice winner on our hands if we look at the evaluation of tomorrow, and then we do the same thing and crush this IV down to, let's say, 35%. So with this call diagonal spread, the 450, 460, I wanted to make sure that my crab trade that I just put on wouldn't overlap those exact strikes. So I actually created a scenario where the risk of my crab trade is at the 460 strike. So that's where you can kind of synergize these strategies. My long call diagonal spread here, the 450, 460, again, is the max profit of this trade is at the max risk of my call crab trade. So you see this max profit tent right around 460. This is the call diagonal spread that I already have on. And then if you look at the isolated trade we have here, the 400, 430, 460, again, you can start to see my risk here around 460 start to pick up with the crab trade, but that's where my max profit is in the diagonal spread. So a nice way to say that I'm adding more neutral to upside profit potential, and I'm kind of offsetting a lot of that risk if we bring in the diagonal spread here. You can see this. So now, instead of taking risk in isolation with my crab trade, I start to actually realize my max profit zone. So a nice synergized trade here where I've got the really wide call crab trade, 30 points wide, long the 400, short 2 of the 430s, and then long 1 of the 460s. But again, my near-term diagonal spread max profit is at that 460 mark. So it helps me offset some of that risk. Now we take it a step further. I've got another trade. We can just get rid of all these. I've got another trade at the 500 strike calendar. So this one is actually hilarious how big this risk graph is. But if we bring this closer to the reality of a 5% drop, and let's bring these again down to 35%, you can see here, like it's actually a nice profitable trade right now. But if we continue higher, past 430, past 460, this is going to realize max profit too. Max profit is at the 500 strike. So when you bring in all of these trades, the 500 strike long-term calendar, you bring in the near-term 2-day short 460, long 450, you've got another layer of profitability to the upside with a little bit of risk up here. And then you bring in the near-term crab trade, or the newest crab trade that I've got, and you can see I've got a nice package here where I'm offsetting a lot of the risk to the upside and creating a big, nice neutral range of profitability with all three of these strategies. So again, whenever you're layering on positions, I really like to make a situation where I can make money on all three of these. Why not? Why would I offset all of the profit potential on one with a ton of risk in the other? So I think you can strategically layer these on as you get more and more comfortable putting on tranches of different trades within one underlying symbol. So hopefully that analysis helped you see how you can do that and make sure that you're not completely offsetting profitability on one versus another. If my near-term crab trade was more narrow and I went with like a 400, 410, 420, well, now all of a sudden I'm at max loss on that crab trade before I get to the max profit on my other diagonal spread, the 450, 460. So with this particular setup, as you can see, I've wrapped all of my max profit zones around that 430 to 460 mark. And you can see here, it would work out nicely if we got a really big rally to the upside, holistically speaking. You might see a scratch on one trade or a loss on another, speaking to the call crab trade that I just put on. But again, it's nice and wide. It's at the 400, 430 shorts, and then the 460 up here. So my max loss at expiration on the crab trade is at my max profit 10th on the current diagonal spread. And again, my calendar spread, it would appreciate dramatically if we got a rally from 395 to 460 overnight. So with all that said, I think looking at this trade in isolation, the crab trade specifically, again, the crab trade is nothing more than just a calendarized butterfly. That's another way to look at it. There's so many different ways to splice these things together, but the 400, 430, 460 is where I landed. So if we just isolate these three strikes here, you can see again, if we evaluate at the 31st, which is on Friday, and then we crush these implied volatilities down to 35%, and then bring this one down to 35% as well, we're going to be looking at a nice, $500 winner if this is correct. One of the risks in this trade is if we actually do get a bigger volatility crush than expected. So if this goes down to 30% in the shorts in August, and then we bring September down to 30% as well, it's not necessarily a risk per se, but it does reduce our profit range, and it reduces our max profit as well. Because again, your asset in this trade is the 400 strike call that you own in September, and you're effectively reducing cost basis by selling 2 of the 430s in August and then purchasing 1 of the 460s in August to define the risk and make sure that you don't have unlimited upside profit or unlimited upside risk. If we were to just do this. So I don't want this upside risk here unlimited. If I did not purchase this 460 call in August, you can see the rest of my other positions really would suffer. And you could look at that. It's crazy. You really need that defining risk call here. So the crab trade really saves the upside risk profile here with just the addition of that. Look at that. Absolutely nuts. So keeping that in mind and just making sure that when you're layering different positions on, you're accounting for the other ones that already exist, and give yourself a best case scenario, right? Give yourself a scenario where you can make money on all 3 of these things. I'm thinking of these as 3 isolated trades, but I know based on my risk analysis tool walkthrough here, I can make money on all 3 of these if we get a move to the upside holistically. So looking at the cost basis reduction here, just to drive in this this notion, the 400 call, if I were to purchase it by itself, is trading for $2,100. The call itself, of course, is going to ebb and flow with the market. If Microsoft rips higher, that's going to be a profitable leg of the options trade. But as we say all the time, you want to make sure that you're accounting for neutral risk of being wrong, and giving yourself a nice cost basis reduction. So this whole package, I was filled at $1,065. So I paid $1,065 for the entire crab trade. But again, this long option in isolation is trading for $2,162. So with the crab components, the 2 shorts at the 430 and the long at the 460, I've effectively cut my cost basis in half. I did add some upside risk because I've got this extra short call spread to finance the crab components here. Yet another way to think of it, you could think of it as a long call diagonal spread where you are long the 400 in September, short 1 of the 430s, and then you sell a vertical spread 430, 460 to reduce the basis on that diagonal spread. So however you want to think about it, I think is totally cool. Just realize that this is a neutral to upside trade, as you can see on the graphic here. But again, paid $1,065 for it. Microsoft's currently trading for around $395. Max risk is the debit paid on either side if we're fully in the money or fully out of the money, since the spreads are symmetrical at the end of the day, the 400, 430, and then the 430, 460. But again, best case is around 430. We want that IV crush in August. We want to hold on to IV in September. That'd be the best case scenario. But I imagine, just like everything else, those IVs are going to drop down to a similar level. I'm estimating between 35% and 30%. Again, I'd be shocked if IV and Microsoft went below 30%, especially in this market here. But let me know what you think in the comments and the chat on the YouTube chat. I posted this trade to the follow page, so you can check out the comments there. You can follow it, adjust it, or fade it, do the opposite. But again, let me know what you think, and we're going to pass it along to the next trader right now.
What's going on, guys? Welcome back to another trade of the day. We've had quite a few things that we've done this week. We've done things in Google earnings. which we ended up rolling down the call side. We've done some things in Oracle. We've done some things in QQQ. Yesterday, we sold an out-of-the-money call spread on SPY. So we can just jump right into the Tasty platform, talk a little bit about what we're looking at today. We are going to get on a trade prior to this FOMC announcement later today, which could provide a little bit more volatility to the market. So I'm looking forward to it. But as we dive into some things over here, again, just a quick check on the portfolio. We sold that out-of-the-money call spread on SPY yesterday. We sold the 750s, bought the 755s. We collected about 235 in credit, a little bit, more juicy, a little bit of a juicier credit than we typically collect on a $5 wide. So that's kind of nice, reduce that risk a little bit. And then also widening that break even, which in turn increases that probability of profit since that range increases. So that's nice, selling some vol when it's elevated, relative to where we've been. And then earlier this week, we sold a iron condor on Google. We ended up selling off to the downside. We had a pretty big gap down. So we ended up rolling our calls down, which we ended up collecting an additional 50 cents of credit for a total credit at 280, which is really nice. We're up on the overall position, but you can kind of see how our call side is being tested right now. Google's had a pretty solid, last few days after that gap down. We've had 4 consecutive green days after that. So we're going to keep an eye on that. It's nice that our break evens are a little bit wider. We're able to collect a little bit more credit on this trade. So it is an iron condor. We'll be patient for it. Like I was talking about with Gus earlier today, sometimes iron condors can be one of the most boring trades that you can put on. And it really tests your patience sometimes because you're really looking for that time to pass to be able to capitalize on that beta decay. So that's how we're looking at in Google. SpaceX is one of those IPO trades he put on. This wasn't a trade of the day. But again, SpaceX, nothing less than disappointing, right? I mean, just continuous slides to the downside, continuing to make lower lows. Yesterday, we put in another low. A nice green day, a little bit of a reversal off the bottom. So maybe this is going to be one of the times we see a change of character in SpaceX, but really nothing else to say about this product. It really reminds me of Oracle, just that continuous slide to the downside where we put in a lower low day after day. So we're going to keep an eye on it. We do have 23 days left till expiration, so we got a lot of time to at least let this thing ride. It is sitting at a max loss, so it's better we just sit on this position and maybe we get a miracle bounce, but our risk is defined on this one. So emotionally, it's become easy to manage since we understand the potential outcomes already, or at least the worst outcome for that specific position. And then a few days ago, we ended up selling a out-of-the-money put spread on QQQ, got a little bit of long delta on, sold the 685s, bought the 680s. We collected about $1.78, a lot less than the call spread that we sold on SPY yesterday, which we sold for $2.35 over here, you can see. But we only collected $1.78 on the long delta that we sold on QQQ. So just pointing out and emphasizing how sometimes you can get a little bit more meat on the bone whenever you're selling those spreads. And it's always nice when you do, because your max risk is always going to be the difference from the credit that you collected and then the width of your strike. So if we have a $5 wide and we collect $2.35 of credit, our max loss is going to be that additional width of the spread, which in this case, if it was $2.35, that's going to be $265 for the max loss on a trade of SPY. So just considering that max loss really helps, your emotions and your own psychology when it comes down to managing these trades, because sometimes getting on the trades can be the easy part, but what can be difficult and something that you can juggle with yourself with sometimes is figuring out how to manage your trade. Should I adjust these strikes? Should I take the trade off and deploy the capital elsewhere? So having that in mind, that max risk is always nice. But with that being said, we got on the SPY position, Google, SpaceX, QQQ. What I'm getting on today is a little bit different, okay? We're not going to try and step in front of this train to the downside on some of these memory names, but we've seen some pretty significant sell-offs. I want to start with SanDisk. We've had a slide to the downside. We're trading just above $1,000 right now. We do have earnings right around the corner on SanDisk, so we're not going to trade this one. We want to watch out for that expansion and implied volatility as we get closer to that binary event. But what we are going to look at is Micron. Micron is another one of those names that's following suit with Intel, SanDisk, right? Micron. If you've been living under a rock, you probably didn't hear about these names. But if you haven't been living under a rock, you know these are some of the most active stocks probably of the year, and probably have had some of the most impressive runs, which is a tough competition to win because we've had silver this year, we've had gold this year, the oil markets this year, SanDisk, Intel, Micron, Western Digital. I mean, you name it. We have a list that we can just continue to go on. Even Dell's still trading at its highs. So with that being said, SanDisk earnings is right around the corner. I want to look at Micron, potentially sell an out-of-the-money put spread here. I want to see how much we can collect with the credit spread on these trades. I want to give ourselves a little bit of breathing room.
Again, my thesis is that we've already put in the top on these memory names. That's my personal thesis. So I am going to get on some long delta. It's not that I'm bullish overall in the short term. Overall, I'm bullish these memory names. I just think we got a little bit ahead of ourselves. I mean, if we zoom out a little bit over here, Micron was trading at $100 a year ago. You know what I'm saying? $90 a year ago. And we started to trade towards a high of $12.50. So I think we experienced a little bit of euphoria on this. I think we're going to be trading within a lot of, momentum and how that typically plays out. So I am bearish. I am trading off of the thesis that the top is in, but with such an aggressive move to the downside in such a short amount of time, I want to see if we can get on a little bit of long delta, potentially take advantage of that. We have a few things to choose from, but as we get into this options chain on Micron, I'm looking at the August 21st expiration. Give ourselves just a little bit of time. 23 days left till expiration. I know we have earnings over here. That's going to be around September 22nd. Not as close as SanDisk, so I still want to take a stab at this. And, at first I was starting off at the expected move, right? And the first thing that you're going to notice that these are $10 wide strikes. So just considering that, your risk is going to be a little bit different. If you're somebody like myself that typically puts on $5 wide strikes, you're going to have to assume a little bit more risk on this potential trade if this is something you're also looking at. But that's the first thing that I noticed. These are wider strikes, $10 wide. They're not offering $5 wide. And if I go to the expected move, and if I straddle that expected move, I see right off the bat, I can only collect $2.33. The metrics look nice. We have a 74% pop, a 77% P50. This looks nice, except the max loss is going to be our total buying power for this trade, which is going to be about 765, which is a little large for this position, considering we might be on the backside of this move. And we've been mentioning the idea of this backside of the move for quite some time now. And what I want to do is I want to pull up this vertical line. And whenever we're referring to the backside of this move, we're talking about the front side run. And if the potential top was put in, anything after that is going to be the backside of the move. So sometimes whenever you're looking to get short, getting caught on the front side can make your trade a little bit more difficult to manage. And that's where we typically take some unnecessary losses. So if I can find this tool over here, and I find this brush, right? This would be considered the front side of the move. Very difficult to not get caught taking shorts because it can be so attractive with overextended moves to the upside. But now taking some shorts to the downside is more attractive now that we may be on the backside of this move. So that's what I'm referring to when we talk of front side and backside. But again, I know I'm talking about how I'm a little bit more bearish on the backside, but because of the significant sell-off in such a short time frame, I want to see if we can catch a little bit of a pop. It's a little bit different than Oracle. Oracle had a continuous slide to the downside. We were kind of looking for a little retracement pop. Didn't want to sit in the drawdown in that trade anymore, so we cut that one pretty quickly. But I think Micron and SanDisk is going to be a different story. I do want to give ourselves a little bit more room just in case we continue to slide a little bit more before we get the retracement pop. And again, it's not to say I'm overall bullish again on these and I think they're going to go back to all-time highs. But again, just in the short term, let's see if we can scalp a little bit back to the upside utilizing some of these call spreads that we can sell or some of these put spreads that we can sell, excuse me. So when we go and look back at Micron, 227 isn't going to cut it. I can bring it in a little bit more. And I mean, if we pair these up with, what the chart is looking like, we can get a better idea on how we can frame up this trade in a more attractive way. So we can see the last swing low that Micron could potentially trade to is sitting at around 640. So we may potentially get a bounce before then. So let's go ahead back into the options chain and see what we can work with. That was 640. Selling the 640, buying the 630 is going to give us 223. I want to go a little bit closer. I got to collect a little bit more, maybe even to 680s. If we can get anything below 700, that'd be nice. Let's do 690s, 680s. It's still giving us a 64% pop, 70% P50. That's pretty attractive. $680 worth of buying power, not bad, right? The max loss is going to be around there right now, sitting at 678, depending on what we sell this for. The max profit is going to be the full credit that we receive on order entry here. This looks a little bit more attractive. Again, it is $10 wide. If we try to capture a third of that width, which is going to be about $3.33, we're just shy of that. So I think this would be good enough for us to pull the trigger on if we like it, right? If we continue to slide to the downside, we don't have to continue to hold this. And we're looking at the 690s, 680s. So 690s is right here. If we were to add the credit to that trade, our break even is going to be around 688, around 67, around 687 really our break evens, and it's going to be closer to. So I'm comfortable with that, right? I mean, if we continue to slide off to the downside, it gives us a little bit more breathing room to at least feel comfortable enough to pull the trigger. So this is what we're going to look at. I'm going to go ahead and send that through. Yeah, 63, 64% pop, pretty solid P50.
again, not that we're extremely bullish on these names, and we got an insta fill at 320. It's not that we're extremely bullish on these names, but again, the aggression to the downside, it would be nice to see a little bit of a pullback, right? Even on the front side of this move, whenever we continue to put in consecutive highs, there were times where we did get a little bit of a brief pullback here and there on the way up. So I'm hoping on the way down, or as we start to consolidate, whatever the price action is going to look like as time goes on, I'm hoping we catch just a little bit of a pop. So that's going to be the thought process there. And I'm loving the volatility here. I could have literally kicked myself for not getting on short Delta earlier today, though, on Micron. I know we got long Micron last week. I think that was around July 17th. But after that, we should have got on some short Delta, right? If we believe that if we believe the top is in for the short term, we should have got some more short Delta on here, risking the highs, right? Like that's a trade I'm totally comfortable with taking a loss on. If we can continue to find those trades where we don't mind losing money, like putting some risk on this idea is worth the risk, then those are the type of trades we're going to try and continue to take. But I do love the range a lot of these memory names are offering. So it's going to be interesting. It's going to be nice. I'm excited for it. And lastly, just looking at the micro NASDAQ, it's been wild, right? This is a daily chart. I remember we drew this little funnel, this little triangle before we had the break. And we were talking about we're probably going to get a decent move, maybe to the upside or downside. We'll see what's going to happen. But that range started to get smaller and smaller. And so far on the micro NASDAQ, or the Qs for that matter, we've gotten more of a slide to the downside. And it's going to be interesting because this upside move, we've had like zero consolidation in there. We were trading on the micro NASDAQ from 23,250 to a high of 31,053, right? And that was all within 1 year. That was all within the span of that was at the end of March 31st that started off. So super short time period for the market to move up so much without having any relief pullbacks to the downside. So I don't know. We'll keep an eye on this volatility. This is attractive to potentially get on a little bit more long delta. And again, it's not that we're bullish again on the overall market. It's not that we're saying this market is going to go right back to all-time highs. But given the extended sell-offs we've seen over the last, 4 or 5 consecutive days now, it gets a little bit more attractive for that, right? And I know we already have a little bit of long delta in the Qs. We sold the 685s, bought the 680s. So 685s, bought the 680s. So yeah, I don't want to over leverage ourselves on some of these long deltas, especially with the market continuing to slide. But hey, it's starting to look really attractive. Whether you're a bear or a bull, it's looking like we got a lot of opportunity for everybody else, depending on how you're framing up the market right here. I'm just very much so looking forward to this FOMC. I mean, sometimes it is really difficult to put on trades prior to that because things can literally switch on a dime. Like the sentiment can literally shift right after that announcement because regardless of what's being announced, we never really know how the market is going to position themselves after that. We don't know how everybody's going to perceive that news, whether it's good or bad. So maybe if we raise interest rates, I don't know, maybe we see a little bit of a continuation to the downside. We pause rates, maybe we finally see a little bit of sideways movement. But I'm not sure what's really going to be the extreme bullish case for the market, depending on what Warsh comes out and says over here. So with that being said, we're going to be patient. No micro scalps on the NASDAQ today. We traded that a couple times this week, which is allowing us to hedge some of the other trades that we had taken. But lastly, I just got to bring up oil. Oil is one of these markets that seems to be very active. It's going to be one of the more underlyings that are quote unquote in play, at least for now. It seems that the metals kind of died off, right? Memory names are starting to have a little bit more air taken out of them, but it seems like oil's back in business. And I mean, we have so much uncertainty surrounding these headlines with Trump, Strait of Hormuz, oil supply, all those kind of things. So we're going to keep an eye on it. I am of the thesis that the top on oil may not be put in. We may have a position that reflects that bias here shortly, but a lot of volatility nonetheless. So we'll keep an eye on it. And again, I know USO following suit. USO is another product I know a lot of us like to get some exposure to the oil market. And again, I mean, extremely aggressive, right? I mean, all these gaps to the highs, gaps to the downside, now gaps back, within that little range that we're trading in there too. So we'll keep an eye on it. Oil up about 77% on the day so far. And we really haven't gone anywhere besides the gap overnight. So with that being said, guys, just a quick recap. We sold an out-of-the-money call spread on SPY, which is nice. It's helping hedge those long deltas on the Qs right now. We have a Micron position on. That's going to be our trade of the day. We sold an out-of-the-money put spread there, $10 wide, selling the 690s, buying the 680s. We're up about $18 right now. We can go get some lunch after this if anybody's interested. Never mind. We're back down $5. That's how inflation works sometimes. So With that being said, we got some times on these contracts. FOMC is coming up here in a little bit. We do have more amazing content coming for you guys next. Be sure to stay tuned, and we will be right back. See you guys in a minute.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
So you're an active trader, looking to increase your return, decrease your risk, or quite possibly both. Sure, you've heard of the Greeks. You know, your deltas, your thetas, your vegas, your charms, your vamas, etc. And you're wondering, hey, how do I use these guys to improve my risk-return relationship? Well, join me for a 10-episode crash course, and I'll show you exactly how to do it with all the gimmies and gotchas, one Greek at a time. We'll see you there.
Pay for backtesting? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
What is going on, everybody? Welcome back. We do have a guest with us, Noel. He's going to come and join us, talk a little bit about the market, get his thoughts on, FOMC today and how some of these earnings might play out. But Noel, great to have you here.
Nice to be here.
Nice to see you, brother. I know we got a lot on our hands this week. Just to start out, what's been top of mind? Is it more so the FOMC or some of the bigger earnings that are coming out later this week, or a mixture of both?
It's got to be a mixture of both. I mean, if one massively disappoints and the other, exceeds expectations, clearly there'll be, some kind of reaction. I think FOMC is the biggest thing, and it's going to be until the marketplace figures out what to do with a Warsh, a guy who's completely changed the way he's going to handle the media, set expectations. So I think that the expectancy cone around Warsh is going to be a much wider cone than what it was with Powell.
100%. It seems like he's definitely going to have the magnifying glass on him, especially, it being his second meeting. So I'm looking forward to it. I'm excited for it. I'm curious to see if he's going to keep things short and sweet with the minimal of, chosen words that he wants to speak. But with that being said, we can go ahead and jump right into the Tasty platform. Any specific markets that's kind of been top of mind for you as you head into this week?
Well, clearly everything that's been going up is now going down. I don't trade the Kospi, but, things that are Kospi adjacent, like, any of the semiconductor themes, DRAM as an ETF and DRAM as a thing.
Right.
All of those things have been really busy. I don't have a specific position in those, but I have a position in the Qs. I have a position in Q vol. Bonds are relevant. Bond vol is up. Oil vol is up. Oil is up. There's just a lot of stuff moving. There's a lot to do from a vol standpoint and from a Delta One standpoint.
No, there is. What are your thoughts on oil right now? I know it's an extremely difficult situation to trade sometimes, just because we're not sure if we're getting a full resolution depending on whatever headline it is that's coming out. It kind of seems like we've been teased with oil a bit, but what comes to mind whenever you think about oil and the recent volatility we've seen in there?
I mean, I have no idea where oil's going to go any more than anybody else. Any Trump tweet can, radically change that stuff, or, there's a missile that goes off in Oman or Yemen. I have no idea any more than anybody else that I know of.
Yeah.
But I do know oil vol is high, and that means there's opportunities within that sector to take part of some of that stuff. And I also know that if oil continues to go up, it's going to change the way the Fed reacts to it. So this is all kind of intertwined. We got a bit of a reprieve last month in CPI data, and that's part of the reason the market bounced. But if ever all that reverses itself, and if this war ends up dragging on longer than it's expected to, and oil stays higher for longer, and then, Warsh has been on camera saying dozens of times that he wants to get inflation down to something like 2%. That's all going to fit into the calculus, and that also will increase volatility, and also with that volatility will add more opportunities.
No, 100%. And I mean, it's been a year, right? I know earlier this year we had, some of the metals going off. We had silver, we had gold almost getting into that euphoric kind of feel territory. It felt like oil was done for a little bit there. I know the short interest started to increase as we continued to sell off to the lows in oil, and now we're getting a little bit of reversal. So to your point, nobody really knows where this market is going to go. Things can kind of change on a dime. The sentiment shifts fairly quickly. And we'll kind of take whatever it is that the market gives us. And I think that's what makes this next Fed meeting so significant and kind of interesting. It almost feels like we're at an inflection point across the board, whether that's from a price action standpoint, a new standpoint, interest rate standpoint, whatever it might be. And then again, it being Warsh's second meeting. So a lot of good things on the table here. I know we have some earnings coming out this week. I know Apple's still trading at its all-time highs. I think they report earnings tomorrow after the bell. In terms of earnings now, I know we spoke a lot about Warsh. As we have on the screen here, are you excited about any specific earnings? Not that you're trading them, but do you have your eye on one more than the other?
I trade dispersion. So, which is to say that I want to have single names move relative to the index.
Right.
So, do I really care if Microsoft goes down more than Meta? I don't. That doesn't really matter to me. But how everything moves as a unit does matter to me. And I think that the words that'll come out of these meetings, in terms of the earnings conversations and the analyst talks, will have kind of like the FOMC post presser. I think there's going to be a lot of weight put on that kind of stuff.
I got you. What is more of your style, Noel? Is it more of selling the premium? Do you like to get a little bit more directionality? Do you like to pick up the shares? What's more of your personal preference to express your personal trade ideas?
So I was a market maker. I started out on the floor of the exchange, the floor of the Cboe, and I ran a prop firm for quite some time.
Nice.
And so I don't really have a thing that I do. I think that there is a tool that's fit to purpose for whatever regime that there is. And to say that I always sell vol is incorrect, and to say that I always buy vol is incorrect. I would love to always buy vol, just to always know what my maximum downside is.
Yeah.
But I don't think that's a winning strategy. In general, I like to sell vol because I feel like that transmutation of risk from the present to the future is a winning strategy. But there's all kinds of reasons that you wouldn't want to do that, or at least do that in a risk-defined way. So when I see things moving around and I see rotational shift, I see the marketplace defined by the S&P 500 as being pretty close to all-time highs, but with the NASDAQ being down something like 8% and change this month alone, it tells me there's a lot to do.
Right.
So there's no reason for anybody really who's an active trader to be sitting on their hands. There's plenty to do right now.
And whenever we get those divergences, like we kind of seen between those two assets, I think it was earlier last week, we've seen a little bit of a wider divergence between NASDAQ and the S&P 500. That could be accredited to a lot of things like rotations and things of the sort. Whenever you see something like that, is that a cautionary tale for you? Or is that a more so sit on your hands until you gain a little bit more clarity? Something's going on here. What are your thoughts on the divergence between these assets recently?
Well, everything that was rocketing up kind of just fell back to earth, or is currently falling back to earth. So I don't really take that as much of a sign. The volatility within the S&P 500 in aggregate, the VIX is still sub 20. It's not that big of a deal. I know that everyone likes to talk about, what's going to happen and this, that, the other, but
right.
Putting things in context, market's near an all-time high. The NASDAQ isn't, but it was still up a bunch. Vol isn't that high. Oil vol relative to having a war in the Strait of Hormuz, which controls 20% of the oil shipments around the world. I mean, those are pretty big events.
Yeah.
And there's a new Fed chair, and we're still fine. So the idea that, we're like at the precipice of a calamity or whatever else, I just don't buy it. And even if GDP comes in light, right, the Fed has the ammunition to lower rates to kind of buoy those things. Now, Warsh is on camera saying that he's not going to be a guy that's all into QE and stuff like that. Fine, great. I think that makes sense. And I also think he's doing it for the correct reasons. But irrespective of what I think, that's what he said. And I think that, things are actually not that bad.
Right.
So would there be caution? When should there never not be caution? When has somebody ever gone on camera and said, yeah, clear blue skies ahead, buy all in, do it all right now?
Right.
But the other side of that is like, if not now, kind of when? If you're going to sell a little bit of all, do it when it's a little bit escalated. And I mean, right now, like I said, there's things to do.
When it comes down to like market direction and what you might do next in the market, you're very indifferent. You have a very indifferent approach. Is that something where you kind of train yourself to be a little bit more indifferent so that you can more so spot potential quote unquote opportunity to not kind of have those biases lingering within your psychology?
Absolutely. I have absolutely no bias. I care if I'm right in the book,
Right.
but if the market's going down or up, I mean, I care as a human being. I want people to be, prosperous, and I want the country to do well. So I want the market to go up in that regard.
Yeah.
But from a day-to-day or minute-to-minute basis, I'm fairly indifferent to where the market goes, or ExxonMobil, or Tesla, or SpaceX.
Right.
I don't really care, other than if I have it on and I have it on correctly. But I don't really subscribe to any narratives in terms of my trading, because I've seen countless excellent narratives that do poorly,
Right.
or really poor narratives that do great.
Yeah.
I don't know. I've seen it a billion times. So with that, I mean, at some point you just start to think to yourself, like, man, I have no idea what's going to happen. And then even if I did know what's going to happen, say Warsh called me up right now and be like, hey, bro, guess what? This is what's going to happen. I don't even know that I would know how to trade it, even if I had permission.
Right. Even if you had the data, but beforehand, right?
Right, exactly. So, you can go back in arrears and say something like, okay, well, this is what happened. What would I have done if I'd have known that ahead of time? And I would say more often than not, I'd be like, I don't know. I don't even, because, say earnings are great in SK Hynix, but they're not great enough and the stock gets wailed on.
Right.
I mean, those numbers are still amazing.
It sounds pretty freeing to kind of have that approach to the market, though. Not having the need or feel to want to know what the market is going to do, and more so just positioning yourself to capture that opportunity if it does present itself. So you drop a lot of... Yeah.
I would say that's a mischaracterization. Of course, I'd like to know.
Right.
Of course, I want to know. And of course, I'm invested in this fully. But I just know that it's not realistic that my opinion has really any merit on any level on anything in this stuff. I can only trade what's in front of me. And that's one of the reasons I like to traffic in volatility, because volatility as a forward projection is the aggregation of everybody's opinion insofar as what are they going to spend money on. And to me, that has way more weight than, a talking head, I'm turning into, giving you, my opinion on where, the Fed is going to be in, 2 hours. I don't know.
Great point that you make there. I know we just got a minute left here, Noel. Anything else going to be top of mind before we wrap for the day?
Yeah, I mean, I guess dispersion is something that's starting to wake up a little bit from a correlation dispersion standpoint. That's on forever lows. It has been on forever lows, and it's now starting to wake up a little bit, but it's very far from being cautionary. So if you look at across asset volatility spectrum, oil, bonds, gold, all metals, all commodities, I mean, things are still pretty good, and I don't really think there's a really large reason to run for the hills.
Great point that you make there, Noel. Thank you for your time. I'm sure everybody else appreciates the nuggets that you're dropping for us. But with that being said, we will see what happens with FOMC here in a little bit. Got a lot of earnings on deck as well. Thank you for your time, and everybody else, be sure to stay tuned for more amazing content coming on next. We'll catch you guys here in a little bit. It was a pleasure, Noel. Thank you, brother.
What's up, everyone? Mike here for another episode of Options
I
Math
apologize.
Check, and this one is going to be earnings related.
You bring it, we match it. Get a 3% cash match on all qualifying
No,
deposits.
I like to know the details.
Up to
Appreciate that. I got
$3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
It's time to trade smart, post PDT rule elimination. And Tasty Trade has the tools traders need. The Active Trader tab's comprehensive market data is designed for rapid order placement in a single click, while bracket orders let traders set entry, profit target, and stop loss all in one ticket. From the Positions tab, you can monitor positions, roll trades, close positions, and create conditional orders. Now, traders of all account sizes have more flexibility than ever before to engage in the markets. Smart tools for smart traders. Tasty Trade.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
We're back. You're watching Tasty Live. This is Futures Power Half Hour today, sponsored by CME Group. I'm your host, Chris Vecchio. He's your co-host, Glenn Freibarger. Glenn, we have an exciting 30 minutes here because it's like those final 30 minutes when your parents are still asleep on Christmas morning and you're just waiting for them to wake up so you can go open the presents. The presents arrive at 2 Eastern, 1 Central today.
Game time. How we doing?
You're not nearly as excited as I am, I can tell.
I'm pretty fired up. But I'm more fired. You caught me in a state of, this last 30 minutes is kind of like the soldier's minute. I've been excited all morning, and managing what you need to manage into this. But now it's the final check, double check. How much risk are you taking into this FOMC event? Because we've got a changing landscape. We've got assets up 7%. Things down, not a lot, down more than 1% now, but some rapid posturing and repricing into this event of the, I don't even know, event of the day. Are you putting any earnings above it?
Yes. No, I put Meta and Microsoft definitely above it, given the market's concerns right now about hyperscalers.
There's my guy, Killian.
Here's your guy. He's so good. You mentioned that we're kind of just like checking the boxes here. Are we worried about Meta or Microsoft or the Fed more? I mean, I think it's Meta and Microsoft. I mean, the hyperscaler free cash flow problems are worrying everyone. The over leverage in the semiconductors worrying everyone. The build out of Chinese competition to those DRAM names worrying a little bit for everyone. So today here, what do we see? Rate hike odds are back up with oil prices having moved to the upside. Oil prices are off their highs right now. They're up 7.5% earlier, so it's only 6.8. I guess that's a bit of good news right now. Where do we stand going into this particular meeting, as it were? With oil back at 84.64 right now, Fed funds futures here are pricing in a 31.5% chance of a hike today. So I know I've said this on air already today, Glenn. Mm-hmm. I said it yesterday. I say it every so often we get to one of these Fed meetings, but it's worth repeating. If any day, it would be the day that is today. The Fed since 1997 has never, ever hiked or cut rates when the market has priced in less than a 55% chance of that move occurring. So at 31.5%, it would be an enormous surprise, a historic surprise, something that we've never seen before if this Federal Reserve Committee came out and bucked Kevin Warsh, the chair, and decided to go for a vote. One of the misnomers, one of the misunderstandings about the Fed is that it's not a one-man show. Right? It may have seemed that way under Powell, under Yellen, under Bernanke, because they built consensus. But this is not that board anymore. And Kevin Warsh has abandoned forward guidance. So there is a small, Citadel has talked about this, it raised a lot of eyebrows this week, but there is a small but possible outcome where Warsh himself votes for no change and a majority of the FOMC votes for a hike. So that perhaps is when we get a reaction here at 2 Eastern that it doesn't really what Meta or Microsoft have to say. The market is going to figure out that We have a new sheriff in town, and this is a different ballgame. And I don't know if that's a good ballgame here, Glenn, because so much of our market in the modern world has been predicated on this belief that everything is too big to fail and that there's always going to be more stimulus and more help around the corner. So fundamentally altering the Fed's communications perspective and how it interacts with the market could have unintended consequences. And then we sprinkle in that bad free cash flow from Meta and Microsoft, and hey, there's a bad little bit of a sour afternoon here. I think this thing can go either way, quite frankly. I don't want to pretend that I have a strong inclination, but I'm going to lean with the market at 68.47% that we don't get a hike. That's as good as gold since 1997. We should not be getting a hike here at the top of the hour.
Yeah, I mean, what you do have, though, is last meeting, Kevin Warsh's first, was back to consensus, was it not? Everyone on the same page? Whereas the meetings prior had been a bit more divisive. And can you educate me just briefly, the more I think about it? This is a 2-day meeting. Of course, it's multiple participants. How much is it like a jury deliberation? Are they in there, convincing one another? Do they have time to do so? Or does everyone come in with, their own understanding and hard to be swayed? How political is this, to your knowledge?
So when they have these 2-day meetings, it's not just the 12 people in a room. It's also part of the staff that helps out. And so they get perspectives from everyone. Literally the chair could be like, okay, next up on the agenda, we have a report on the mining economy in the Southwest. Who's the economist? That's okay. You speak. Right.
Oh, absolutely.
And so it's just lots of, I wouldn't even say it's like a Socratic method type of discussion, but it's just lots of information being dumped out. And then the members themselves of the open market committee deliberate the views. But everyone, they hear everything all together, and it's like dozens of perspectives, right, from all these individual staffers and economists and market participants, finance perspectives, people who are working in capital markets, et cetera, et cetera.
Very interesting. So that to me opens, a range of perspectives. And of course, we always think about these meetings in terms of kind of two event risks. Of course, when everything is initially released, usually that is not contested, and we know exactly what's going on. We'll just see an algo reaction from, what line has been redacted or changed up until the press conference. But today we really do have two kind of events because even if we get the no change as expected, you'd see some repricing from, where we currently are situated. A lot of hedges, or around 30% or so, that are hedging for a possible hike at this meeting. But then the attention turns almost differently into the press conference, where looking at CME FedWatch tool, there's risk, to not one, but even 2 hikes in September. So even a semi-hawkish, as much guidance as he's willing to give could still be positive for taking some of the pricing out of 3-4 hikes this year. Is that the way you're reading this, or is anything hawkish bad news bears?
No, I mean, I think you have an astute observation here. The market went from pricing at a 95% chance of a hike in September, and it's still priced technically, if you're looking at the CME FedWatch tool, at 95%. But when you see the CME FedWatch tool also allocate some percentages to the column to the right, so 375 to 4 would be one hike, 4 to 425 would be a second. Right now it's 4.43%. So the proper way of reading that is a 100% chance of 125 basis point rate hike, a 4.43% chance of 2 25 basis point rate hikes. But this is a market that's not exactly cramming in more hikes, though, because if you look at the Fed funds futures curve, there's no third hike for 2026 being priced in right now. So the market kind of has this view where it's like, if things get worse, the Fed's going to hike in September. If oil prices continue to go up and stay elevated, then they might have to hike twice. So we're going to get 2 hikes this year, either one September, one December, or we may need to just get 2 in September and see if that helps curb the enthusiasm, or we go to a market that then has to price in a third for December, which is currently not on the board here. So maybe the little bit of guidance we get in about 21 minutes of time. This being a July meeting means no new summary of economic projections to go along with it. So we're not going to get a rate path. We're not going to get new growth, inflation, unemployment forecasts here at the top of the hour. It is just a very small policy statement, which, as we know from Warsh cut down the amount of words used from the last Powell to the first Warsh statement. So even that may be limited and could provoke a more limited market reaction. I mentioned it being Christmas at the top of the hour. Maybe I misspoke, Glenn. Maybe Christmas is at 2:30 Eastern, 1:30 Central Time when Warsh actually takes the podium. That's probably going to contain a lot more information, given, again, A, the brevity of the new policy statements, and B, the lack of new projections that will be afforded by the committee at this time. But this is where there could be a little bit of relief then. If the market has been getting upset because real rates are going up on the back of rising interest rate expectations, then if the Fed doesn't hike today and doesn't give clear consensus for, your September cut, my eyes are going to be on the 2-year yield. Say September cut, September hike. My eyes are going to be on the 2-year yields here today, because this has been the most responsive part of the curve to anything that the Fed is doing, right? Cheeky language aside, it's kind of like Trump's tweets or Biden's tweets. This is not meant to be an attack against Trump, but there's an angle there. It's political, so to speak. They're pitching their point of view. They're trying to massage the market in a certain direction. The market's going to tell you here through ZT and through the SR3 contract what's really going on, if it's just hot air, as it were. So 2-year yields up, ZT contract goes down, more pressure on stocks, more pressure on those long duration growth names that have been under such a good deal of pressure. It could be a nasty 90 minutes or so heading into the Microsoft and Meta earnings. And maybe those are so fantastic. Maybe they come out, they beat earnings, and they say, you know what? We're working more on monetization than build out here henceforth. We're actually going to keep our CapEx guidance in line for what we did previously. We're not going to raise that. No more dollars that need to be spent unexpectedly. You can get a rip higher. So I just think the range of outcomes here, they are so substantial for today. Just this accumulation and layering on top of one another of all these key event risks.
Yeah, and I think it's important for us in this next 20 minutes to just kind of go through the checklist of asset classes and, how much it's very easy on a huge event day like today to say, okay, I have positions in XYZ. They'll all react equally as it pertains to historic correlations. But I think today, more than other days, we can really unpack what we expect to move off the announcement and what we don't. Starting with crude oil at the top of the table, are you expecting any reaction from this afternoon's events? That's completely separate.
Completely separate. In fact, with the spike that we had higher here in crude oil today with a little bit of a vol expansion out at 50 days to expiration, you could see that the raw volatility is still over 62% right now. So going out just beyond the expected move to CLV6 here, just a quick peek in on that contract right now, because that is not the one that we see here on the screen on the chart. We head over to CLV6. The low, the close that we had prior to, let's go to the daily to get this right. The close that we had prior to the start of the war was $64.62. The low during the war has been $65.57 here. So at 50 days to expiration, getting down near there, 67.66 just on the outside of the expected move, and then capping this off with a 94.95 short call spread. It felt like a decent iron condor play in oil. Oil has its own catalyst. Iran launched all these missiles towards Jordan yesterday, which, if having been following this conflict the way that I have been, kind of neurotically, if I'm Iran, I am weathering down and grinding down Israel's defense shield, because believe it or not, Jordan and the American missile bases in Jordan, our airfields there, they are responsible for launching the interceptor missiles that keep cities like Tel Aviv safe. So if I'm Iran, while we're in the midst of this ceasefire, or like we're just briefly exchanging some missiles, we're not shooting at the Strait of Hormuz, I am increasing my ability for deterrence by attacking Jordan here. So Jordan got a bunch of missile strikes last night. Oil is back through the roof because it's yanking on the chain here. You guys can't send your ships through the Strait of Hormuz. And by the way, if you guys want to restart the fighting here, we're going to be able to target civilian populations over in Israel again. So there's something else in play right now here. I think with our reports of U.S. missiles running down and what they're doing to Jordan Trump's not going to have too itchy of a finger to restart the fighting, even with the comments that he made today, which were pretty aggressive. But Glenn, we know aggressive from Trump around here. He's ending the world. Civilization's going to end tonight. Last week he said it a big surprise for Iran. That type of inflamed rhetoric in the context of this war has usually been before de-escalation.
I concur. If history is to repeat itself. Next, going over to gold, which could have some of that correlation to the geopolitical conflict, but also as a non-interest bearing asset. We've seen it pressed near its lows in the contract I'm looking at, just $100 off of 4,000 here in the futures market. How much of a lift can we expect from a dovish statement here versus is the floor pretty sticky regardless of how hawkish?
I'm one of those weirdos who thinks the more hawkish, the better it's going to be for markets, in part because let's just say the Fed comes out dovish, right? Working through the real rates equation of this. Real rates are nominal interest rates less inflation expectations. What have we seen here recently? Real rates have gone up, not necessarily because inflation expectations have skyrocketed, but because the interest rate expectation on the nominal side of that barbell has increased. So if the Fed comes out as too dovish, lower rates for longer, inflation expectations going up, which also breeds the expectation of a higher degree of necessary rate hikes in the future to curtail the inflation that we currently have and the additional inflation that comes along the way of keeping policy looser for longer.
Then
a dovish Fed could create a condition where real yields keep going up because they're not being responsive. And so the market then has to do the heavy lifting of baking in those expectations. So rising real yields, while they haven't so greatly negatively impacted gold and silver here in recent weeks, maybe gold and silver have been buoyed by the fact oil's come off. They haven't strictly rallied either yet. So gold and silver aren't going to love a hawkish Fed by any stretch of the imagination, but as non-cash bearing, non-dividend paying, no interest bearing instruments that they are, you don't want real interest rates to keep climbing higher. So I right now have an old gold position on, which basically is calling a floor at 39.55. If it holds, we're good. Silver, I'm kind of in exploratory mode here. This to me is a total crap shot right now. I'm not taking any bets here, and Glenn, the low for the range is $55. We have a high here for near 61. We're sitting at 58. Unless you're going to play a short iron condor between the highs that we had basically July 7th onwards and the lows that we had from July 16th onwards, you are rolling the dice in the middle of a range on a directional bet on a asset that's still in the midst of a longer term and a downtrend since basically January, or potentially working its way through a bottoming process if you really zoom in on the chart. I have no idea what's going to happen. Volatility is not going up, so no reason to make a change.
Fair enough.
How do you feel?
I agree with your call out of making sure you're accounting for real rates and not just this headline. But I think perhaps it's an oversimplification of, if we're not hiking, we're not cutting right away, right? And so if the level that we've been at has been sufficiently restrictive in the past, there is a chance that it is still sufficiently restrictive and doesn't necessarily no more hikes automatically translate to resurging inflation. And so
it's not dynamic, right? The market will go, okay, so we're not going to get the hikes now, so we're going to get more sooner, but then we also may get more cuts in 2027. Because if they can be more aggressive now and nip this in the bud, then they can go back to loosening policy. And also, if they don't hike enough now, that means the forthcoming cuts that we want on the other side of this hiking cycle, they're probably getting pushed down into 2028 or 2029. So that's why, like so many of these reports, like non-firm payrolls, one of the rule of thumbs is if you're swing trading non-firm payrolls, especially in FX, your corner of the world, it's like wait for your 30-minute candle.
Yep.
And then see which side of the range it breaks, and then trade that way after the candle break. So 8:30 Eastern, data comes out. You wait until 9 Eastern, 8 Central time. Okay, we got our range here. If euro dollar pops to the top of the range, we get long the euro for the day. If it breaks to the bottom, we go short the rest of the day. For a lot of folks, and I mean this for myself included, especially with Meta and Microsoft, I feel more comfortable laying out new capital tomorrow rather than in the 11 minutes or so that we have before the policy statement's released. But I look at that TIP, the TIPS bond ETF, which reflects these real yields, Glenn. Straight line down since the middle of May. And that's not, hasn't been good for gold and silver. But if that turns, you get your beach ball underwater where gold and silver haven't been able to rally with oil, but also they've been surviving this jump in real yields. So if real yields come off,
giddy up.
Right, exactly. And then maybe that has implications for your US dollar, which I know that's, again, talking about your corner of the world here. We've been approaching this vis-a-vis some short call spreads here. This 114.5, 115, we're still below the short strike, but you can see here right now we need a little bit more weakness to come into play if we want to get that to a profit at 37 days to expiration. The 116, 115.5, that is a little bit in profit right now. I'm comfortable with both of those here, but Glenn, something like dollar Swiss from your corner of the world, which, given the interest rate differentials and the lack of desire for the S&B to actually move on policy whatsoever, they don't have inflation. They're going to keep rates at 0%, and they've promised to intervene in the currency if it gets too strong. If dollar Swiss starts going down, if dollar yen starts going down, that to me is going to be the signal to get out of a dollar long, because these currencies have been absolute dogs. They haven't been a rally against anything. And if they're able to rally against the dollar around the Fed, that's enough. I've seen enough. It's over. We can reset. We can look to sell euro. We can look to buy, the dollar versus the Swiss franc or wherever at another juncture. But we're not going to let ourselves get caught flat-footed if that's the case.
I agree. That is, those currencies you listed need a bit more confirmation and can be more of a bellwether for a change in the tides. Looking more intraday, I am interested today in the Australian dollar when I wasn't perhaps previously. That's been getting beat up on a combined, risk sentiment deterioration and soft inflation overnight. For what was once a very popular currency to get in on in H1 of this year, it's looking relatively cheap if we get any sort of dovish sentiment here this afternoon and the dollar starts to take it on a chin. This could be a vehicle that's, more high beta historically.
Well, Ilya mentioned the other day taking a look at like pound Aussie and euro Aussie because it looked like you were getting a more considerable breakdown. Both of these have really turned the corner here. Pound Aussie ultimately held its low from May.
Interesting.
Right, you got the break. This is what a trap.
Yeah.
Close below the uptrend, close below the 1 week, close below the 50, close below. Then it just reverses, and then see you the other side. So I can imagine a lot of retail traders got trapped in there. You see the same thing here in Euro Aussie. We even broke the former swing low here and started grinding down into new lows. You got to close below the July 21st low and then last 2 days. So speaking to that sharp deterioration, RBA was expected to hike rates a bunch. Inflation data comes out looking the other direction. Okay, equities here, 74.17 for the S&P 500. We are kind of dancing along the lows that we had just a few days ago here when the range broke down. That's the July 23rd low that we saw here. 74.11 would be that line in the sand. We start pushing aggressively below there, Glenn. It's not going to be fun sailing. You have your NASDAQ down here off 0.8% right now, but still just grinding lower here. Break of those lows that we had in June. And it's just been stair-stepping down right now. The Russell, this is a tough spot right here. And I'm probably at decision day for my Russell positions, and I may have to lift this off depending upon what happens with the Fed here.
Interesting.
Glenn, yesterday, ahead of this Fed meeting, we were looking at the strikes and the positions we were sitting in, and there was a position that had a 29.25 strike, the short strike. And the decision was made, do we want to stick with it or do we want to get out? Given the Fed, given the earnings, given oil, it just felt like it wasn't worth holding a position where, even though it was still like not working against us horribly or even at all, or above the short strike, did we want to hold that risk? The answer was no. Grateful today that decision was made, because now at 29.31, right, that would have been a little bit more painful.
100%.
But anything else lingering, even this thing that I have here at 23 days, 28.75, I'm going to get another 2+%. I'll get 2% basically between now and then, and we reach that short strike. But the line in the sand has been the 50-day here, and that's where we're kind of holding at today. We're holding at the June 17th swing low, the lows that we had here on July 23rd. And so if we start to get into this little box area, right, I'm just going to make it red because it's Danger Will Robinson territory, and that's definitely not a reference for someone in your age group. That's it. Party's over, right? So no overthinking things here. There's no reason to hold the bag, even if there's enough time to expiration. The market conditions may have changed. The rationale for the trade may have changed. It hasn't given the break below the 50, so it's held up so far, but move on.
Yeah, that's great trade management from you, but also from a fresh perspective, this am I right that this Russell could be the vehicle of choice for digesting this Fed reaction? Historically has, a stronger relationship with, real yields as well, and has perhaps a little bit more removed exposure from the continuing afternoon's events, earnings, etc. Is that, if you are new to putting on a trade in an indice, digesting these FOMC decisions, is that the one you would pick?
I think that's a good question because if you recall the 22-23 pullback in the market, right? Small caps got hit harder than large caps. March 23 rolls around and we get the regional banking crisis because Signature, Silicon Valley Bank and Signature Bank, they both go under in the span of like 3 or 4 days in March. And then the Fed ultimately hikes a few weeks later because they decide it's not systemic.
Finish him.
And they we're about the inflation. So the Russell, it doesn't find its bottom. November. I mean, we have the charts in front of us. I don't need to play the mind games here.
I was still impressed.
I always do this. I always do this.
It was good.
Well, you trade long enough, Glenn. You build up your mental memory of what happens in the markets over time, and you just see things.
And a little eye twitch.
October, November 23 is when the Russell finally turns the corner and starts going up. So yes, there is a case to be made that if we're going to see a Fed come in a little bit too hawkish today, the Russell takes it. So how do we express that view? That's the trade of the day here for the show. We did something similar in the NASDAQ. In the Russell here, let's just say we go down to the expected move. This is, big payout, risking $720 for, or we'll call it $630 for a gigantic payout. I mean, that's a lot of convexivity here in the name right now. But I have to actually turn this into a call or put butterfly by fixing it. And now it's fixed. That's why it was looking wrong. Duh. Okay. But even so, looking for like a pin the tail on the donkey here, risking $77 or 400 in the event that the market falls to its expected move today. I think that's worth putting on. Whether or not we get filled is another story here because there's only a few minutes before the Fed and it's the Russell, not a lot of volume in these trades here right now. But the NASDAQ, that's where I'm prepared in case things fall off. We got the put butterfly here going as well. It was put on at the expected move yesterday. Glenn, I got to take a breather here. So do you. We both need to get back to our trade desks so that we can go prepare for this Fed meeting and operate around it ourselves. TP is going to be here to take you through the price action. Live trading with Tom Preston coming up at the top of the hour. So get a break, get your coffee, get your water, come back to Tasty Live. Fed decision right around the corner. TP here to take you through it.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day. Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
I'm not going to be like, oh, look at TP trading. No, it's going to be TP on Broadway.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
So you're an active trader, looking to increase your return, decrease your risk, or quite possibly both. Sure, you've heard of the Greeks. You know, your deltas, your thetas, your vegas, your charms, your vamas, etc. And you're wondering, hey, how do I use these guys to improve my risk-return relationship? Well, join me for a 10-episode crash course, and I'll show you exactly how to do it with all the gimmies and gotchas, one Greek at a time. We'll see you there.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
I'm back, everybody. And what time is it? 1 o'clock p.m. on Wednesday afternoon. And I'm Tom Preston, waiting for my minions at the Fed. Are they going to increase rates or keep them the same? My bet is they're going to increase them. Just kind of the way I see them leaning a little bit, but that's just a call. What I did was I checked the Fed funds futures on the CME FedWatch page, and let me see if I can see those numbers. It was about a 33% chance of a rate hike, something like that. So it's the odds were against it for this FOMC meeting. And looking at the S&Ps right now, SPX was down about $50 just a few minutes ago. Now it's down 11, so they're bringing them back. I'm trying to see what the news is. Let's see. Let's get out of this earnings calendar. Let's go to CNN. Usually pretty good with that stuff. Okay, they're going to announce it, blah, blah, blah. Anyway, bonds are ZBs. Bonds are down 13. They were down a little bit more. Now they're coming back slightly by a couple of ticks. I don't think they've made any announcements yet. The 10s, the VIX has come back. It wasn't a 19 handle earlier, but with the SPX rallying back 35 points, it knocked the VIX back down. Let's go back to ES. And the futures are going to respond the fastest. Just to let you know, just the mechanics of it. The futures, you can actually trade the future. So if I think the market's going to sell off, I'm hitting bids in the ES. The SPX doesn't trade itself. It has to wait for all 500 stocks to update its prices before it moves. Well, it doesn't wait for all five. It takes whatever the last trade is, the last trade price. So it takes a while for all 500 stocks to update. That's why the SPX can be a little bit slower than the ES. So the ES is down, coming down a little bit. It looks like, I don't know. Am I right? Did they listen to me? My recommendation was to have a 25 basis point increase. I don't see it yet. Let's see. Oh, they hold it steady. They hold interest rates steady. I was wrong. Okay. The Fed funds futures were pricing, and like I said, only about a 34% probability that they were going to raise rates. Don't bet against the market. Okay, what do I know? SPX or S&P's down $30 though. So apparently they don't like steady rates, or the fear is, I guess, you come up with your own narrative. Okay, choose your own adventure. They're probably thinking, okay, they're going to be raising them even more in the upcoming meetings. All right, let's enough of this chit chat. Let's get into a trade. So down $20. What do you say we do another broken wing butterfly? What do you say? I'm going to put this out. Let's see. I can see I can see the YouTube chats. So if you want to chat bullish, bearish on the SPX right now, we can probably find put one or call one for the butterflies. Hold rate steady. Yeah, blah, blah, blah. Yeah. Fearful little Fed. Well, I mean, if the Fed's become politicized, for better or worse, I can understand the argument for keeping rates low. I can understand raising them up. All right, are we bullish or bearish on the SPX going to the close? Bearish. Matt Brown says bearish. Hey, if all I get is one vote, that's what it's going to be. Anyone bearish? Brian, okay, I get 2 votes for bearish. Let's do bearish. So I was looking at these earlier. Let's go in the SPX. 0 DTEs, 95. Let's just see this one. And I also want to do some bearish trades. I also want to talk about some of the information I'm hearing about some of the earnings stocks like Microsoft, Meta, that sort of stuff. So what this is just a regular put butterfly, 73.75, 73.85, and the 95s, which is one by one, 50 cents, or it's bouncing around. This thing is moving around. If I drag this out to the 70s, not bad. Let's try for a 30-cent credit on this. Taking $465 worth of risk. And if we nail this, that would be cool. We almost did last week. Friday, we almost did. And what it did, it blew right through our butterfly, or my butterfly, because I'm doing this with my real life money, is it blew through my butterfly and hit my short embedded vertical. So this butterfly, it's a butterfly plus the 73.70, 73.75 short put spread. That's why we're getting a credit. Let's do it for 40. Let's see if I get 40 cents for this. Let's just see. It's bouncing around. This is heaving around like a bad stomach. All right, working. All right, one of the things that I read about was take a fill. Tom Preston. Okay, fine. So we're in this butterfly. It would be nice if we get a 25-point sell-off from here. That would be ideal. So like I said, I don't remember the last time I've actually nailed one of these butterflies. I think it was still in diapers. Anyway, a couple of earnings stocks. Let's go to our watch list that I created just for the show. CoreWeave, CrowdWeave, Qualcomm, SMH, Meta, Microsoft, P&G. Let's just, so let me see if I can find the statistic real quick. Let's see. Here's what I'm reading. Earnings disappointments. So I think it was Goldman Sachs that came out with this. 68% of companies reporting over this past week have beaten earnings by greater than one standard deviation, while only 8% of the companies have missed. However, the market is not rewarding the beats. The companies reporting beats have underperformed the S&P by 3 basis points on earnings. So what that means is the number. So the analysts have earnings estimate, let's say, of the company making, $2 a share. The company reports earnings were $2.30 a share. So they beat the estimates and the stocks still go down. So let's just find the big ones today are Meta, Microsoft. Let's take a look at Meta. Meta for a chart has been, moving lower. I don't know. Does this chart make you bearish or bullish? I don't really care. All I know is the volatility has been increasing here, and I'm just kind of bearish on a lot of this stuff. I've got enough stuff pointing north, bullish trades. I need some bearish. I need some short deltas. Stocks up a little bit going into this. Stocks, it's 595. So let's go down 10 points, up 10 points. The 85 puts are 1915. The 605 calls are 19. Oh, yeah, I mean, the skew is pointed to the upside. Forget it. Let's throw caution to the wind. Let's sell a put call spread in here. I just want to see what I can get. 80 cents, that's about right, about a third of the width of the strikes. Let's do this 5.1 for buck. This is a little bit better. So a 5 points divided by 3 is what, about $60 or so. I'm getting $1.70 for this short call spread. The delta P50 numbers don't work with 2 days. It just doesn't work. $19 of theta. I have max profit $168. I'll be happy if I can make about $80 on that versus $330 of buying power effect. I'm going to ship this off at $1. Let's try $1.60. Let's try $1.62. See if I get filled on that. I want to be bearish on some of this stuff. I think that's going to be another disappointment. These things working on Meta. Let's go into Microsoft. Oops. Come in. First day with the new hands. Microsoft earnings coming up. Again, this stock has been sort of noodling around here, not doing a whole lot. Again, just bearish. It's been underperforming. It's a little tough to do comparison charts on here. You can do it, but the S&Ps have been moving lower. You say, well, Microsoft really hasn't underperformed. It's been outperforming the S&Ps. So let's just say if earnings come out as, again, if it's going to be punished by good earnings, or if good earnings punish it, bad earnings are going to be even worse. I'm going to guess the skew is pointed to the upside on this too, because everybody loves Microsoft, right? Stock's at 398, right in between 97.5 and 400. Close enough. It's down 5 points, 1075. The 9250 puts 1075. The 405 calls 1030. Am I doing that right? Yeah, I mean the skew's slightly downside, slightly. Let's go in here. The 12 and a half, 17 and a half, $1.62 again, a third of the width of the strikes. Let's try it. I want to get filled in something here. I need to trade. Bing, submit. Come on, somebody wants to play. Let's go back into the watch list. eBay's coming up, or SMH. Let's talk about SMH. SMH I don't have a position in. Most people do. SMH is a very popular trading product. Filled in my Meta for $1.62. Still working Microsoft. SMH, a lot of these stocks, I'm long NVIDIA, which is basically SMH. So I've been getting hammered in NVIDIA. Okay, fine. It's a short put spread. I can handle it. But SMH is just weaker here. Let's just try. Can we get a 0 DTE? Markets stink. The markets stink. I don't know. We could try to get filled. We could try to get filled on something like this. $2.50 wide. Let's just try it. Let's see. I just want to see if I get filled at 63 on this. See if somebody wants to play. I'm not getting it. I mean, we'll see. We'll give it a minute. If not, I may just go out to, we can look at the 2 days. No, market's stinking there too. The volatility is just massive in here. And people are afraid of it. Let's go out to 23 days. Yeah, we could do something like this. We'll see if we get filled. I think it's just worth, let's cancel it, move on. They don't want to play. That's the way it is. Take my ball and go somewhere else. Let's see, go into SMH here. Let's see if we can get something a little closer to 5 days. The open interest isn't, man, these markets stink. 12 days? Maybe. Let's go out to 28 days, or 23 days, excuse me. The regular AUGs. Let's go, there's decent open. Let's go to the 550, 552 half. 2.5 points wide, 80 cents. So let's pull this out, maybe one strike, give ourselves some more room. We're well within one standard deviation, so this is a fairly aggressive trade. But again, 70% probability of making half its max profit, about $40 versus $170 or so of max risk. Let's try this for 90 cents. Try it for 90 cents. See if we get filled. That's pretty rich. All right, we'll see if we get filled. Let's go back in. Let's do an SP. Let's check on that SPX trade. Did I get filled on my? Yeah, I got filled in my SPX. SPX is down 25 now. What is that trade? So it's this right here. Similar trades. It's a little bit bigger credit. So I sold it at 45 and it's noodling around basically the same, a little bit higher credit. Let's see if I bought the 73.70 or sell this $1.20 debit. So I cannot do that. The goal is to buy this put spread back for less of the credit that I put the unbalanced for. Obviously $1.20, it's greater than 40 cents. So I'm not going to pay this. If I do that, if I can buy this back for less than the credit, then I own that butterfly, the 73, 75, 73, 85, 73, 95 for free. It's a lottery. It's a free lottery ticket in that case. Let's clear this out. And one of the questions that came up, by the way, I did recorded a video a couple hours ago talking about using XSP options instead of SPX for 0 DTEs. They're great. XSP is 1/10 of the size. You can do the exact same strategy. It's just half it's 1/10 the size. So everything is 1/10. The strike prices are 1/10. The option price is 1/10. The difference is you don't have half points. So there's no such thing as a 73.85. I'd need a 73.8.5 to match the SPX exactly. So if you want lower risk, a little more manageable numbers for the 0 DTEs, fine. Use XSP. Let's go into watch list. No, not pretty. We'll talk about the prediction market at some point, but let's go into CoreWeave, CRWV. I don't know a whole lot about it. We've done some trading in here before. It's just been pummeled. Let's check out the market in here. Earnings are coming up. Let's just see if we can do a 2-day option. A lot of activity in here. These markets are relatively wide, partly because the volatility is just screaming in here. But the open interest is high. I bet I can get filled on something in here. Let's see what the skew looks like. 63.23, right in between here. Down 2 points. The 61 puts $1.91, up 2 points, 66 calls, trading at 180. So the skew is to the downside, it seems, slightly. Let's sell a call spread in CoreWeave. 2 points wide with 2 days. You can get decent credits for these things. Let's do the 66.68 with 2 days. Let's offer it out at, let's try to get 60 cents for this. I don't think we will, but let's try it. Submit. Filled at 60 cents. I just want to put on some bearish stuff. Let me go to YouTube. I have some other trades I want to look at, but let's see if there's anything else coming in here. Any symbols you want, please don't short Microsoft. Sorry, I already did it. Do something in Apple. That's a riddle. Fine. Apple. I already have an iron condor in Apple. Fine. They're coming up in July 3rd. Let's hold on to that for a couple of days. Let's hold on to that. SPA closed at 3 p.m. Chicago. Very important. Yes, that is true. So the XSP, there's some nuances to it. What else do we have here? Any other, probably still bearish, fixed by the Fed. All right, I don't see anything. Let's take a look at PEG. Or no, what was PG? Procter & Gamble. Procter & Gamble's also coming out today. PG. What do I know about Procter & Gamble? Not a whole lot, other than it's got some products that I enjoy, I think. Did P&G already report? Let's see. Earnings calendar, PG, I can't tell. PG. I don't know. Somebody would tell me if Procter & Gamble reported already. I'm gonna go to the phones. It's down after earnings, but how about SoFi? Yeah, I'm short a put in SoFi. Stupid short put. Procter & Gamble, anyone, Bueller. Let's see. Go to a chart. I have a put spread I loaded up. And by the way, one of the things I actually prepare for these half hours is I find products that I don't have positions in. I have a lot of positions in. So I want to find stuff that I need to, the reported today, I think. So eMedia says down earnings after all. Yeah, so it looks like they already reported Procter & Gamble. Let's go into the skew, of course. So 144.60 is right in between 44 and 45. Let's go down 2 points, up 2 points. Decent open interest in this stuff for Procter & Gamble, for Pete's sake. Markets are okay. So 42 puts are 219. The 47 calls 269. All right, the skew is pointing to the upside. So let's just go. I don't think we're going to get anything for 2 days. I mean, I guess we could try. 40, the markets are so wide. I mean, we could try it. Let's try it. Let's try a bullish trade. Let's buy the 141 puts, sell the 143s. Let's see a 50-cent credit for 2 days in Procter & Gamble. See if we get filled. I bet not. We'll come back to that maybe. AMD, Figure, falling knife. Thank you, BBBBB, fine. PG reported this morning. It looks like it did. Figure, I don't know. I've never traded Figure. I have to take Jim's. It's coming out on August 13th. I don't know. I don't like the zero open interest in these options. 2 days. I don't know. Moving along. 81. There's some open interest here, but the markets just stink. No interest. Let's see. What was another one? SoFi. Could have had a bearish trade in SoFi. The 29th. Is that? Yeah, that's today. Bearish on SoFi. See, the problem is it's a $15 stock. How about selling this call spread for 11 cents? That's just too cheap. We can go a little farther out. How about this? How about something like a butterfly in here? Bing. No, you can't get anything in there. Let's do SoFi. It's 23 days. Volatility is pretty high in this thing. How about this? Sell that call spread. It's just the IV rank is low. Let's see. Buy a 16 put, sell a 14 put. See what I'm getting. 91. No. So keep in mind, folks, what I look for when I'm buying verticals is I want the debit to be less than the intrinsic value of the long option. So the 16, they're 65 cents in the money. So this is paying more than the premium. I don't like that. So let's pull this up to the 14.5. 75, it's getting there. How about the 15s? Yeah, it's a little bit better. So the 16 puts are 64 cents in the money. I'm paying 50 cents. Theoretically, it should give me a little bit of positive theta. So what are we bearish on SoFi? Yeah, let's try 55 cents for this thing. SoFi's doomed, filled. Let's go into AMD. Somebody was talking about AMD. Earnings coming out August 4th. Let's go back to Micron MUs. MUs are reporting. I'm already short some stuff or long some stuff in Micron, getting hammered in that too. Hood S Starbucks. How I hate Starbucks. Let's sell a put spread or call spread, excuse me, in Starbucks. What do you say? Bullish or bearish for Starbucks? People, please. I need an answer. I only have a couple minutes left on this. Anyone, Starbucks, anyone? I'm putting you all on the spot. $103.63, right in between here. Go down 2 points. 101 puts are trading at 216. The 106 calls trading at, might be pointed to the downside a little bit. Let's sell the 7.9, 53 cents. Bullish, bearish on Starbucks. Bullish, neutral, scroll. Let's sell a call spread. 58 cents, 60 cents. Boom. Fire away. Boom. Come on, take a fill. All right, let's check our SPX. Down 36 cents. It's threatening our little put spread here. If we bought this back, we sell this out, buy this here. What are we paying for? $1.70, getting killed. But if we can drop down another $6, this could be live on air, an actual winning butterfly for me. Like I said, I can't remember the last time I had a winning butterfly. We'll see what happens. Going out, let's check bonds. My absolute favorite bonds down a little bit. They were down about 14 ticks or so before the number. Now they're down some more. It looks like they're going to pack in. The market seems to be packing in the fear of more rate hikes as we go into September, October, stuff like that. Let's check the ZN. So remember, I want ZN to be down about half as much as ZB. So these are down 7.5, which is about, not quite a third. Maybe about 40% or 60% less than. In other words, they're about 2.5 times. Bonds are about 2.5 times more volatile than ZNs. That's what I'm trying to say. So ZN, ZB, I would be bearish on bonds going into this. Let's sell a bond put call spread. Let's just play. Bing, bing, 12 cents, 203. Nah, I'm just not getting the credits for it. I'm sorry, folks. All right, so what we're looking at right now, going out of here, SPX is down 38. I'm right there. That little butterfly, it's the little butterfly that could. Let's check on some trades. Filled in my S-Bucks. Die, S-Bucks, die. Procter & Gamble still working. CoreWeave, working micro SMH. All right, folks. Remember, none of this is a trade recommendation. If you want to trade this stuff, that is your call. And if you do, please do not take any more risk than you are comfortable with.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
It's time to trade smart, post-PDT rule elimination. And Tasty Trade has the tools traders need. The Active Trader tab's comprehensive market data is designed for rapid order placement in a single click. while bracket orders let traders set entry, profit target, and stop loss all in one ticket. From the Positions tab, you can monitor positions, roll trades, close positions, and create conditional orders. Now, traders of all account sizes have more flexibility than ever before to engage in the markets. Smart tools for smart traders. Tasty.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools, and place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast, man. Welcome to the Fed Decision edition of the program. Guys, I need it. I need it now like I've never needed anything before in my life. I need a tie color, and I don't want just the color. I don't want just the category of color waves that might be hitting our eyeballs. I need a hex code. I need an exactness. I need a surgical level of precision on this tie color because it's not in front of me. I got my platform. I got you guys. I got nothing, man. All I got is you guys to help me with the tie color. So let me know. So welcome to the show if you're watching over on the Tasty Live Network. I would actually bounce on over to YouTube because you can join the conversation and join the discussion, and you can help your boy out by letting me know if he did it again with navy blue for 2 times in a row. So Ben, bring us into the market, man. The market is moving. It's almost like we're right there in the middle of a binary event. EMI S&P is down 50. You got the risk-free instrument, also known as the NASDAQ futures, down 200. You got the boomers down 870. Oh, they're moving. They're moving. He's out there. He's got to be out there. He's got to be out there. Let me see. Blue? Wow. Is it really blue? This is unbelievable. I cannot believe this. It's dark navy. Did he really? Okay. No, I'm not even kidding. I need an exactness like we've never produced before in the history of From Theory to Practice. Did he go navy blue or is it like a medium blue? Like we'll do the hex codes later. I need a dark blue, medium blue, or light blue. He went navy blue? That is crazy, man. This guy means business. Like playtime is over. Like the adults have entered the room. This guy is not messing around, man. He is not messing around. I see Daniel Perkins at the end. The pain is real. Dude, it's too real, man. Like, it is too real. I can't believe it. Like, I can't believe it. I mean, I can't believe that we scalped that SPX butterfly this morning live on the show. If you guys saw Inside the Trade this morning, we did an SPX butterfly for FOMC, and then we took it off on the show and picked up like $1 on the trade, which was pretty crazy indeed. But I really can't believe it. I cannot believe that he went navy blue again. I really am kind of blown away by all that. But all right, let's go ahead. So man, we have so much to do today, so much to do, so much to talk about. Like there's just all kinds of crazy things going on. So a couple of things. So number one, we've got the tie color now situated. That's good. Number two, let's talk about SPX from this morning. Just so your boy can take a quick little victory lap. And by quick, I mean 6 to 8 minutes is the expected move on said victory lap. So we got this trade on. You can see at 10:11. Wow, look at that, man. 10:11, we did that trade, and we got out at 10:15. That's pretty crazy because, inside the trade started at 10 o'clock, right? I started analyzing the SPX trade at 10:01. It took me approximately 10 minutes to get through my introduction of the analysis. And then we decided to put the trade on at 10:11. And then a couple minutes later, the market started going down and we were able to get $1. So this is actually one of the really, really nice things about having butterflies that are so close to expiration, right? Because think about a butterfly or even a ratio spread, right? Like a ratio spread is essentially the undefined risk version of a butterfly. If you have on a butterfly or ratio spread, for what I'm going to say next, it essentially applies to both. If you get a move down or up, if you're playing it to the upside, if you get a move towards your short strike too early in the position's life, it can actually work against you, right? It can actually be problematic and you actually see losses. You actually see red. It can sometimes be a bit of a head scratcher if you've not done these before. And it's like, man, what's going on? I thought this is what I wanted. Well, when you choose a butterfly that essentially has no time left, I mean, a 0 DTE butterfly, I mean, there aren't that many crystals left in the hourglass. Like you can count them on one hand, like maybe both hands and a foot, and you've got all the crystals that are left, and that's good for a butterfly. And so this morning we put it on, and a couple minutes later, it wasn't even a crazy move. I mean, you can go back and check the tapes yourself. I want to say SPX dropped by like 12 or 15 handles. Like it wasn't even that nutty, but it actually worked for us from the standpoint of being able to take off the trade for a profit. So we actually round tripped this guy on the show live on Inside the Trade. And my intention was to hold it into this show, but it didn't happen. And we were able to get that guy off the books. And so that is SPX. There's some commentary right there. And then you've got, so we got our Visa situation from last night. So we did this trade yesterday for earnings last night, and I don't know what Visa said or didn't say. I didn't even see the report, to be honest with you guys. You've got Visa up to 369, and they're up a couple bucks today. We need it up a little bit more. Now, the good news is there's good news and bad news, right? There's gimmies and gotchas. So the gimme is we have time. We still have 2 days left on the trade. So this guy is not going to expire until Friday. And so we don't have to take it off today. This is not like the SPX butterfly that we did this morning in SPX for FOMC. This is all the way to the end of the week. Now, 2 days is not a long amount of time. This is not like, a 45-day trade or a 30-day trade or whatever. Like, something's going to need to happen here in the next couple of days. But when you're doing a same-day trade, like a 0 DTE guy in the morning going into the afternoon, then that can obviously be something that has to move a lot more quickly, a lot more expeditiously. Otherwise, you're just not going to have the time to get the move that you need. With Visa here, though, we still have time. We still have a couple of days to go. That's the gimme. The gotcha is, we're not quite there yet. And we are showing a loss right now. Now, it's not that big of a loss. I mean, if you're a P&L Open bro out there, I love you guys too. Don't let anyone ever tell you otherwise. We're only down 70 cents on that guy. It's not like a Netflix, right? Down $15. It's not like an MNQ, right? Down $8 on the trade. And again, remember, 8 option dollars is 800 actual dollars. And so, so in the grand scheme of things, the Visa trade is actually not too bad. So we sit tight, we do nothing for all those reasons. And then other than that, I don't think there's anything in the portfolio currently. Man, look at the boomers down 800. Man, look at the boomers down 800. That makes sense, though, because, back in the Uncle J days, right, like 7 weeks ago, back in yesteryear, I mean, Uncle J is a boomer. Like, he's their brethren. Like, he's their people, right? They are one and the same. And so now Uncle J steps aside, Cousin Kev takes the podium. The boomers don't know how to handle this, man. Like, he's like a Gen Xer, is he not? He might even be a Zoomer. Like, how old is Warsh? Like, somebody let me know in the chat, because I want to know, and the algo needs to know, how old is Warsh? I actually don't know. I'm going to say age is always a tricky thing, man, because I don't know what his facial routine might be like. I don't know what kind of moisturizer he might be using. I have no idea. So I'm going to say Warsh is maybe 51. I'm going to say he's between 48 and 51. So my own personal expected move. I'm 48 bid. I'm 51 offer on Warsh's age. Somebody let me know in the chat, how old is Kevin Warsh? You guys can probably figure that guy out. So, back in the Uncle J days, I mean, the boomers loved when Uncle J spoke up because they all kind of nodded their head and all kind of like, yeah, that's our guy. Now they don't know how to handle this. They don't know how to handle this at all. So boomers down 800 makes perfect sense to me. And so yeah, but when we look at the portfolio, there isn't really anything else that needs our attention right here and right now, which is good because, man, do we have a bonanza for you guys. And I see you guys in the chat, by the way. Point B is here, and Ash Finn is here. LS Home Automation is here. Wolf is here. Man, you guys are really putting in some work in that chat. Really doing it. Look at this, man. I appreciate you guys so very much. So let's see. Daniel is here. Weiss is here. Man, Griffin Jones is here. Joel James in the house, man. I appreciate you guys. Man, look at Fred S in the house. Warsh is 56. E-Media 78. Uncle J is 73. That makes sense. Warsh is 56, so I was way off. See, there you go. I don't know. I mean, he's got that hymns subscription like on point. Like he is ready to go, man. And so, yeah, okay, so 56. All right. So I thought he might be a bit younger. So 56 is not a boomer though, right? 56 is a Gen Xer though, I think, right? Is 56 a boomer? There's no way. He would be like an early blossoming boomer. And so he would be like the earliest possible blossoming boomer when it comes to 56. I mean, somebody let me know, what is the actual, now I need to know. See, the plot thickens. This is very similar to a Christmas card mystery that we solved across Monday and Tuesday shows. Give me the actual years for the generations. I know that millennials start in 1981 because I was born in 1981. And I know like it was actually, I mean, it was a close vote to allow me into the millennial category. The one before me though is Gen X. Before Gen X, I don't think it's boomers. I think there's some other, like the silent generation or whatever it's called. And so let me know, give me like some date ranges on the actual generation so we can pinpoint where we should put Warsh. But anyway, oh man, I digress. Off of a digression at this point. So all right, we got 4 earnings trades for today. We got to do Meta, we got to do Microsoft, we got to do Chipotle, and we got to do Starbucks. And we're going to do all 4. Amelia May has all of our analysis down. It is in front of me. It is in crayon, lots of pictures, but I think I understand what she's trying to say. And so NASDAQ green, of course. Why wouldn't it be green? Why wouldn't it be green? Wasn't it down like 700 earlier? Hang on a second. It was down to 27,400. So yeah, so it was down about 500 points earlier. Now it's unched on the day. Man, was there ever a doubt? Was there ever a doubt? I think not. And so, man, it's just too funny. It's all made up. The whole thing is so made up. Ah, it's so made up. But I love it. I can't get enough of it. But man, it is so made up. All right, let's go ahead. Let's go to, let's go meta first. So first, Amelia wants to do a little meta action. Okay, so here's what we're going to do. So obviously, you've got 4 earnings plays. You've got 4, it's a Wednesday going into Friday. You might be expecting a bit of a butterfly bonanza, let's say. I don't think we're going to go in that direction. We're going to shock the muscle a little bit. Like on a Wednesday, maybe we're going to hit some chest, right? Chest is obviously a Monday play. Chest is obviously a Friday play to get that weekend pump. But chest on a Wednesday, man, the system's not ready. You're not ready. Nobody's ready. But we're going to do it. We are going to do a little bit of butterflies, but we're actually going to mix it up a little bit. So with meta here, here's what we're going to do. We're going to go into the 23-day cycle. You've got meta. It's unched on the day. That makes sense, obviously, because everybody's waiting to see what does Zucks have to say about the future and the present and the past of meta, because all those things are kind of converging at a singular point in the actual singularity. And so I'm thinking we're going to do a short call spread. And I'm thinking that because Amelia May has that written down right here. So what we're going to do, maybe a 610, 620 call spread. And the nice thing about call spreads is the pricing on a short call spread is oftentimes very, very favorable. And so with the I see you guys, by the way. Fred, thank you so much. So Griffin Jones, the Jumbo Life, Sam L, Flipper, I appreciate you guys. Yeah, so I have to pivot really quick. So Fred says Gen X is 1965 to 1980. That's correct. So Warsh is Gen X. That's correct. What did your boy say? I said Gen X. I just felt it, man. I just felt it in my bones. Like I knew it. And I was actually right. That's amazing. It's the first time I've been right in 10 years on From Theory to Practice. And it has nothing to do with the trade, so that is about right. And so, but with Meta, we're going to do a short call spread. Very simple way to play the downside, very simple way to take a bearish bias. And yeah, I mean, right now, you've got credit collected at $4. And so you've got probability of profit at 61%. Like that looks good. You've got a P50 at 70%. Like that looks good. I mean, 65 to 70% is moving, obviously, as the market moves. You've got basically a risk $1.50 to make $1 situation. That's good. Your buying power effect of just whatever your maximum loss is because it's defined risk. You're slightly bearish. You've got a little bit of positive theta. I mean, this is just a great way to take a shot. It's a great way to take a shot. You're not going to get hurt too badly. If we're dead wrong and Zucks comes out and says, hey, we're bringing back the glasses, but they're actually going to work this time. We're bringing back the metaverse, but it's actually going to work this time. I mean, obviously none of that is true, but maybe the market kind of clings onto that and it gets excited about that. It's definitely possible. And so I'm kind of thinking here, I think this is it. I don't even know that I don't know that we need any more analysis. Not that we've offered up any to this point. I think this is it. I mean, one more point of analysis, I suppose. I do typically like to collect about 40% of the width of the spread. And so we're right about there. So that's good. I really like to be around 40% of the width of the spread whenever I do a short vertical spread. Sometimes I might be around 35, 37%, but it's pretty rare that I'm as low as 33% these days because I know that's a great starting point and that has its own set of, gimmies and gotchas, of course. But I don't really like the fact I don't like the fact that I'm not going to be able to adjust a vertical spread that much, over its life on its own right. Like for its own merits, I'm not in love with that fact. Given the fact that I'm not in love with that fact and given that fact alone, I'm trying to sort of finagle and muster up a little bit more wiggle room on the front end in terms of more credit and reduced risk when I put the trade on because I know I'm not really going to be able to roll this for a credit so easily. Like, yes, if I'm at 21 or 14 days, whatever, and it's around break even, I can probably kick it out for a couple of weeks or to the next month and pick up a little something for doing that. But a lot of the time with a short vertical spread, it either works or it doesn't. Like a lot of the time, it's either a winner or it's a loser, which doesn't mean it's a max loser, but it just means that you're not necessarily able to extend the duration and extend the life so easily. A lot of the time, you have to kind of stick with what you got. You have to dance with Ubrunga. You may not want to dance with Ubrunga, but you just got to do it. And so thinking about that, I'm like, well, let me be a little bit choosier and a little bit more selective here on the front end with who I want to dance with. And I'm thinking, let's dance with something around the 40% marker. So 390 is not too bad. I think it's decent. So let's go ahead and ship that guy. And all right, 392. So there you go. I got filled at 392. Okay, so now we've got three more to do. Let's do okay, so Meta, cross it off. Okay, now we're gonna do Microsoft. Okay. So now Microsoft, this is going to be our butterfly play. Now again, you have to make up your own mind. You have to draw your own conclusions when it comes to your directional bias, your trade, your mechanics, all those things. For me, when I think about Microsoft, just as an idea, just as a thought experiment, I don't know how you can be anything other than mega, ultra, super bearish. I mean, just thinking about Microsoft and just thinking about what they got going on, it's like, man, I mean, I'm a Windows user basically by default, but I'll be darned if I'm not kicking myself for making that decision pretty much on a daily basis. And so I'm kind of thinking, what if we do a 395, 372.5, 350 for should be about $4. Yeah, look at that, 393. Man, look at this. I mean, it's a beautiful thing. It's a beautiful sight. Now, it may not work. I don't know what's going to happen. In fact, if my track record is any indication, we have an uphill battle ahead of us. But when I look at this, the strikes on this butterfly here, I'm 22.5 points wide. And so that is a fairly wide butterfly for a $400 stock. I mean, you think about that, that's 5% of the stock price. And so that's pretty solid. I don't have like a hard rule in terms of like what percentage of the stock price do I look for when it comes to, like the wing width on a butterfly. I should probably think about that a little bit more. I think I probably could develop some things around that. I tend to do it more by feel in terms of, just looking at the pricing that day and understanding, again, in my bones, just like Kevin Warsh being a Gen Xer, I'm just kind of like, yeah, it looks good or it doesn't look good. And I try to explain my thoughts as fully as I can in the moment, of course. But we could probably do a little bit more in terms of explaining things around the edges there. But here you can see we're risking 400 to make a potential 1800. Now, again, the maximum return on a butterfly is an illusion. You're not going to get it. Too many things have to go right. But it does give you a nice runway to consider when it comes to managing profits and understanding, what you could potentially stand to gain on that trade. And so, man, I don't know. I mean, this looks pretty good. Almost looks too good. I don't know. NASDAQ up 120. Why wouldn't the NASDAQ be up 120? I mean, come on, man. Come on. I like it though. I mean, when I think about Microsoft, it's got to be the downside. It's the only way. And so if you were bullish on Microsoft, you are welcome. So let's go ahead and let's do 388. I can't get filled in Microsoft. They don't want to give it to me. All right. Well, now the mid price is 401. Wow, look at these mid prices jumping all over the place. All right, we got filled at 401. Okay, beautiful. There you go. So there's Microsoft. Okay, awesome. Okay, next up. Wow, I want to get to you guys too, man. We got to do this fast. Okay, so next up, we've got Chipotle and we've got Starbucks. That's right. Chipotle. Man, I can't believe I'm doing this. I really can't. I can't believe I'm doing this. Chipotle owes us so much money. It's almost sickening how much money Chipotle owes us. And they keep taking additional funds from us because we're back there every week. For the guacamole, the 3-day-old stale chips, like we're back. We're coming back. Like they know. They don't need to put fresh chips out. They can get away with the 4 to 6 day old stuff because they know we're coming back. Like they know we're not going anywhere else. You going to go to some high quality Mexican? No, high quality Mexican. No, of course not. You're not going to do that. So I'm going to go to 23-day cycle. And I actually think for this one though, I want to keep it super, super straightforward and super, super simple. So we're going to do an at the money vertical spread. And guys, I can't believe I'm doing this. I really can't. But again, I feel it in my bones. We're playing it to the upside. 33.36 vertical spread in Chipotle. $1.45. And so 23 days to go. $1.45, 33.36. And yeah, I mean, I like the trade. I like the trade a lot, simply from the standpoint of if it doesn't work, it doesn't work. It's $1.50. I mean, it's 0.5% of the account or less than 0.5% of the account. So from a position sizing standpoint, I mean, shrinking things down really makes a ton of sense when it comes to really just overall. I mean, obviously, if you can do it and it's still economically significant, but especially around binary events, especially around like earnings and FOMC and kind of, stuff like that. And so, yeah, so $1.48 on Chipotle. I think we're going to do it. So let me clear that away. Let's ship this guy. And then we've only got one more, right? We've got one more to do. And it's Starbucks. And guys, I caught the end of TP's show, right? I caught the tail end of that amuse-bouche. And I could not believe my ears. Well, ears, since I only have one that works. I could not believe it. TP was talking about being bearish on Starbucks. TP was talking about how he hates Starbucks. TP was saying so many things that I am just not allowed to say. Like I am morally obligated to play Starbucks to the upside, which you guys should know about. In fact, have I ever told you guys how I met my wife? It's kind of amazing because we're almost at 11 years on the network now, and I still don't think I've ever told you guys that story. Have I ever told you guys how I met my wife? I know Ben doesn't know. I know Roberto doesn't know, but unfortunately, we're already halfway done with the show. It'll have to happen another time, which is sad because today is kind of the perfect day for it. But we're going to go in to the 51-day cycle. Oh, wait, no, actually, hang on. I want to do the 23-day cycle And I want to, of course, play Starbucks to the upside. It's the only way that we're allowed to play Starbucks. Let's just keep this really simple and really straightforward. I'm thinking, let's sell a put, man. Like, let's do, our tried and true Betty Crocker #1 strategy, the short put. The calculated risk from today. Again, you'll see the black polo. You will know it's all about short puts. Right? It's my #1 strategy. It's my go-to strategy. There's so many reasons why. We've talked about this for 10 years on the network. I know for some reason, somehow I haven't been able to share that story, arguably the most important story in my personal life and maybe even professional life, how I met my wife. But we've talked about short puts. We've talked about short puts a lot. And so I kind of think, let's go ahead and, man, I don't know. I kind of think we just sell the 101 put, I mean, the buying power is only $1,700. I mean, so that's going to be, it's going to be what, 5% of the account, 4.5% of the account. So that's pretty solid. And I mean, I like everything about this trade. The most of which, the fact that it's Starbucks. And so there you go. We are bullish on Starbucks. So once again, the fade TP strategy is in effect. And so there you go. All right. So let's see. Let me go to you guys. We're kind of halfway done with the show now. And so, man, you guys have done some super, super great work in the chat. I appreciate you guys so very much. Let me surprise and delight somebody, though. I'm going to surprise and delight Jem. What's going on there, Jem? I see Jem in the middle of the chat. I don't recall you having been in the chat before there, Jem. So thank you so much. Thank you so very much for being a part of the show, being a part of the network. And I do not take it lightly. Your time and your attention, like, it absolutely means the world to me. So thank you so much. If I can ever help, please reach out to me personally, and I'm more than happy to do that. But Jem says, hey, Dr. Jim, talking about ratios, I really like them for the embedded debit spread. Yep. Is there a way to diagonalize put ratios so that the Theo P&L expands to the downside when IV expands? So this is a very interesting thought. And I've actually had the same thought in my head just recently, like in the last couple of months. And again, if you saw my office, if you saw my studio, I mean, there are stacks of paper all over the place. I'm not the most organized fella that you've ever met. But when I have thoughts, I just start kind of scribbling them down. I start working through them. And I've actually had the exact same thought there, Jem, from the standpoint of, like, here, we'll just walk through it. It's still kind of an incomplete thought in my mind. And so I'm not going to be able to give you a complete answer because I'm working through this myself. But we are synced up, man. Like, we are on the same page. And so don't ever let them tear us apart. But if I go to, I mean, we can pick anything really, but if I just do, I don't want to do something I have a position on in just to keep it I want to keep it clean and tidy. Like if we go to, like if I go to IWM, right? Like a lot of times with IWM, or I'm sorry, with a ratio spread, everything is in the same cycle. So everything is in the same cycle from the standpoint of, all the different components and the legs of the strategy, just to keep it kind of simple. So if I went into IWM and I wanted to do a ratio spread, I might like buy a 290 put. You've got the stock at 293, and then I might sell a couple 286 puts. Right. So that's a classic 1x2. And, you can go to the curve view here if you want to. Yeah, that's right. Dr. Jim on the curve view today. So that's how like things are pretty wild and crazy. But like if we kind of zoom in a little bit there, yeah, the zoom wheel, it's really, man, it's a little wild on the curve view. There you go. That's nice. So you can see that, if it rallies up, we keep the credit that we collect. If it kind of settles in right around that short strike, we can potentially stand to make more. And then, of course, all of our risk is with the extra short put that's tacked on the end. And so this is a very, very solid setup. And the 1x2 in the same expiration cycle really makes a ton of sense. Okay, well, let's go back to the table view. Because I can only stay so long on the curve view until I start to get a little nervous because I'm like, this doesn't feel right. But if I go back, but I know it helps you guys out a lot. And so I'm trying to grow, man. I need to try harder because I've been saying that for like 7 years. But if we go back to the table view, so one of the things that's interesting to me is thinking about, the shorts and the long with the ratio spread and thinking about how to potentially situate them such that I can take advantage of the embedded put spread while also the extra short put. And so what I started to think about, and this may not directly answer what you proposed there, Jim, But this is kind of where I'm going with it. So, by all means, I'm gonna use, my random yammerings here to potentially add some significance around the edges to what you're doing. If I did a 290, a 286 actually, no, let me clear that away. What if I did a 290? So what if I go to August with 23 days to go? So this is the type of strategy that I'm setting up. I go to August with 23 days to go. And I want to put my long put spread in this cycle. Now, again, I'm not sure. I'd really have to think through how this is going to play with IV expansion. And so that's the part of the puzzle that I haven't gotten to yet. But I'm trying to solve for a different problem that's kind of embedded with ratio spreads. So what if I put my long put spread in the 23-day cycle? So my 290, 286, right? It's going to be the same put spread that we had in the later cycle. But what I'm going to do now is, let me clear that drawing away. I'm going to take my extra short put and I'm not going to put it in the same cycle. I'm going to put it in the longer dated cycle. And I'm going to move it down a little bit to create a little bit of a 1-1-1 strategy, which is still a ratio spread, but it's calendarized. And so you said diagonalized. I'm kind of saying calendarized. Maybe we kind of mean the same thing in this context. Maybe not. But if I go in here and maybe I sell, you could sell the same strike if you want to, but I kind of like, maybe I take advantage of this by, selling a 280 put in the 51-day cycle. And so I really like this strategy a lot. I mean, obviously there's a lot of buying power, so it'd be a little bit too big for my account here. But I like this strategy a lot because look at what happens with the curve view. So now, in my opinion, I have a much better setup for what I'm trying to accomplish. Now, what am I trying to accomplish? I'm trying to not get crushed, right? What am I trying to accomplish? I'm trying to not get gorilla smacked. That's what I'm trying. That's priority number one. So with that mission as top priority, I really like the way this sets up because it does a couple of things. It gives me a little bit more room to potentially make some money because I have distance between my two short strikes. But also the way that I've set up the vertical spread and the extra short put, I think I'm kind of tapping into the strengths of both of those strategies. And potentially minimizing some or maybe a couple or maybe all, probably not all, but some of the weaknesses. So with the long put vertical in the 23-day cycle, if there is a move down lower, that's closer to expiration. So because that's closer to expiration, it's going to fill up in value more quickly than it would be if it was at the 51-day cycle. So I really like that. I like that trade a lot. But because I've taken my extra short put and I've pushed it out further in time, that is actually going to not necessarily get hit as hard in the event of a big move lower. And so if I get a big move lower, I've still got all the risk. I still got all the risk to the downside. Like that hasn't changed. But when it comes to like having to kind of absorb that risk really, really quickly, this is part of the reason why we like to roll our trades out. This is part of the reason why when we get in trouble or we're at 21, 14, whatever, and we want to kind of soften the exposure to the Greeks, we move them out in time. Well, I'm kind of solving for that on entry in a way because I've already moved it out in time relative to the long put vertical spread. And so I like that because it already gives me some softer Greeks on that extra short put when the trade begins. So those are my thoughts there, Jem. They're very incomplete, and I haven't quite identified all the gotchas. I mean, there's all the typical gotchas of a ratio spread, but I think there are some others that I'm not exactly seeing right now. And so, again, it's an incomplete thought for sure, but hopefully it can give you a couple of things to think about. And so, but man, let me go. Wow, the show's almost over. That's crazy. See, we got lulled to sleep yesterday by having the extra long show. And now it's like, man, we got 7 minutes to go, 9 minutes to go. That's crazy. That's absolutely crazy. Point B is in the house. What's going on there, Point B? I'm all the way back to the beginning of the YouTube comments. If you're brand new to the show or if you're trying to follow along, I am now in the YouTube comments, and that's where I will live for the remainder of the show. So Point B says, Doc, Fed says no change. 3 Hawks say, now we're hiking, and the market's out here having an identity crisis. I don't know, man. Basically a normal Wednesday. Let's get your read on it, Dr. J, man. Let's go. You already got my read on it. NASDAQ up 120. Was there ever a doubt? Like, was there ever a doubt? It's so funny because my MNQ, if you actually go back and watch Inside the Trade this morning, and you should do that. Even if you've already seen it, you should watch it again because your boy needs that watch time. I was down and getting hammered on this MNQ position. I think I was down $700, $800, $900 on the day. And so it's just too funny. It is too funny how powerful the DNS is. The DNS, the do nothing strategy, it is the default setting for a reason. I am just continually amazed over and over and over again how powerful it is to do absolutely nothing. Nothing at all. Just let the short premium cook. Let it cook. Because again, remember, if we're cooking, that's good. If we're cooked, that's bad. So right now, it's cooking. That's a good thing. Right? We're not cooked yet. We are still in the process of cooking. It is present tense conditional. And so thank you there, Point B. I appreciate you, my friend. But those are my thoughts. Ranch was in the house. Ranch is in the house. Wolf is here. What is going on there, Wolf? Ash Finn is here. What is up, my friend? I appreciate you so much. Ash Finn coming up clutch on Twitter with the new Gorilla Mind flavor of, I think it was candy apple, if I'm not mistaken. Candy apple. I haven't tried it yet, but I'm really hoping that my guy up at Vitamin Shop down the corner there has it because I'm very excited to give it a try. Obviously, Ghost is number one, but Gorilla Mind is some good stuff as well. And so it's very much a 1A, 1B type of thing. Samuel, protect your families. Uncle Kev. No, it's Cousin Kev. Uncle Jay and Cousin Kev. Cousin Kev has entered the stage. Yes, he has. And I still can't believe he went navy blue. I'm absolutely blown away at that. Jong is in the house. Thank you, some TB. That's correct. SC Golfer is here. Shane, what is up, my friend? Thanks for the email. You are welcome. You're the man. Man, I could use the market to help a little bit. Here you go, man. I got you covered. I got you email. I got you market lifts. I got whatever you need, man. I got whatever you need. It's always my pleasure there, Shane. Reach out anytime. And that goes for all you guys, man. Like, I'm so happy to help. You know, if you guys ever want to email, I'm just jschultz@tastylive.com. Or if you want to connect on the Twitter, I spend way too much time on Twitter. And so I'm on there all the time. I'm at jschultz F3. So F as in Frank and 3 as in the number 3. Point B, can you comment on how to play a straddle when it's tested, referring to Palantir 130 strike, August 21 expiration? Yeah, so this is actually, I can give you some general thoughts on this. I don't even need a specific ticker for this. So when I have a straddle on, generally speaking, as long as it's inside of my break-even point now, I'm not doing anything. So now the break-even point becomes, I mean, even with the strangle, the break-even point a lot of times for me now is kind of it's my line of demarcation, right? As long as I'm inside of the break-even points on either side, then I'm feeling pretty good. Like, I'm feeling pretty good. I don't really necessarily feel like I need to make an adjustment. Now, I may choose to make an adjustment because of what else is going on in my portfolio or what have you, but I don't feel like I need to make an adjustment. I don't feel any type of urgency. In fact, I like to be small enough most of the time to where I kind of feel no urgency at all times, to where I'm like, all right, I might make this adjustment. I might not make this adjustment, but if I don't, or I can't, or I forget, or whatever, it's like, it's okay. Like, I'm not emotionally charged up to the max with every 5-point or 6-point move in the NASDAQ, which we've all been there. I've been there. You've been there. I think everybody's been there. And that's a tough place to live, man. And so, but when it comes to a straddle, it's the break-even point. The break-even point is what I'm looking at. So as long as it's inside the break-even point, I'm not looking to do anything. If it gets outside the break-even point, now you kind of have a decision to make. Namely, do you want to just sit in the straddle and stay directional? Because if you have a straddle on and the stock is up, you're bearish. If you have a straddle on and the stock is down, you're bullish. You're going to be, obviously, the negative gamma is going to kind of make you fade whatever the stock has currently done. Are you okay with that? Like, are you okay being or having that type of directional bias, or would you rather be more neutral? Like, would you rather be more neutral with your bias that would allow you to tap more into time decay, volatility contraction, things like that? That's when considering an inverted strangle can make some sense. Like, considering, inverting into a strangle can make a little bit of sense. That becomes a little trickier to manage, and it requires a significant amount of skill, in my opinion. You can always roll out in time to pick up more premium that way. You can always close the position. I mean, there's a number of things you can do. But for me, the break-even point is kind of the line of demarcation. Hopefully that helps a little bit. And so BBB Fine is here. What is up? Got lots of earnings trades to do. I know we did it. We did them all. And so there you go. Ranch in the house. Daniel is here. What is up? Dr. Jim, you are the best, man. I appreciate you so very much. So very much. And if you classify a B- as the best, you are correct. And so thank you, my friend. Ranch in the house. What's going on there, Ranch? BBB Fine. Earnings. Hood, Starbucks, Microsoft, Meta, CMG, and then CV. Is that Carvana? Robinhood's tonight too? That's Carvana, right? It is Carvana. I can't see because of the Zoom thing is in. I think that's Carvana, right? I can't see it because of the Zoom. Oh yeah, there we go. It is Carvana. Yeah, Carvana. Wow. Weren't they up to like 500? No, that was what's that other that's the rental car company, Avis or whatever it's called. Yeah, they remember when they ran up to like 500 or 600 recently? That's crazy, man. And then you got Robinhood. Oh, Hoof. Wow, Hoof is wide open. That's crazy. I mean, you got BEU wide open, right? You got Hoof wide open, right? You got Bark, right? Oh, Bark is actually a stock? Wow, Bark, hold on. Bark is a stock? And it's just Bark Inc. Wow, that's amazing. I did not know that. I mean, I figured because Hoof is available, Bark is probably available. I mean, Wolf is already taken. We've already gone over that. But wow, Bark is actually a stock. $9 stock. Look at Bark. I think I just said Barf. That's funny. Bark. Look at Bark. Interesting. Hang on. Whoa. What is this stock? I mean, they'll just give anybody a ticker these days. Look at this thing, man. So you've got August options, right? But then Bark is like, we're going to take September off. And you know what? So taking September off is so nice. We're going to take October off too. So right now, the only options on the board for Bark are August and November, which is crazy. And so I don't know what's going on out there. I would absolutely be very, very careful with, I don't know what's happening with this. We never should have gone down this road, but it's too late now. Bark. So you've got a stock at, okay, so something's weird about this stock. Yeah, it may not even exist. This may just be happening within our imagination. This is like Lost Season 5, right? You don't really know what's going on. I don't know what's going on, but we're still watching, right? And so, yeah, so Bark, I would forget about all that stuff. Yeah, forget about Bark. Forget we even mentioned it. But I appreciate you guys. And so Sam L is in the house. Doc, SPUX earnings only bullish. That's correct. I think you have a story about Starbucks. I do, and I've never told it. It's incredible. It's absolutely incredible. But again, guys, the content's not going to write itself. And so tomorrow, Friday, you got to tune in. Purple tie risk has officially been replaced by the navy blue. Yeah, I still can't believe it. I really can't believe it. Point B, I decided to follow and join Dr. J on the earnings play. My first time not fading the Doc after the Red Sox 15 win streak. Man, I appreciate you so much, my friend. Yeah, we lost to Oakland last night, or the artist formerly known as Oakland. I guess they're the Sacramento Athletics now. And that was kind of a bummer, but it's okay. LS Home Automation is here. What is up? Point B, greetings to Ben. Yeah, shout out to Ben, the producer of the show. He's doing a great job. I know Ben does the morning show, and I think normally Laura does the afternoon show. She'll be back next week. Ranch is in the house. Let's see. BBB fine. The Visa call butterfly from you. I did my own put butterfly, and the dang thing is stuck in the middle doing nothing. Double loser. I know. But we've got time, though. We've got time. And so we've got till Friday, and we may need to use all that time. And so, wow, I'm like totally out of time. Wow, I am. But I see Ryan LP is here. Weiss is here. Emidia is here. Mikos is here. What is going on there, Mikos? I think it's been a minute. I appreciate it. Archer Fire is here. Man, look at you. Got Flippers here. Man, I appreciate you guys so very much, man. Guys, come back tomorrow. I know I wasn't able to get to as many of you guys as I would like to, but we did so many earnings, had SPXs, had victory laps that we had to take, and all those things. But I appreciate you guys, man. I appreciate you guys so very much. If I can ever help you guys in any way, please shoot me an email. I am jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options, profit, and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Investopedia says we're the best for options trading. Stockbrokers.com says we're #1. And Broker Chooser raves about us too. So what else can we say other than boom? Trade like a trader. Tasty Trade.
Hi, everybody. Tim Knight here, and we're in the midst, I suppose, of Kevin Warsh's press conference. As I've mentioned, historically, this program begins while the man is still talking. You know, formerly Powell, now Warsh, and so I don't know what he's saying or if he's done, but as usual, the meat of the dynamism is during the press conference, not the announcement. The announcement came out that rates were not going to change, even though there's some dissent about that. And the markets were, didn't move that much. But when he started talking, then they started going crazy. And we went from a deep red day to a pure green day, and now it's a mixed bag again. The NQ is actually up a little bitty bit. Well, it's red again now. But it's been a really interesting day. One where you feel like you're at the amusement park and you're getting all your belt buckles on because it's a crazy ride. I do have some charts for you, and I'd like to go through them as we work our way through this final, 43 minutes of mayhem in the trading day, and of course get ready for the big earnings announcements after the close. So here's the diamond. Now, I'm on my website, I have a little diary function, and I steadfastly enter diary entries each day for how did I do? And I did all right today. I dialed back risk in areas that had produced really good profits because, as you know, longer time viewers know, I've been beating the semiconductor bear drum for a long time, and that's worked out great. And I took some of that risk off. Now, early today, I was pretty mad at myself because they kept falling. Later in the day, I was like, okay, that wasn't such a bad idea because we are seeing pockets of strength here and there. One area that I'm pleased with myself with is the diamonds. You may recall yesterday I had pointed out that the diamonds were the odd one out. They were very strong yesterday. And I had speculated that if they can get their way back up to the trend line, it'd be a great place to short it. They didn't bother. They just plunged today. All of yesterday's gains and the day before and a little of the day before that were gone. And I was a little upset because I'm like, well, there goes that opportunity. But you know what? During that rally we just saw with Mr. Warsh, who seems an exceptionally intelligent man, is honest to God, this is as neutrally political as I can say. It's nice to see anybody from DC who's smart. And as much as I castigate the Federal Reserve, it does seem to be the brain trust of DC. So he's clearly a well-spoken and very intelligent man. And as was Powell and as was Dr. Yellen and all the rest of them. So I actually have a lot of respect for their intellect. Their mission, not so much, but smart folks. And he was saying things that the market liked, and the market was rallying tremendously. And I took advantage of that because we got very close to this price gap, and I shorted the bejesus out of it. That's a quantity, that's a high-end technical term, but yeah, I shorted a ton of diamonds near that gap, hoping that it wouldn't cross it, and it didn't. As you can see by the big fat red bar now, we got close, but it did turn away. And the market, as we began the program, it was a mixed bag. It's all red again. So yay. So that's working out. The ES, good news and bad news. The good news is that we finally pierced that support. The bad news, it's not that bad. The milk toast news is that it doesn't look like we're going to close below it. But you know what? Give me a good Microsoft tumble. Give me a good Meta tumble, either or both. That'll do the trick. May not happen. It may not happen. But the damage is done. We have cut through, and maybe this will be it. Maybe tomorrow we'll finally get below that, because the tech stuff has been, dare I say, easy. Don't want to offend the market gods by using that word. But ES hasn't happened yet, but I'm fingers crossed. Tech stocks shown here by way of XLK have been just a beauty. Like I say, I've been a maniac about shorting memory and semiconductors. And I'm sorry to tell the story again, but I will remember to my dying day seeing that article in the Wall Street Journal about South Korean traders that were 21 years old, just discovered stocks, and they were buying and borrowing money from credit cards and buying and buying and buying. That was such a shoeshine boy moment for me. And that was probably almost to the day of the peak. So thank you, Wall Street Journal, for that. That was not the intent of the article. It was just kind of a human interest story. But that's the sort of thing you'd be like, oh, you guys are toast. So that's exactly what happened. And I saw that libertarian soul that I am, I saw that South Korea is going to, their government wants to work to support the markets, which is just an eye roll moment. This shows what snowflakes equity bulls are. They always have to be bailed out. Always. That's why we're $40 trillion in debt, because bulls always have to be bailed out. What happened to my gains? This hurts. I don't like losses. The bears don't seem to get any help. We're on our own. Independent souls that we are, full of piss and vinegar. But the bulls, the South Korean bulls in this case, you want to bail out. So I guess they're going to get it, which to me just is another feather in the bearish cap. It's like, well, I think they're really in trouble now. Because as we saw on, Rain Man Memory Time, September 19th, 2008, they did the bailout. They made illegal to short financial stocks in the United States. And that worked for about 10 minutes, and then all holy hell broke loose. So that was pretty right on. Incidentally, I've also noticed that whenever the Fed chair stops speaking, then everything goes to hell. Maybe he stopped about 10 minutes ago, because I'm just out of the corner of my eye, I'm seeing just everything just go back to where it belongs. And it's like, I guess the man stopped talking because people are selling. Either that or he disrobed for no particular reason. So it's nice to see. Not the disrobement, but the fall. So in any case, going quite red. I've had some screw ups today. In a market this dynamic, to put it gently, one can mess up. I've had a couple of blown Bitcoin trades. I scurried out of my spider puts and re-entered them at a little bit of a worse price, but they're profitable again. So there's been some ham-handed trading here and there, but on the whole, not too bad. I just talked my way all the way through that chart. The point was there's a beautiful right triangle pattern, and tech stock's been very, very clear. Bloom had earnings last night. This is one I covered yesterday. Felt pretty good about that because we had a strong open, but we have weakened. It's actually basically unchanged now. So BFD, I'm just fine. Made a profit. On STX, this one I had sold my put position, as I keep ad nauseum telling you folks. And it's okay because it's not down 200 or something. It actually has risen. And that's fine. So I don't feel too stupid. WDC, which is kind of a compatriot to that, I'm still short this, and it's still bearishly configured. Wow. Did he disrobe? It's really falling. Better him than yelling, right? Anyway, moving on. WDC looks really good. And yeah, off we go on that one. And SanDisk, goodness gracious me. Give me a time machine. Let me go back here and just buy a bunch of puts on this. I've mentioned it before. I know it's not sophisticated, and I realize that the nominal price of the underlying instrument is definitely built into the options price, but still, I like a big, juicy price. I don't want to buy puts on like a $5 instrument. This was thousands of dollars, and so it can fall quadruple digits too. And it'd be an interesting exercise to see what the $2,000 puts purchased on this day are doing right now. I have not enjoyed the fruits of this fall much. Somebody has. It's a gorgeous top, and I think that even though this has lost hundreds of billions of dollars in value, and it's lost about 60% in just a few weeks' time, we still have a barrier here. That I think that will be a barrier to further price ascent. And the bulls want to be bailed out, but not yet, fellas. Still short a bunch of stuff, as I said. At my wackiest, I had 43. What do I have now? 34, I think. Made an anagram out of it. So I think I've got 34 different positions, 8 of which are options, and the rest are just individual shorts. And so AMD is one. I've tried to highlight here what I perceive as the topping patterns. And how I spend most of my time in times like this is just I update the stop losses, tidy things up, housekeeping, that kind of thing. AXTI, look at this. I mean, that is a triple diamond ski slope. That is bring tears to my eyes. Do you see something that beautiful, just falling day after day and week after week and month after month? It is lovely. Then we have Micron MU. Wow, look at that. Cut below that. Now I'm mad at myself because I actually covered half this earlier today, and it looks better than ever. So those of you who didn't cover, good for you, because this looks terrific. That is a honey of a pattern. VSH, Vishay Interactive. Again, hour after hour, day after day, week after week, month after month, it's just disintegrating and lurching lower, even with the soothing words of Mr. Warsh. It ain't working. Here we have AAOI falling again, almost 11% today. Beautiful stuff. The whole AI hyperscaler thing continues to unwind, and I have contended and continue to say that the final demolition of this, which will take years, it's going to dwarf the housing crisis. Absolutely dwarf it. It ain't gonna be nothing. So we're just seeing this is chapter 1 of a 100-chapter book. ARM Holdings, which I don't know if they came up with earnings last night or it's going to be tonight. It's somewhere around now, but who cares? It's a chart. It's going down. CRDO has been another nice one. Credo. And there, a lot of this is repetitious. You see this a lot every day because these are high quality charts, and they don't cease to be high quality. They keep going down. Lumentum. These are old friends. LITE down again almost 6%. ONDS. On this Inc. Here's a household word for you. This is down over 10% also. So you get the idea. And going back to the hyperscaling thing, there are it could be semiconductors, memory, it could be financiers, any of the infrastructure. A couple of the big ones here, which are strictly AI and strictly hyperscaling, are finally feeling the heat. Here we have Nebius, NBIS, down today, over 10%. Falling beneath that pattern. Then we have CoreWeave. You've heard this name dozens of times on this segment. This is also falling over 7%. So people are starting to freak out. All the circular financing, this house of cards that NVIDIA principally has been the architect of. How NVIDIA is still holding its price up is beyond me. But yeah, things are unraveling. Here's another good one, Caterpillar. I could put on this bad boy. We're down over $50 on this. These are January puts. I'm hanging on to them, looking for much lower prices ahead. Another one, kind of dull, like Caterpillar, but going the right way. General Electric Aerospace, GE. And we had a rally on this the past few days. It stopped yesterday, and we're falling today almost 3%. So we do have a huge earnings announcement after the close. Cross everything you get two of. One of them is Microsoft, which is, of course, deeply in the AI space. Microsoft has been falling for many, many months. I have no position. I don't tend to trade it. It could absolutely go up because the poor thing's been beaten down to a fine batter. So no real opinion there. Meta, I do have a simple short position, not puts or anything like that. If we do rally, I would say that this is a pretty important level of resistance. If we take a tumble, great. This chart is just a dog's breakfast of price bars here. It's quite indiscernible what's going on, but really for subjective reasons, I'm short this. Not a huge position, like I said, but I'd love to see it go down just because. We're going to close with the NQ. Mission accomplished. We are below support, and we have 1, 2, 3, 4, 5, 6, 7. Yes, I can count 6. We have 6 red bars in a row. Isn't that nice to say? And we're below support. We cracked it Monday. We stayed below it yesterday, and we've stayed below it all day today. So I really like what I see here. Next is the ES. That's the next one to crack. So anyway, good luck, everybody. It's going to be a big afternoon. Tomorrow afternoon will be the final big ones. And by the way, new Mag 7 video out there. Tasty, we just rolled that out. I did that over the weekend. Please check that out. Mag 7 video for you to watch. And I will leave you now and see you tomorrow. Thanks for coming by. Good night.
What is theta? Options lose part of their value over time as they get closer to expiration. That's why they're called wasting assets. Theta is how fast the option's value changes in a day, not taking any other factors into account. Way far out, an option's price doesn't change as much as time passes. But at about 60 days till expiration, the time part of the option's price starts falling, and at around 45 days to expirations, it starts dropping much faster. If you bought an option, you'll feel time decay pushing down on that option's price. If you sold the option, though, time is on your side, and keeping the credit from the opening trade becomes more likely. Even though options lose their value over time, Tasty mechanics say to exit the trade near 21 days till expiration. Remember, gamma risk gets stronger in the last several days, and stock movements will have more of an effect on options prices. Again, theta is just the rate at which options lose part of their value. Pretty simple.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
TP, we're back. It's time for the final 30 minutes of this trading day, a trading day that's been topsy-turvy to say the least. This is Last Call. You're watching Tasty Live. He's Tom Preston. I'm Chris Vecchio. TP, big reversal here around this Fed decision. Market pricing for the next meeting dropping from 95% chance of a hike to just 55%. Not good enough for stocks here. S&P was 74.75 at the highs today. Now 90 points lower. 73.
Even around like a bad stomach, Chris. And what I did in the SPX specifically, I did a lot of short call spreads in a lot of the earnings stocks. I'm just leaning on this earnings bearish. But the SPX, I bought, or I don't know how you want to say it, bought the 73.70, 73.85, 73.95 broken wing butterfly. Right now it's 73.52. That blew right through my strike. So I'm at about a $450 loss on that right now. Not catastrophic. I can handle it, but it was looking good. I was thinking maybe, Chris, I could end the day actually making money on a butterfly trade where it sits in the middle of the strikes and I make more than $15 on it or something like that. But right now it is blowing through again. I tried this last Friday. Same thing happened. Just blew through my strikes. And again, we could see another 20-point rally off this bottom here, no question, in the next half hour. It is extremely volatile. I was wrong about the Fed. I was thinking they were going to cut. They were going to increase rates. There was about a 36% chance of it happening. Didn't happen. That just shows me for betting against the market. But yeah, this is a pretty solid sell-off after it.
Yeah, it does feel like a solid sell-off. It feels like, one of the things that I did yesterday to get ahead of this potentially, and it's a position that I'm going to have to monitor here closely, was put on the put butterfly in the NASDAQ at the expected move for the day, which was about 27,550. TP, we're maybe moving into the zone where I could take this off at a little bit of a profit here. It's quite the stick, only 25 points wide in those wings, so it was really pinning the tail on the donkey here.
First, that's the NQ. You did them in the futures.
I did do them in the futures here.
Yeah, it's butterflies are like lottery. I don't want to say lottery. They're like roulette wheels, and I've explained a bunch of times. There's going to be a winning butterfly at expiration, wherever the future is at in your case, or the index is at in my case. Wherever that index settles is going to be the winning butterfly, whose value is maximized, because butterflies make most of their value when the underlying is at the center strike. Okay, we get that. More volatile it is, the tougher it's going to be to see which the winning butterfly is. So towards the close here, we both could see some pretty big swings in our P&L with these little flies.
Both of us are kind of in that position right now, so I'm going to be watching that like a hawk here on today's Last Call. TP, Dow's down 2% right now. Pretty big sell-off here in the Grandpa Index, as I like to call it. It's a race to basically past 3 days of gains right now. Curious, the Fed just told us that they're not keen on hiking anytime soon. Stocks are down, which means inflation's running. And then long end yields here, not for nothing. I know that we're looking at 2-year yields that have gone down today. ZT's actually rallied since the Fed meeting, but that curve is steepening. The 210 spread is up 9.7 basis points right now, which is the largest single day gain that we've seen thus far this year. And it's back to the highest it's been, or the widest it's been, since the first week of June. I see ZB breaking it down again here, TP.
30 years are getting crushed. Absolutely crushed. They were down when I was looking at this stuff around 130 or so. Bonds were down about 20 ticks. Okay, not bad. Now they're down, another 12, about another 20 ticks off of that. So this is a pretty sharp sell-off in the ZB. ZNs really haven't. They were down about 7.5 ticks earlier. They're down another half a tick right now. So it's not, we're not seeing the massive sell-off in the 10 years. It's the 30 years that are getting smoked.
Which is really interesting. Although 10s have come off their highs around the Fed. There was 108, 26.5 ticks. And so now we're about halfway there, we'll call it, right? So something to keep in mind right now. But your NASDAQ, hey, price is right here. Man, this would be like if the market just wants to stay here now for the rest of this next 21 minutes.
Chris, let's keep our fingers crossed because it's like, who knows, right?
Oh, no, of course. The probability of profit, I think yesterday was like 4%. So it would just be luck more than skill.
There's no skill in this. The skill is the strategy. Okay, you'll take a shot on a butterfly, low risk, high potential reward. But as far as where it settles in, so here's what I did today. I sold. Let me go to my activity. I'm working. I did a trade last week. I bought the August September 670 QQQ put calendar spread. I paid, what did I pay for? About $6 for that, I think. I'm trying to sell it out at $9. It's right there. If Qs stick around here at this price, I might be able to get it. If I can make on a calendar spread about 30%, in other words, if I can sell it for 30% higher than what I bought it for, that's a win. These aren't hugely profitable trades, but if I can make some money on this calendar spread, I'll take it. Like I said, if I bought it for, and I don't want to hold the show up with me digging through the positions, I paid $7 for it. I paid $6.95 for it. Let's say $7. If I can make $2 on that trade, I'll take it. That to me is a good trade. The other things I've done today are I sold a put spread in Procter & Gamble, hoping they reported earnings earlier or before the open. Rallied up on the news. I've just sold a put spread. We'll see how that goes. It's the 143, 141 put spread. I sold a call spread in SMH. Chris, I know you love SMH. And
do I.
As much as I hate to disagree with you, I just think they're going to weigh on this crap going into these earnings. So I sold a 552 half 555 call spread for 90 cents. This is all short-term stuff, 2 days. Microsoft sold a call spread in Microsoft.
Well, let's get in fact, because I want to go to Microsoft and Meta here. You mentioned SMH, but Microsoft and Meta are the ones that I think
they're the big ones.
We got a few minutes here, so if any options trades still want to go through, you might be able to get filled with them. You said, let's start with Microsoft. So I have that loaded up on the screen now. What were you doing here today?
I sold the 412 half, 417 half call spread. So I'm short. Yeah, let me see where I'm at right now. If I go into, and I'm juggling a couple things here. So that's what, Microsoft? Yeah. So I'm about, right now, about $19 away. Microsoft is coming off a little bit. I'm up a little bit of money on that trade. So Microsoft, there's no thought other than I needed some short deltas in my portfolio. And Microsoft seemed like a decent candidate, has been relatively strong compared to the S&Ps recently. It's been, kind of noodling around there. Hasn't sold off with the rest of the market over the past week or so. So why not try a short call spread in Microsoft? I don't know what those numbers look like to you, Chris, but I sold it for $1.62.
I see $1.33 here, so I'm assuming that you're going to operate by the usual principle. If you sold it for $1.62, when it gets down to maybe 81 cents or so, you'll look to offload it.
If I'm lucky. Yeah, if I'm lucky. If it sells off tonight and it opens up at around, like you said, if I can buy it back for 80 cents, I'll take it off because I don't know anything about Microsoft, Chris. It's just a trade. It's a defined risk trade. If it rallies up, 30%, if Microsoft takes off tomorrow, okay, I'll take a loss. But for now, and the same thing I did with Meta. Meta, I sold the 620, 625 call spread, again for $1.62. And it's not, it's approximately it's roughly the credit that I'm looking to get for these types of trades. I'm up a little bit of money on it with Meta down right now about 770 or so. Like I said, like you pointed out, if I can take these off for about an $80 profit, I will. Won't even think twice about doing it. It's not like, oh, Meta's down, Microsoft is down, it's going to keep going down. I have no idea. I'll just take my profits, move on to the next trade. And if it rallies up, it's a defined risk trade. That's it. I have defined risk.
TP, just running through the process here for folks who are thinking about the earnings at home, right? It's usually right to the expected move. We go to 2 days to expiration for Meta. What does a short iron condor look like right now? As you could believe, given the fact that it's an 82 IVR with a raw volatility close to 140%, just at that expected move, you are getting compensated. $2.23 of credit for a $5 wide strike.
Yeah.
So if Meta stays above 540, stays below 630, you could walk away with a potential winner here. And same thing for Microsoft, by the way. The pricing, when you look at the 2 days to expiration, maybe go a little bit further out, 415, 420 than the strikes that you had picked. And then to the downside, we'll call it 370, 365, maybe even a little bit wider for safety assurance. And you're still a $5 wide strike, getting well north of $1.67 in credit here, 215 comparatively speaking.
Yeah.
If playing for inside the move is your forte, you are getting compensated for it. But TP, here's my problem with this. When was the last time you saw one of these tech companies have an inside move during this earnings season?
Nothing. And Chris, I wanted to bring up a point that I read about that over this past cycle, over the past week, about 68% of companies reporting beat earnings by greater than 1%, or one standard deviation. So they're performing, and only about 8% underperformed by that magnitude. The problem is the market hasn't rewarded it. Companies have beaten earnings and their stocks have gone down. And that's what's surprising. And you know what, Chris? It's not that surprising. It's not that surprising. I've seen this happen time and time again. Numbers are solid, but the market sees something else. There's some other pressure on the company. Fine. And the stock goes down. So I'm betting that's going to continue again through this evening, that no matter what numbers come out for Meta or Microsoft or whatever, and I did the same thing in Starbucks. Sold the call spread in Starbucks. Just because, and I personally don't like Starbucks. Okay, whatever. I mean, I don't shop there. I don't buy their products. But it's the same thing. It's even if they come out with solid numbers, I'm going to bet the market's going to punish them. That's it.
Solid numbers, market gets punished. A TP here. Sell-off continues, 73.65 in ES. It's almost like the market wanted a rate hike.
Yeah, and and with the sell-off in the bonds are now down. Bonds are sitting where they are. They really haven't changed. The issue with I think what it is they're packing in. Everybody's packing in more rate hikes this fall. That's it. It's got to happen eventually. But I shouldn't say it's got to happen. Interestingly, though, a lot of bank stocks are off. JP Morgan, Bank of America, Citigroup, Wells Fargo, Goldman Sachs down. Those are all, XLF, like you're looking at now, is a good proxy for all of them. The question for me is, why are they down so much? It has to be, I guess, fear of people not paying back their loans. If the economy's not doing so well, if the economy's going to get worse with the higher potential rates.
I mean, both ends, right? Higher potential. If you're going to have higher rates across the board because the Fed's going to, then the market's going to push rates there. Let me take a step back. Just because we see our treasury yield in the market, TP, this, doesn't mean that's the rate that you're going to get when you go to the bank. If I see a 10-year treasury yield, if I go to the bank for a 10-year loan, it might be something completely different.
Right.
And there's prepayment risk. There's a whole bunch of other risks that we don't need to go into. But for the point of this conversation, there's a spread. I mentioned this on air a few weeks ago. If you went over to the research that Housing Wire puts together, one of these housing research groups, you would see that if you had applied the current spreads, or rather the current 30-year yields and transpose them to the spreads that we had back in 2002 and 2022 and 23, the mortgage rates would be north of 8% by now, right?
Yeah.
And so the market here telling you today, like, we are going to be getting higher interest rates. So you're going to have higher inflation for longer, which reduces, spending power. Interest rate hikes are going to be necessary. So loan default rates probably are up, and people are going to take out fewer loans. I mean, I can tell you why the banks are down on that. Even if the yield curve is steepening.
There you go.
But you look at it's the rate sensitive stuff. TP home builders, worst performing sector ETF today, down 4.4%.
Yeah, it's and I misspoke to a certain degree. So one of the things, the banks like short-term rates high. And if the Fed doesn't increase rates, okay, short-term rates are relatively low still. Banks like to earn short-term interest on their cash investments, cash holdings. So I can, to that point, yeah, I'll say so just because long-term rates are high doesn't necessarily mean banks are going to rally. So I want to clarify that, and that just emphasizes your point, Chris. But
a steepening yield curve should help them in theory, because they pay out their depositors, right? And they loan out at longer term rates, and they capture the spread between the two. That's your net interest. And yet, not today.
No. Hey, one of the other stocks, is it Carvana? That's what's Carvana? CVA?
Got a little 50 cent CVNA 50 cent
CVNA. Let's see, they have earnings coming out, right? Yes,
they do
today. So Carvana.
There's a few more here that we should probably go through. ARM, LRCX.
I'm going to sell a call spread. While we're at it, let's sell the 70.72 call spread in Carvana.
70.72, $2 wide.
61 cents. Bang. Fill. Take a fill. I'm betting against used cars. Nothing against used cars, but if people, as you say, Chris, if housing sector is going to be bad, the first thing, people are going to pay off their home first, their mortgage first before a car, and I just think there's enough of this, this off. What do they call this? What happened to that Blue L? What do they call that stuff? The Chris, help me.
Private equity, private credit.
For the private credit nightmare. That's going to hit stocks like Carvana the worst. I'm bearish on Carvana, so I sold a 2-day call spread in Carvana. What else do we have, Chris? What else is on the dock?
Let's go over to ARM here, which again down another 9% today. Incredible to think that the shares actually have now been cut in half from the highs that we had just at the end of June. 452.70 here. TP, I mean, is there a price that you like this stock at where you'd start thinking about selling downside, puts and trying to?
About it. ARM, hey, so Chris, ARM is chips, ARM is semiconductors.
Jensen Huang's cousin's the CEO, guy who runs NVIDIA.
Oh, the family, it's the Lucky Sperm Club.
You want to call it that?
Lucky Sperm, that's what I'm calling it. Let's sell no, there's no price. I don't know, Chris. It's a freaking stock. It's down. I'm bearish. Let's check the skew. All right, let's check the skew. You're saying, Tom, what's the skew? It's stocks at 223.71, right in between 222.5, 225. Close enough for government work. Down $5. The 17.5 puts are trading at, I just look at the ask price, 10.85. I go up 5 points from 225 up to 230, 1090. That's a very even skew, very balanced. I'm going to sell the 240. What's the expected move? $25.
It's about
$25 is that's going to put it up to about what, 245. Fine.
245.
Let's go out to the 247 half, 250 half for 87 cents. Bang. Let's 87. Fire away. Filled at 87 cents. Bearish trade.
ARM. One of the few names here today that is in deep red. Just kidding. There's a lot of names that are in the deep red right now. NASDAQ down 1.8%. Well, it's actually the inverse. So yesterday I'd run this. I have a screener up here. Companies with market caps of $200 billion or more. I'm pretty sure when last time I ran the screen, it was like 74 names. 75. Yeah. Today it's only 69 names. So some market cap indeed being shed. How many names are positive in that group? Only 17 here. And it's not it's an interesting group. I mean, perhaps the most interesting name here, Google. This is one of the few names that's still positive on the day, up by 0.8% right now, holding its own. TP.
Google. I'm actually short a put spread in Google. So one of my bullish trades, the 25 along the 325, 330 put spread in.
You and me both. Hey.
I think I copied you last week because I had this trade on for about a week and a half. I'm up a little bit of money on it. Okay, fine. Let's check the SPX. How's my SPX looking?
Not great, Bob.
Dead.
Not great.
It's dead. And the VIX itself, the VIX is up nice. Broke over $20. Hallelujah, VIX. And so I'm long some call spreads in the VIX. That helps me out. And because I just have a bullish bias on the VIX, kind of a structural bullish trade in the VIX. Right now, let's check the skew, or let's check the basis. So if I go in to the, let's do the 20 strike, because I know they have those strikes. I'm going to enter, and I'm not going to route this. I enter in order to sell the 20 put in August and buy the 20 put in August. And then I go out to September and I buy the 20 call and I sell the 20 put. So I'm doing synthetic futures in the 2 months, and I see that as a 24-cent debit. That's cheap. It's not in backwardation yet. It's still mildly contango-ish, with the back month trading at 25 cents over, with SEP trading 25 cents over August. But that's not a lot, Chris. That's well below average and means that basically they're coming for, and it's not a surprise, they're jacking up the August futures, they're jacking up the August VIX more and faster than the September.
Right, and that flattening volatility curve, right, not usually something that portends good things for the equity market. Equity market's most comfortable when it's in a healthy contango. Also, bottoms are found when the market's flat or inverted in the yield curve, or rather in the volatility curve. So listen, it's a process, but getting through 20 here is probably a big deal. As we get into these final 4 minutes or so of trading, the NASDAQ is down nearly 2% right at the session lows. The S&P 500 is down 1.5%.
How's your butterfly? Chris, check the butterfly. How's your
butter? I'm watching it here. We overshot a little
butterfly.
We overshot.
We need a winner.
We could just, we could take it off.
The home team needs a winner.
Lord knows we does.
You're right there. You're right. Well, where is it? 73, 27, 389. All right, you're down. All right, it went through. Okay.
It went through. But it was like, I think, $20 a risk. So, hey, right idea. Wrong execution. So did the market freak out after the Fed? Yes. Is it freaking out going to earnings? Yes.
I mean, you still have 5 minutes, and it's the way this stuff is moving around. I wouldn't be surprised. However, I'm going to look at the dollar also.
Not a good session.
No. I'm short a call spread in the Canadian dollar. That's hurt me a little bit today. Short put spreads in the yen. But I think I might look to sell some call spread in 6E, short the euro. I saw that spiking up a little bit today. And maybe in 6B too, sell the British pound.
British pound here. It is up 4.5%. I still have a short position here as well. Short strike is 134, so that's fine. 6E, similar situation, at least in the 37 days to expiration, 115.5. 6C, 71.5, and we're getting close. We're not there just yet. But this is, the ZT. ZT. I mean, this is the fascinating part of today's move.
The 2 year
yields. 2 year yields are down. And long and yields are up. And what's FX most sensitive to? Short end of the yield curve. There's a lot of research on this. Two spreads. So, you can look at the yield curve and go, well, I thought the yield curve's steepening. How come the dollar's not up? Well, the market's telling us that we're getting fewer Fed hikes over the next few months than anticipated. And as a result, we're getting more inflation. So enjoy it. Enjoy your currency. That's going to be worth a little bit less. That's the market read here, TP. That's not me saying it. So going into these earnings, right, after hours, how are you managing your risk if you're thinking about a market that's going into these earnings reports face down?
Just define, that's it, Chris.
Define everything.
Short call spreads, short put spreads, that's it. I'm not trading futures. I'm not, I'm bearish. I'm going to sell some futures here. I mean, I could, but I don't. I don't do that. And it's
You're like that lady in the IBKR commercial at dinner. Sorry, I have to put some hedging trades on.
Right. And hedging to me, Chris, hedging to me is a 4-letter word. I don't like hedging. Look, I just need something that makes money going forward. Right? So I don't care if it's a hedge, selling calls or buying puts on a stock I own. I don't care where the money comes from. My bank account does not care. So I just need something. If I'm losing on my Canadian dollar, for example, but I'm making on my yen, I don't see it as a hedge. I don't think pairs trade. It's just winners versus losers. And yeah, am I losing money on my SPX? Yes. Hopefully that will also translate into lower, making money in Starbucks, making money in Meta, making money on Microsoft, making money on SMH, making money on ARM, Chris, making money on Carvana. I don't care where the green comes from as long as it's green.
Well, there's a lot of red here, TP. S&P below the lows that we had at the end of June there. Not so nice, below that 73.60 zone or so. NASDAQ still down 2%. No lows nearby in sight over the past month. And your Dow Jones settles down 2.2%. Hey, I should have taken out that 350 butterfly here, TP. Although I suppose I got a few... It's the futures. I got a few more minutes here on the bell. Maybe Meta and Microsoft want to save me.
Tomorrow. There's always tomorrow.
Always tomorrow. There's always tomorrow. TP, always a pleasure. Folks, we're taking a quick break here. We have Meta, Microsoft, ARM, LRCX, Starbucks, earnings out the wazoo coming up right after a brief break here on Tasty Live. See you on the other side.
Mike, what does it mean to be assigned?
When you are assigned, you are ultimately short an option that's in the money, and the counterparty has the ability to exercise that option. So if you are assigned, it means your option, against your will, ultimately, has turned into 100 shares of long or short stock.
What does a green scratch mean?
Ooh, a green scratch refers to stubbornness getting the best of you. And when I say you, I mean me. Green scratch refers to rolling a position, defending a position, and instead of just closing it for less than loss that you're seeing, or maybe a $100 loss, $50 loss, a green scratch is when you close it for maybe a 5-cent winner, 10-cent winner, 15-cent winner. Just the ability to see that green number on your screen and get out in a profitable way as opposed to a loss.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Microsoft earnings are out, Meta earnings are out, and you're getting a NASDAQ that's still going lower here in the after hours. Gus, you and I are here on overtime to take us through the next 28 minutes as we wind down this trading day. A very busy trading day here as the market displeased, to say the least, with what Fed Chair Warsh had to say about the path forward on rates. No hike today, maybe no hike in September, and the long end of the yield curve is starting to move out in a, well, interesting fashion. But let's get to those earnings here right now. Microsoft, first up on the screen. We start with the good because we need to go for the silver linings in a bad day today. Meta is a cloud if there ever was one. $4.81 versus $4.24 expected on your EPS. Just a little bit over 90.007 billion here in revs versus 87.63. EPS up, revenues up, 32% and 18% year over year. We're going to look for some of that commentary here from our Microsoft shortly, but the bigger name, the one that's probably catching people's attention, is the one that's down another $40 here after hours, which amounts to, we're getting pretty close to about a 7% sell-off right now. Meta saw 3Q revenue 61 to 64 billion, which is estimated below the range of 63.17, starting to show up some of their overextension and capex in the numbers. But the big one here, right? We're looking ahead. Meta, 618 in EPS, Gus, versus 722 expected. That's a 14% miss. Down 13% year over year. Down 41% quarter over quarter for those keeping score at home. Revenues are up, but more capex. More capex, more capex, more capex. We want proof of work right now, Mr. Downing, not proof of more work needed before we get another dollar in our pocket. Haven't these folks learned a lesson? But hey, Meta, Zuckerberg's been on Twitter, Jensen's been on Twitter. Those are probably signs that we were discussing yesterday.
Hey, scared money
great.
Don't make money, right? That's what they tell me. That's what they tell me.
We're gonna buy that Irish ETP in a little bit. We have that for the second of the show.
Yeah, I had to let these go off first, drag that down to maybe 97% down from the current 96 number. I'm long both of these companies, not for this binary event specifically, just in longer term positions that I have into the rest of the year. So getting big mixed feelings. If I could have chosen to put one up and one down, I would have chosen to do this the other way. I could use Meta a little bit more than I could use Microsoft. Sort of a mixed bag coming through here, but not surprised to see one of them sinking, and I suppose I'm not surprised to hear or see that it's Meta. Meta obviously being very aggressive with their spending, and I saw they just signed a $14 billion deal with BlackRock to build a new data center in El Paso. So they're spending left and right, and that S word, it's not a good one anymore. Like I said yesterday, 3 months ago it was cool to spend $14 billion on a new data center, but that's so early 2026. Times have changed. Now we don't like the spending anymore.
No, Qualcomm, same boat, 221 expected versus 222, so not as big of a miss as Meta, but EPS down 20% year over year. Revs are down 4% year over year. Those are both heading in the wrong way, and we've seen how companies who are going in the right way were punished for it. What other earnings do we have out right now? ARM, that's also out, and a little bit of a beat there here, but is it enough to save the stock? At least keep it unchanged from where it was prior to the close. 45 cents versus 40 expected. $1.289 billion versus $1.27 billion expected on the revs. EPS up 29% year over year. Revs up 22% year over year. A little bit of stability in the market, we'll say 27,350. There's still a little bit of time to go. So, Gus, maybe, just maybe, that very narrow put butterfly that was put on yesterday in the expectation that the market was going to go down around a Fed that's not going to take inflation seriously because of these silly task force who have now said we're not going to give you an answer until December, and earnings that show the hyperscalers are just bleeding money still. The market kind of did what it did today. I did not get the numbers right in terms of the butterfly, but I can't say I'm shocked by this move. I'm watching this today and I feel like I'm less surprised by what I'm watching than I usually am when the market's down 2%.
Yeah, I'm inclined to agree. I mean, it's just, I don't know. This is just sort of become the precedent to me. I joke a lot on the show with Errol, but these vehicles, these long-term vehicles are supposed to do 10, 12, 15% a year, and we have become so just desensitized to 2 and 3% days in both directions, and that's not what's supposed to happen, but it's what we continue to see playing out in all of the broader market. In the futures, in the SPX, in the Qs, you pick your product. It's 2 and 3% swings every single day. So yeah, definitely some somewhat scary continuation happening here.
Just the market didn't like Warsh's message ultimately. before even the hyperscaler earnings came out, and just keeping an eye on the prize here, Microsoft and Meta, which are the two. Microsoft is still moving up 404. Meta is such a big part of this. It's off the lows at 557 here right now. 587 was your close, so still a pretty unhealthy move to the downside right now. I'm more interested in what's happening at the long end of the curve, as it were. Unfortunately, the position I wanted to get in yesterday in both ZBZN could not be filled. The price was not right, as Bob Barker would say, because the expectation was, after seeing a little bit of a give back in oil here, took off the put spread on July 27th with a chance to re-enter. We had the downtrend. We had our 1 month moving average. Didn't get filled. Right now, 109 and 7 ticks. So that 110, 109 put spread would have worked like a charm. Hopefully others were able to get filled on that or something similar. But it's a fascinating read-through where the market basically says, okay, what's embedded at the long end of the curve, Gus? Growth expectations, inflation expectations. And so the Fed is going to stay looser for longer. And hike odds for September go from 100% of a 25 basis point hike plus a 5% chance of 50 to just a 55% chance of 1. Inflation expectations are just going through the roof right now. The market measures of inflation expectations for the 1 years are going through the roof right now.
Yeah, I'm long some TLT myself right now. Have been for about a week now. I had 5 of this position. I decided spur of the moment at the Cboe today to go ahead and liquidate 3. I was thinking that I was in sort of a losing position. I have 16 days left, but I was thinking maybe we could catch a Fed Hail Mary that could save me. But I see wisely decided to more than halve that position, take off some of that risk, and I'm pleased with that at this time. We'll probably just. Well, I don't know. I'll see what the first tick looks like tomorrow, and then make a decision. But probably looking to rotate out of the rest of those tomorrow before Theta can do too much damage.
If there was ever a place to try to catch it, the risk to reward near the actual yearly low may not be a bad place. The question is TLT. TLT's duration is like 15 years, so it's not quite ZB. They say okay. Yes, 1.8%, 73.30 here still. Gus. This is just, I'm looking for something where the market might try to catch itself, and there's just seemingly no level here.
Yeah, this is a situation where this is an anti 24-hour trade, 24-hour market situation where we're seeing right here. There's been lots of discussion recently about making everything at least 24/5, if not 24/7. This is where our close is going to help us breathe a little bit, I think, and too much from coming through. Obviously, futures are a 24/5 product as it is.
Yeah, that's one of the reasons why I like them. I mean, I got pushed into trading futures because of PDT all those years ago. PDT ended last month.
Errol has the same story, and no one ever told me I could trade futures. That was the issue. I didn't get involved with the Tasty Network soon enough to learn that I was allowed to do this. I just made cash account after cash account every time I got 3 PDT strikes.
That's funny. Yeah, no. So futures here do have that liquidity. Continuing to sink here in the after hours. Meta misses on, hey, Matt, do we have those ready? Matt, Luis, Gabby, producers. We have some earnings cards here. We're going to get those up. Just want to review that real quick right now for the audience. Okay, we'll have those up in a minute. Perfect. So we'll get back to that in a second here. Going through more of these earnings that have come out, because there have been so many here today, and the market just, I want to say it's hating them, but it's strongly disliking them. Let's see. Starbucks, something that we had from our friend TP here. It is a modest beat, 85 cents versus 65 cents expected. Revenues were higher, 9.32 billion versus 9.12 billion. EPS up 70% over the past year. That's nice. Fontanet, that was also out here today. FTNT, another beat. This one seems to be working, or I should say Fortinet. EPS up 41% year over year because it's at 90 cents now from 75. Revs were a little bit firmer, just north of 2.04 billion versus 1.89 billion expected there. Continuing to run through it, even Carvana is having a beat, and TP, he may have put me into something here that we're going to have to contend with right now, because the way that we're looking at this is actually something that's going to work out just fine. We got into a short call spread earlier. So yeah, beat 42 cents versus 37 cents expected, Gus. We put on the 72.70 short call spread here going into the actual earnings. And ultimately, it's now down to $57.75 after a 66.33 close. I bring all this up because one of the more fascinating pieces of research I've read here in the past week, Gus, it was a study of academics and market participants versus households about price dissemination vis-a-vis companies' balance sheets and earnings. And the academics and the traders said the earnings reports bear no information that is useful to predict future prices in the market. Whereas the household said the earnings reports are extremely useful for predicting future information in the market. So for the folks that are, I guess, newer traders and listening in and tuning in and haven't been through many earnings cycles, you may be asking yourself, how come so many of these companies beat on their earnings and are going down? Because the earnings themselves are an artifact of a story that's already been told, and the market wants to know what's going to come next, right? What have you done for me lately? More importantly, what are you going to do for me next, Gus? So it's something to keep in mind. Carvana is a perfect example of that. Beats on the EPS, still down here after hours.
Yeah, that's a sentiment that I echo all the time. It's to be right about earnings is not just being right about EPS and revenue. It is a 5-team parlay of things that must go correctly for it to work out perfectly in your favor.
Well said.
You need you need forward guidance to be perfect. Things like free cash flow, cash on hand. We're seeing strain on some of those in the hyperscalers right now, which is why we're seeing this sell-off. There's a lot of things to string together, and you should be confident in all of your convictions if you're going to get involved with a earnings play. I'm happy to see that move out of Starbucks there. I am long Starbucks in every way possible. Tasty account, personal account. I got shares, I got options, I got leaps. It's across the board. I love Starbucks. To me, this is one of the, if I want to get into my Warren Buffett value investing, trading shares sort of bag, this was one of the easier trades to me over the past couple of years. When the second that Brian Niccol left Chipotle and went to be the CEO at Starbucks, I was all over it. I loved everything that he said immediately. You saw Chipotle immediately start to run down. It has never reversed. So we took one piece away from Chipotle and everything fell apart. And now that piece is over here at Starbucks. I love the Back to Coffee initiative that they've been pushing. It makes me want to go back to Starbucks more myself. I'm all over this one as a growth vehicle.
Starbucks history is really interesting.
It is.
I came across, what was it, the Pablo Torre podcast, where he was talking about he hates Howard Schultz, and all these guys, Bill Simmons, they all hate Howard Schultz for moving the Supersonics out of Seattle. So I got to fault the episode for another next time we talk about Starbucks, but they had a pretty good anecdote about its corporate founding. Either way, though, you're right, 110. So good for you across multiple. I'm long Starbucks insofar as I buy a lot of it.
Sure.
And I keep it in my house in mass quantity, but unfortunately it's a depreciating asset because it usually gets drank.
You got to do $1 into the stock every time you buy a Starbucks product. That's how I justify my Zins, is that I buy $1 Philip Morris for every can of Zins that I buy. So there's something passive going on there.
Let's go back to those. Okay. All right. We have some earnings cards here. Let's start with Meta. We talk about we can go back to Meta. Go back to the earnings card. Come here. Yes. Thank you. $60.8 billion versus $60.24 billion. That's nice. The EPS, 6.18. How did they make more money? Because they're also spending more money. They're spending more money on these data centers. 714 last year. So that's down 13% year over year. Ad revenues, those are up a little bit, but it's kind of like what we've seen with even Google. It doesn't matter what their search business is making when they're spending so many dollars on everything else. Same thing for Tesla. You're investing all this money in your AI build out. Your EPS can look the wrong way for certain reasons. We also had Microsoft here. Matt, can we go to the Microsoft card there for those that missed it? These are the big two of today. It's Apple and Amazon tomorrow, Microsoft, Meta here today. Their EPS did beat, and Microsoft is still holding up a little bit better here after hours, closed at 392, closer to 400 right now. Meta is recovering off the lows, down only about 4% after hours, what was already a bad day for the stock. Revs up 18%. Yeah, Microsoft has a little bit of stability here, but I think we're looking what you said. There's a five-way parlay, Gus, keeping it into the risk management betting wheelhouse parlance. I like that. One of those is guidance. If Satya Nadella comes out in a little bit and says, yeah, actually, we're going to spend another $100 billion on building out data centers, right? The market's not going to look at these numbers and say, oh, yeah, they were impressive, they were good. You just told us that we need proof of more work in order to get the money that we invest in you back. No, thank you. Right? Your equity is going to be worth less moving forward. So for so many of these companies today, we have to focus on what they say with their guidance. Game's not over yet.
Yeah, and there are a lot, I mean, many such cases of what you just described, companies that are legitimately talking about spending more than their quarterly revenue on AI development. It's a tall ask. Obviously, revenue is not all profit, as anybody, I should hope anybody knows. If you don't, revenue and profit are different things. But yeah, we have just these, we're going to outpace our quarterly revenue numbers in spending. Where is all that money coming from, and how are we going to turn it into more money? Because in the meantime, it's not coming to me. That's for sure. So yeah, I can understand the hesitancy that we're seeing here, and the concerns about overexpansion or too much too soon. To kick it all the way back to Starbucks. I mean, Starbucks, their origin story at the very beginning there was kind of a classic case of overexpansion, too much too soon. They wanted to have one on every corner, and suddenly we're oversaturated, and we spent too much money, and we can't generate the revenue from these assets to bring it back. So I think we're seeing a lot of that, and it's one of the similarities that I constantly go back to with. I don't like to throw around the B word, but this is a lot like the dot-com bubble, what we're seeing right now with a lot of these AI and hyperscaler companies. It's spending for 25 years in the future without any clear idea of how you're going to be making money 5 years from now.
I saw the wackiest theory about Starbucks on Wall Street Bets. Was it Wall Street Bets? It was somewhere on Reddit. I don't know. Do you know what the symbol on the Starbucks cup is?
The like weird looking woman with the hand. I don't.
It's not a woman. And it's not a mermaid either. It's supposed to be a siren. Like from the Odyssey.
Sure.
Which is obviously in theaters right now.
I see.
And so someone was saying that, if SPCE can go up because SpaceX is going for an IPO, then why can't Starbucks with a siren on its logo go up when the Odyssey is in theaters? That is a far more defensible investment thesis than anything I've produced thus far this month. And it's certainly made a lot more money.
If we want to talk about highly defensible investment theses, I have one here. C3 AI currently has the ticker AI. And I am shocked if this does not move up on the day that OpenAI goes public. I would imagine that it would happen. If you want me to go one further, I wouldn't even mind taking a long-term lotto on C3 AI and purely banking on the fact that OpenAI or Anthropic buys this ticker from them. Because this is a company with like a $3-4 billion market cap. Anthropic could double that and not even think twice, not even blink. They would say, "What a steal! $4 billion for this ticker." And it's a pissing contest between these CEOs right now. The waters feel right for somebody to swoop in and do that. So there's my highly defensible thesis about how people could mistake tickers right there.
Yeah, that's better than the siren one. What is this $7.50? Only $272. You want to throw away $272 on that idea, Glenn? Gus. Both of the G's.
Yeah, I don't know if I'm that dedicated. Like
I am.
I mean, yeah, like
not on the follow account. I'll do that with my personal money, but that's interesting. Yeah.
Like what about this December 2027 expiration cycle? Like the 20s. I can get these 20s at $1.45. That feels pretty good to me.
So let's talk about volatility here as we have a little bit of time left right now. We finally crossed the big number, almost at the drinking age now, 20 and 66 here in VIX. Market's not acting drunk yet, certainly. I wouldn't call it that kind of behavior, because it seems very orderly still. We had a little bit more volume today in the S&P 500. Frank was throwing some volume figures at me a little while ago, but 1.92 million traded here. We tick up a little bit after hours with our S&P, with our NASDAQ, obviously, in the wake of the results from Microsoft and Meta right now. Frank says 130,000 bond options traded today, which for those keeping track at home is 8 times their daily average. So, volatility jumps about 250. Bond yields surge at the long end of the curve. Oil up around 7%. Huge 8x volume in ZB. Market did not like today at all. I really want to be an optimist. Rather be an optimist and wrong than a pessimist and right, as I like to say. But, the technicals here are just gross. I don't know how you I mean, from the way that I trade as a momentum person, momentum is squarely to the downside now. You can't be long in this tape.
Yeah, I mean,
I've
not
been able to be long for like 5 or 6 days.
Agree. Yeah, not justifiably. We are just. I mean, this is free fall territory that we're entering here. This is a really scary one to want to step in front of. Somebody has to sometime, or we'd be in free fall forever. But it's not going to be me. I'll let Jane Street decide when the time is to do that, and I'll follow them. But yeah, this is it's just getting to be an ugly environment after the results of today. I've heard a lot of people call this an ugly trading environment over the past couple of months, and I don't think that that's entirely true. I think that that's an oversimplification. There's been plenty of good opportunities if you know where to look. But all of a sudden, right now, I will happily start to throw around the ugly word as we get VIX starting to elevate. We see the vol futures starting to elevate, and this going to be aggressive downside in Nasdaq. My question, though, is how do Apple and Amazon open tomorrow, and does this present opportunity? If Apple opens, if Apple Amazon open down 3-4% tomorrow because everybody's scared here, is that an auto buy? It might be to me. Could their earnings be as bad as these, especially in the case of Apple, who's at all-time highs? Apple's just navigating this beautifully. They're laughing to the bank while these other tech companies try to figure out how to get people to buy their stock. So it's an interesting spot.
Apple, market safe haven again. I remember those days back in the 2010s when people would go, oh, yeah, well, the market's doing crummy, but how come Apple's holding up? Well, you got to buy something. And everyone loves Apple products, and they keep printing money. So it would go down, but not down as much as everything else. And then when the market ripped, it would rip extremely quickly to the upside here. It was only off 0.5%. After hours, basically unchanged, 338.24 right now. Gus, I want to make some position adjustments here because we were talking about this at the Futures Power Hour here. Russell 2000, below that 50-day, below 29.30, it doesn't look great. The continuous contract does a better way of perhaps exemplifying this. I'm going to go back to the start of 2026, for example. Bounce off the 50, bounce off the 50, bounce away from the 50, bounce away from the 50. It seems to respect the 50. Bounce off the 50, bounce off the 50, bounce off the 50. Now we're slipping below it. And you have the S&P with its bearish engulfing bar and the NASDAQ with this just absolute, kind of meltdown kind of candle. 2 ways to think about this. 23 days to expiration. I'm still above my short strike here, 28.75. I don't want to be in this anymore. Maybe I don't get filled here right now, but it's going to be a priority to get this off the books tomorrow, tonight even, as soon as the market opens, assuming I can get a good price. But what I'm worried about, and one of the reasons why I want to close this, is before we got into this whole market trading around the Fed thing, I was talking with Glenn on Futures Power Hour, and it's like, what if we just get down to the expected move over the next few days because the Fed is going to let inflation run and the hyperscaler earnings are bad, and so things just start to go down. 28.75, 28.80, 29, 28.90. The put butterfly down here, which maybe it works, maybe it doesn't, but it felt like it's prudent protection. And now that I'm seeing the market dip below its 50, I feel better about having that on than I do a short put spread right now because the backbone of the rally has been broken in half.
Yeah, that's a very fine point about the acknowledgement of the 50. It is pretty serious, and here we are again. I do like it. I mean, I agree with the adjustment. I think this, from a purely technical standpoint, you show this chart to a technical trader with no other basis whatsoever. They don't know what company it is. They are slamming the buy button. So I am aligned with you there.
Yeah, it's not great. It's really hard to find winners and losers today in this market. I was mentioning on last call when we go into the close, one of these little scans that I like to do every day is just in the mega cap names, $200 billion more of market cap, how many of them are trading up or down. The other day when we did this check, 74 names were considered mega cap. Now it's only 69 with today's close.
Nice.
So that has taken a haircut. Only 16 of those names finish in the green. SAP is your top performer in the group in today's session, up 3.85%. Toyota, if that's something that you like. Toyota, earnings overseas, nice gap higher. Shell, with the back of the move in oil. So then you have Exxon, Chevron, Netflix, Google. Google's the really interesting one amongst this group here, Gus. I'm curious on your take on this. It held up in today's tape. It was up nearly 1% despite the NASDAQ being down 2.5%. Can't think of a time it's had a spread that wide in a long time. Maybe its own earnings report maybe 2 cycles ago.
Yeah, Google, I don't know. This is an interesting spot. I will say, just as a blanket statement, even outside of the current market environment, Google is my least favorite of the Mag 7 to trade. I feel like I never have the right read here. Tesla can rival it in terms of difficulty to trade, but it moves with such velocity. And then, yeah, I mean, like today, I certainly would have been wrong if I tried to get involved with Google. But I think that they're in a very interesting spot. I will say, and they're catching up, but Google really fell short on the initial AI boom. There is no reason that Google let themselves be dethroned by ChatGPT in the way that they have. They should have been innovative enough to see this coming and should have been out ahead of the curve and rolling out things.
Don't you feel that way about Apple too with Siri?
Yes.
Like they had such a first mover advantage. It's almost like Skype. How did Zoom become the platform of choice during COVID?
I could do a 30-minute solo segment about how Siri is just devastatingly bad. I can't believe that we have never seen any improvements there. They're working on it now with Apple Intelligence, but yeah, again, I mean, as you said, just completely missed the boat. I mean, when you see generative AI coming, you know it's adapt or die. It's the way that they all act, but at the same time, you let yourself get years behind on rolling these things out. So yeah, I absolutely agree with you there. But as I said, they are catching up. They report Google searches as Gemini numbers now, I believe. So that's some creative reporting there that everybody using their AI overview is counted. So yeah, I don't know. It's an interesting spot. It feels like in my heart they're falling behind and are going to stay behind. But at the same time, they have so much going on. You got YouTube, you got Waymo, you got all these other revenue streams happening right now. Do any of those even remotely make up for the amount that you're spending on AI? Probably not. So it's just a really hard judgment call to make. And I'm more than content to stay hands off on Google and attack the other six.
Yeah, just keep one eye on this dividing line here for these companies. Microsoft's projected CapEx for their fiscal fourth quarter, which just ended, right? Q2 earnings, as the rest of us call it, was $42.05 billion. It actually came in at $41 billion. The shares being relatively rewarded after hours, they're not down.
About all you can ask for at this point.
Right, like
how
there's a
times
new
change.
theme here. Investors, it's proof of work on AI. Show us the money. And if you can't show us the money now, show some freaking fiscal discipline and stop pouring money into a hole where we don't know where it ends before you can start digging money back out of it. And Microsoft, they kind of did that here. Enough to stabilize the ship at least here after hours, because everything else, Meta's still not having a great session. Meta, again, misses on its earnings, misses on 548 right now. Gus, you and I are done here on overtime. Overtime's out of time for today. We could be looking at a really interesting futures market overnight, particularly the way that the Korean markets have been trading, feeding into a lot of the weakness that we've been seeing here in the mornings. So if you're trading NQ, if you're trading ES or even CL around some of the Iran war headlines, which we didn't even have a chance to discuss, then you might be wanting to trade in the market tonight. I know I will be. Gus, I'll catch you tomorrow morning alongside everyone else. Tasty Live programming comes back at 8:30 Eastern, 7:30 Central Time. Catch Jermal and Mike and the whole gang as we try to figure out what to do with Amazon and Apple, the next two big names up tomorrow. Have a good evening, everyone.
What's up, Tasty Nation? Welcome to the show. My name is Mike Butler. I'm here with Jermal Chandler, and it is a fantastic